continued to decline yet again. We're looking at metals trading in the red right now, and the only gainers in the screen is energy. Everything in crude, natural gas, gasoline is trading in the positive, and then it's the US dollar index. That seems to be getting in all the safe haven buying.
Okay. Manisha, thank you so much for giving us a roundup on what's happening in the world of commodities as well this morning. But on that note, we're going to step into a very short break. After that, we'll come back and tell you how these overnight cues are going to be impacting our Indian markets. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on. The U.S. Federal Reserve voted to hold the key interest rates unchanged as policymakers navigate their way through the higher-than-expected inflation readings, mixed signs on a labor market and war as well. CNBC's Steve Leeswood is here with more details on the Fed's decision.
In the first instance, the chair is not saying the Fed is going to do anything. I think that's really the case. But I think the gaming out is if push comes to shove down the road, if you have, say, an equal challenge on the inflation side and on the growth side, what does the Fed do? And I asked the chair about this issue of, are you concerned about the idea that you look through tariff inflation, you have inflation above target, and your credibility is in question about your commitment to the 2% target? Here's what he said.
It's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%.
So maybe that's suggesting a little reluctance to at least immediately address any challenge to the growth side of the equation because of the history of where the Fed is and the context with which it goes into this oil price shock. I don't know, John, if you want to talk about the other news that was there at this point in time, which is what the Fed chair said about staying on as a governor.
What was your take on that?
Well, let's hear what the chair had to say. I believe we have a piece of tape available to give people an idea of his response to the question that we have been asking for a while, but finally he decided to give us some news on this.
I have no intention of leaving the board until the investigation is well and truly over. with transparency and finality.
And I think the story here, John, is that if the Fed chair were to leave amid an investigation, it would really call into question the Fed's independence and the issue of could a criminal investigation actually, cause somebody to leave, even a spurious criminal investigation, as the judge has suggested this current one is.
Thanks so much for that. But let's also listen to the Fed Chair Jerome Powell on the rate cut trajectory.
The possibility, rather, that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case. And of course, we don't take things off the table. And the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected.
Now, how are all these overnight cues going to be impacting our Indian markets? We have our team of research here to set you up for trade, tell you which are the important stocks to watch out for in the trading session as well. First up, Ormas, what are the cues that we're keeping an eye out on apart from the Fed's decision? A lot happened as well. So what should we watch out for?
Good morning, Vinny. A lot indeed happened, and how quickly do things change? Coming on the back of a 3-day up move, and today the GIFT Nifty is indicating that almost 3/4 of that is going to be wiped out, most likely. With a 500-point downtick is what the GIFT Nifty is suggesting currently, still better than what the 600-point downtick that we were at the start of the initial ticks. The bigger challenge is the fact that oil prices are back higher. The Brent is now back at around 112, nearing 113. US crude is back at 100. So that's another challenge. The other challenge is the fact that the dollar index is back above 100 as well. We need to take all of that into account. And the other instance is the fact that despite us moving higher for the last 3 trading sessions, the volumes on the Nifty were declining every single day. Now, even then, which shows that there was a lack of conviction or the hesitation to participate in this up move. The other bit is the fact that the RSI on the Nifty is yet to cross 40 despite this 800-point up move that we have seen from Monday's low. It was in oversold levels. Yes, it has recovered from Friday's low of 24, but it is yet to cross the mark of 40. So that's the other bit. Now that we open gap down, the first level that comes into sight is 23,200, and then the 23,000 level, of course, the most important one to watch on the downside. For the Nifty Bank, the bigger trigger is going to be the reaction to HDFC Bank, both on the Nifty and the Nifty Bank. That's an added challenge to the index today, aside of all the global developments, because HDFC Bank is a significant weightage on both the Nifty and the Nifty Bank, and 54,000 now comes into play on the Nifty Bank. And then of course we go into Monday's lows, which were 53,258. Now further deterioration in oil sensitives today is also the Sensex weekly expiry as well. There's a lot to watch out for in today's session. Lower levels get tested, but again the question is, do we go back to Monday's low, or do we see some recovery once we open gap down today?
Thank you so much for that, Hormaz. But let's go across to Ria, who's here to tell us which are the key important stocks to watch out for in the trading session. Ria, good morning.
Well, good morning. Let's start off with HDFC Bank. First, the part-time chairman and independent director of the company, Atanu Chakrabarti, has resigned with immediate effect, citing happenings and practices over the last 2 years that were not in congruence with his personal values and ethics. In his place, Keki Mistry has been appointed as the interim chair for a period of 3 months. So watch out for any new developments on this front going ahead. Apart from this, 3 stocks will be in focus today on the back of acquisitions. The first one is Manappuram Finance. The RBI has granted all approvals for Bain Capital to acquire joint control of Manappuram Finance and its subsidiaries, and the company and Bain Capital will aim to complete the capital infusion of rupees 4,385 crores by the end of this fiscal year. Nazara Technologies is going to buy over 50% stake in Blue Tile as well as Best Play each for a total consideration of rupees 918 crores with the option to buy or sell the remaining 50% by 2028. Bellrise Industries is going to buy UK-based firm Chester Hall Precision Engineering, which operates in the component supplies space for aerospace, aviation as well as defense, and this is being done for a value of rupees 164 crores. Three stocks will be in focus on the back of order wins. The first one is Mazgaon Dock. They have signed a $39 million contract with SCI for 1 unit of the 3,000 deadweight tonnage platform supply vessel. GR Infra has been declared as the L1 bidder for the rupees 2,441 crore HAM project from NHAI, and Ahluwalia Contracts has backed an order worth roughly 393 crores from the Airport Authority of India to develop a greenfield airport in Kota, Rajasthan with an 18-month execution period.
Okay, thank you so much for that, Riya. But in the final update, let's go across to Mangalam, who's going to tell us the important cues for the FNO space that we're keeping an eye out on. Mangalam, good morning.
Good morning. Just as we had tried to come out of the panic lows of Monday, just 2.5 days of the Nifty saw a rally of almost 800 points from the lows. The Nifty bank was higher by over 2,000 points from the lows. Comes a fresh wave of uncertainty and a fresh wave of decline. And the GIFT Nifty, as a result of which, is indicating that we could start 500 points lower itself. The big triggers. Overnight, there was intensification of the war and Brent nears about $112 per barrel. HDFC Bank, the chairman has resigned and the ADR is down about 5 to 7%. So that would impact our markets further as well. The FIs had sold less yesterday and they had sold even lesser in the previous trading session. So we had net inflows coming in. Even in index futures, over the last 3 trading sessions, the FIs had started building some long positions, covering some short positions. Yesterday as well, there was purchase of 2,300 crores. And as a result of which, the FI long exposure, which was at 10% before going into the Monday panic low, has now surged all the way up to 14%. And FI net contracts also came down by about 45,000 contracts. But remember, it is only when these long positions are added that any sort of decline hurts a little more. Yesterday, the signs were that there was resistance at the top, which is why we saw 23,800 and 23,700 call writers fairly active. But now today, straight off the bat, coming into play will be the 23,500 put writers, because the 23,500 put added about 21 lakh shares for a premium of 124 rupees, telling you between 23,300 and 23,400, we expect some sort of support coming by. If we break that, then the Monday low of both Nifty as well as Nifty Bank come into the picture. The only thing that I'll watch out for HDFC Bank after a big decline in the ADR is the 800 mark. Remember, 5% lower from here. The 800 mark for HDFC Bank has the highest put writing. So let's see whether that mark sees some support today or not.
Thank you so much for that, Mangalam. But on that note, we're going to slip into a very short break. After the break, we'll get you updates from the world of AI. Stay tuned in. Thanks for staying tuned into Power Breakfast on CNBC TV 18. Now getting you the latest updates from the world of AI and tech. In our new offering, AI Pulse, we have Rachna joining in with us as always. Good morning, Rachna.
Well, today in the world of artificial intelligence, it's all about contracts, clash, and the consequences. Because Microsoft is considering an action against OpenAI and Amazon over a $50 billion cloud deal. Now, Microsoft has invested over $13 billion into OpenAI and holds the company's exclusive cloud rights. But OpenAI's new enterprise platform, built with Amazon Web Services, introduces stateful AI agents with memory and persistence across sessions. Microsoft's position, reported by the Financial Times, is that this crosses the line on exclusivity, and if it escalates, it could complicate OpenAI's upcoming IPO timeline, which is already under pressure from a separate Elon Musk lawsuit. So, grey clouds for OpenAI there. At the same time, the economics of AI is accelerating sharply, and Micron's latest results make the scale of that demand quite concrete, because revenue in the second quarter came in at nearly $24 billion, up almost 200% year on year, and the company's guidance for the current quarter alone is over $33 billion. That is more than that Micron made in any full year prior to FY 2025. And the driver is high bandwidth memory, the chip component at the core of the AI accelerators, which is now critically in short supply. Then there's Google, that's testing tools that would allow websites to opt out of its AI-generated search summaries, responding to pressure from the UK's Competition and Markets Authority. Now, publishers say that click-through rates have fallen sharply as users are now relying only on AI answers rather than visiting source pages. And finally, Nothing CEO Carl Pei, speaking at SXSW this week, said that the app-based ecosystem itself is going to disappear due to AI. The next phase, he argues, is devices that understand your intention and executes tasks directly without navigating apps at all. That's all from the world of artificial intelligence for now. We'll keep an eye out for more.
Thank you so much for that, Rachna. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Nifty implied open still indicating a gap down start. So don't go anywhere. Bazaar morning call will take you through all the market action.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. Well, the screen is red, but it's a special day to everyone who's celebrating Gudi Padva, Ugadi, and of course Navroz, which is on the 21st. Wish all of you a very, very happy New Year. I think we can all do with some peace, some tranquility in the world right now. It's also a special here in the CNBC studios because it's my colleague Rima's birthday. Rima, hi.
Hi.
Happy birthday.
Happy birthday, Rima. Wishing you only the best. Good year ahead, good day, and happiness personally as well as professionally. Have a blast today. Markets will be volatile, but on a personal front, have an absolute cracker.
Indeed. Thank you so much. Every morning it's special when I come and anchor with you guys. So I don't mind waking up every morning at 5 a.m. because I get to spend that time with all of you all. But thank you once again and wishing all our viewers happy Gudi Padva and new beginnings.
And it's a big birthday? No, not the big birthday. Okay. We got past that. I know Rima for anchoring with her, I think, for 16 years. So it's a long, long time. But let's get straight to the market action.
I think I'll sort of walk to the screen and maybe just let you know what is the setup as things stand right now, right? So let's just take a quick look at the headlines. And, there is local news flow as well. But I want to start with the global news flow because I think that is essentially what's going to matter, right? And it's looking bad. If you were hoping that as the third week winds down and things will start to look a little better, sense will prevail, nothing at all. The world's largest LNG facility has been hit. Actually, I should have modified this to say that not just the world's largest LNG facility, the world's largest gas field has also been hit. So you're now really talking about gas and oil infrastructure being under attack, right? In a real sense. So you're climbing the escalation ladder and you're perhaps reaching a point where, who knows, right? These crazy things are not supposed to happen. But, well, it is happening. And you got to deal with it. Oil prices are, of course, at $111 a barrel. Bulk of the move happened last night. So I'll just quickly tell you what happened, right? Iran said that it's struck, that Israel has struck. Let's just go back to the first one. Israel has struck its South Pars gas field, right? Now, this South Pars gas field, the Pars gas field actually, is the largest gas field in the world. The South Pars gas field is on the Iranian side. And the north essentially is on the Qatari side. So this is a shared gas field, one contiguous world's largest gas field shared between Iran and Qatar. And Iran confirmed that Israel has struck this particular gas field yesterday on the Iranian side, which is on the southern side. Let's move on. Natural gas, and you would wonder why, right? Why is this happening? Natural gas accounts for about 79% of Iran's total generation of power. That is... I guess they want to knock this out and cripple the Iranian government, the country per se, right? Now, Iran essentially said that energy sites in Saudi Arabia, UAE, and Qatar have now become direct and legitimate targets. So this all happened last night. The gas field was struck and Iran issued this statement. And then Iran retaliated by hitting a LNG plant in Qatar. This is the largest LNG plant in the world, by the way, right? Because they've got the largest amount of gas and they've got the biggest LNG plant as well. So, as I said, this is, in that sense, unprecedented in more ways than one. And, we can go into details why maybe oil, there are still inventories, right? Some countries have more, some countries have less inventories. But if you look at gas, inventories world over are pretty low. In the case of India, we sourced about 48% of our LNG imports from Qatar in 2025. So that's the problem, and that's the reason why I'm saying that this is not good. Now, the reaction last night in the market, S&P 500 down 1.3, NASDAQ was down about 1.4. Let's move on and take a look at what else, right? So combination of hawkish Fed messaging and rising energy prices. So the Fed was kind of a side story. But I just put out the fact that FOMC left policy rates unchanged, as was widely expected. And they also sounded a little hawkish. They said, well, because of the Middle East situation, it's looking, let's just move on, it's looking a little uncertain about what we can do. So they said, Powell said that if you do not see that progress on inflation, then you won't see a rate cut. As simple as that, right? No progress, no lower inflation, no rate cut. And of course, I mean, if anything, inflation expectations have been moving higher in Western economies, etc. Let's move on, please. And the 10-year yield jumped about 7 basis points on the hawkish messaging in that sense to about 4.27%. Gold prices, oddly, right? I mean, risk aversion usually leads to precious metal prices going higher, but gold prices were down 3.5% last night. And later tonight, you've got the March E-mini futures which expire, which I think we'll need to watch. I mean, it may actually lead to more volumes and some volatility, etc. So just wanted to put that up. Now, these are the key levels. These 2 levels I'm going to put out. We are here. We are at 23,830. And my sense is this uptrend that we've had for the last 3 days now perhaps is coming to a bit of an end. And from this resistance level, which is nothing but the swing high, and we, I think, crossed this intraday yesterday, and then we sold off from there. But basically, from this swing high, the market maybe takes a turn lower, and we'll see if we go back to the support zone, which is around 23,650 odd levels or so. So that's the range that you are very, very near term that you're working with at this stage. On the downside, remember the market got to about 22,800 something, right? 22,900 or so, which is the absolute low. I think last Friday or this Monday, 3 days back basically. Will we go to that? That's another point. But in the very near term, these are levels that the market will tread. The GIFT Nifty will give you a quick sense of how we're likely to start. And then we will sort of move on. But that's the big story. Nigel has got the perspective on that's the GIFT Nifty, by the way. Implied open on your screen, 23,375, 340 odd is the GIFT Nifty at this stage. So it's a steeply lower start. The FNO positioning and the numbers out there, Nigel has got that detail. Nigel, over to you.
Well, that's right. The bulls are in for a challenging session on Gudi Padwa, going by what the GIFT Nifty is suggesting. Headwinds galore this morning. The resignation, at the top for HDFC Bank, that will lead to the stock opening gap down. It's very important for the Nifty as well, not just as a stock HDFC Bank, because HDFC Bank on the Nifty has close to 12% weightage. It's the highest weighted stock. Additionally, it's got very, very high institutional holding. Whether you look at the FI holding at around 48%, DI holding at around 37%. And it's a very, very large private sector bank. Highest weightage on the Nifty, highest weightage on the Nifty Bank as well. So that's clearly going to be making investors very, very nervous in today's trading session, and it will put pressure on the headline index. Besides that, the Fed chair will water down rate expectations, while Brent crude prices, well, it has surged overnight. Iran continues to threaten that oil facilities, Saudi Arabia, UAE, as well as Qatar. In fact, I was reading a note from Citi. They're expecting Brent crude prices to surge around $120 per barrel just in the coming sessions itself. So the cues are very, very gloomy. Plenty of headwinds today. Besides that, yesterday, remember, we saw a very, very sharp drop in the Indian rupee. And we could be bracing for some more weakness today. Yesterday from midday, towards the end of trades, you had the rupee actually that ended at the lowest level of the day. And today it could come in again for some pressure. So keep an eye out on that front. But the FI selling, that cooled off. Yesterday it was 2,700 crores. And I'll say only 2,700 crores because the lowest FI net sell number in the month of March. But today, we could be bracing for that number to perk up a little bit yet again because a large stock like HDFC Bank will be under some pressure. Yesterday, we continue to see some short covering both on the Nifty as well as the Nifty Bank because both those two indices ended higher. The open interest was lower. But just one point, on the Nifty March futures, it's moved into a bit of a discount in comparison to the premium. Remember, we'll have the monthly expiry that will play out in the following week itself. The FI net short positions, though, in the last few days, we've seen a good bounce, close to 800 points on the Nifty. The short positioning is down by close to around 36,000 contracts. The clients, they've gradually been unwinding some of the long positions, started the week at around 1.5 lakh contracts. That's come down to a little sub that 1.3 lakh contract mark odd. The FI short positions holding at around that 86%. That's on the index futures. On the stock futures, actually, there were some shorts that were added in yesterday's trading session. Could be a bit of an arbitrage out there, but that's just one data point that I want to put on board. But the good news was after a while, you saw a good amount of put writing. Yesterday, close to 90,000 put contracts were written. Though the call writers for the markets on the whole, they are hoping that higher levels will get defended. So you saw a fair bit of action at the 23,800 call, 23,700 call, which brings us to the levels. Going by that call writing action, resistance is very, very firm at around the 24,000 odd mark. The reference point you have on the downside is the low that we made earlier this week at a little sub that 23,000 odd mark. So in terms of a range, we're likely to be in this 1,000-point range, just in the near term, and a breach of either levels will give us further direction. So that's the broad range that we're looking at. Now, since HDFC Bank is going to be under pressure, it has 12% weightage on the index. Normally, we see some kind of balancing that takes place. So I'll be keeping an eye out on the other big boys, Reliance Industries, ICICI Bank, Bharti Airtel, as well as SBI. One of them will have to play a so-called very good innings to hold one end up because the largest constituent is going to be under pressure. And since Manappuram Finance, well, they have got the RBI approvals with regard to the deal on Bain Capital to get joint control. I'll keep an eye out on Manappuram Finance, but also maybe Saman Capital. They also are waiting for approvals. That one's in the F&O ban. So I'll keep an eye out on this stock as well. Come up drastically from the top. Brace yourself. It's going to be a bit of a tricky session.
If you can just quickly put up HDFC Bank stock on the screen, I just like to say one thing, right? I mean, the resignation of Mr. Atanu Chakrabarti is damaging, no doubt, right? Because the resignation is not damaging. Most people leave, say for personal reasons, etc. And it's rare to see a person at an organization like HDFC Bank essentially saying that certain happenings and practices are not in congruence with my personal values and ethics. That's the damaging part. Now, we don't know the specifics of the allegation, etc., but I'll say this. The stock, I mean, if you're thinking about this, we'll wait for the specifics and there'll be a fair bit written, spoken about this one. But if you're looking at what the stock will do, just be mindful that it's trading at about 1.7 times F528 price to book, right? It's the cheapest in the last 20 years. So I'm not saying that this is the cue to go buy the stock, but if you're thinking about downsides, if you're thinking about shorting this name as trade starts this morning, I mean, just keep this in mind because, markets are collective wisdom and, the stock's at a level it's not been. At least these are forward estimates and those numbers can change, the book can change and all of that can happen. But we know what we have right now is, a level which is the cheapest in the last 20 years or so. So surely there will be a cut, but there will be a large cut? I think that's where these numbers will start to come in once again. Prima.
And some important statements that Ritu has picked up from her sources were the exit of Atanu Chakraborty is not linked to the bank's conduct or any regulatory concern. The regulator themselves have had no concern with the bank. Nothing wrong with HDFC Bank or its conduct is what Ritu has picked up from her sources, and we'll try and connect with her to find out more on that. But the other big story was the FOMC meet. Now, on expected lines, the US Federal Reserve voted to hold interest rates. So no change, but that comes in on expected lines because the policymakers there are navigating their way through higher than expected inflation readings. Yesterday, the producer price inflation number was red hot at 0.7% increase on a month-on-month basis. It spooked the street. Plus, we're getting mixed signs in the labor market. The February data, remember the non-farm payroll data showed a sharp cut of more than 90,000 jobs lost in the month of February, and then that ongoing war. So listen in to what Fed Chair Jerome Powell had to say about Fed rate, the trajectory of what the Fed is likely to do in terms of rate cuts.
The possibility, rather, that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case. And of course, we don't take things off the table. And the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected.
And one part of the press conference was also about how long he will be at the chair in terms of the governor board. And this is what he had to say. Will stay on as a Fed chair till successor Kevin Warsh gets the Senate confirmation. He will not leave the Board of Governors position till the DOJ investigation against him is complete. William Lee, Chief Economist, Managing Director at Global Economic Advisors, is joining in to talk all things global economy, macros, the war and the markets. Thank you very much, William, for joining in. 3 weeks in terms of a war almost coming to a close, and now energy infrastructure assets are under fire, and that's keeping markets on the edge. We've seen once again a spike in Brent crude prices to $111 per barrel mark. Take us through how you've read the war, the fact that it's gone on way longer than anyone's baseline expectations.
The markets are really trying to deal with this new shock. It seems as though we've had a series of supply shocks, starting from COVID and global supply chains, now the various wars in the Ukraine and now the Middle East. And what's remarkable, certainly about the global economy and U.S. economy in particular, is how robust GDP growth has been. With all of these supply shocks, we would have thought that all these fears of stagflation or recession or any kind of session you want to talk about would have really been much more dramatic than they turned out to be. So that's the good news. The bad news is that with this heightened market uncertainty and with local developments like what you just mentioned earlier about India's banks, the financial markets themselves are in a place where their main job of allocating capital is coming into question. And my fear is that all of this uncertainty is causing the massive capital flows that are coming into the United States, partly induced by the tariff incentives that President Trump has put in place to try to incentivize foreign direct investment into specific strategic sectors, are going to be diverted because markets are so nervous. They'll be diverted to safer investments like treasuries or more liquid investments. And that kind of diversion will actually be very harmful for the long-term growth of not only the United States, but also the global economy.
Yeah. William, hi, morning. Just a quick word, William, on the attacks on energy infrastructure now, right? For those who are in the Trump camp, right, and you certainly are, you've been a supporter, and, does it feel a little, not a little, actually a lot, as many have said, right? That one of the promises was to get US out of all these wars. I mean, the opposite has been happening. So just, is there a political backlash within? Because, I think as many believe, that we spoke with Jim O'Neill, he said the political backlash in the US essentially is what's going to force President Trump to wind this down.
That's right. There's a very short fuse that President Trump has to deal with. The midterm elections are just around the corner. We're starting to see early returns now, and a lot of discontent among the voters, not just because of the foreign situation, but also because the affordability issue is coming home to roost. So there are a lot of irons in the fire right now that will keep President Trump on the straight and narrow. And for him, I think that the compromise was that the threat from the Iranian regime was so massive and so certain in terms of an existential threat for not only Israel, but also for Western democracies, that they had to take action because of the nuclear threat. So that has led to infrastructure attacks and retaliations of the sort that seems like it's growing beyond where the initial parameters were. And that will show up in the elections unless they're resolved quickly. And I think we're hearing from more and more from the administration that they're trying to talk in terms of resolving these Middle East conflicts, resolving it in the time horizon of weeks rather than months.
Hi, William. Good to see you in, as always. William, what do you make of what the Fed had to say overnight? We started this year hoping that we get more rate cuts. Now there's going to be a new Fed as well, chaired in the next few months. And also inflation has perked up and things are only going to get a little bit hotter from here on. Do you factor in probably no rate cuts for the remainder of this year from the Fed? And also a word on the Bank of Japan, because action's due there as well.
The very clear message from today's press conference is Chair Powell has told everyone we're going to get rid of that last mile of inflation. I think the focus will be on getting that inflation rate close as possible to 2% within, say, this year, and going to do whatever it takes in terms of delaying rate cuts in order to do that. The baseline case is still one where the tariffs, the energy spikes are all considered one-time price spikes. Now, as he said very clearly, we got burned on this one-time assumption before, because even though it's one time, it took much longer to pass through the U.S. economy than most people had thought and most estimates had given us. So he became very hedging in the way he talked about things in terms of, we just don't know. We just don't know. I don't remember any press conference where he said, we don't know, as often as he said during this one. So I think it's going to be very clear that regardless of what's happening in the labor market, unless it really collapses and the unemployment rates rises to 4.75 or hits a 5 handle, they're going to be focused on inflation. And for me, the prospect of having a wash regime come in to be able to have the wash maneuver that I described in this show of shrinking the balance sheet accompanied by rate cuts, the likelihood of that coming in place is certainly going to be pushed further down into the year, especially if the Senate doesn't confirm him. Chair Powell also has made it very clear he will stay on because he will not leave until the judicial uncertainty is resolved, and because he takes it as a personal case against him, which it is, because the administration has said you have mismanaged resources, you have bloated the Fed bureaucracy over the last 10 years, and that mismanagement is what he's being called to task on. It's not an issue of Fed independence, but rather managerial incompetence. And he feels personally responsible to answer that.
Okay. All right. William, we'll leave it there. Thank you very much for joining us. Good speaking with you. And we'll come back to you. Well, HDFC Bank chairman's resignation, of course, is the big story, as we've been pointing out. Now, what we're picking up is that the resignation is not linked to the bank's conduct or regulatory concerns. Ritu's here with what she's been able to sort of, put together with regards to this important story. Ritu, good morning.
Good morning, Prashant. The one-line takeaway is that this is a personal difference matter, between the chairman, Atanu Chakravarti, and the top management. It is not linked with the conduct of HDFC Bank or any governance flags there or regulatory action or NPA or compliance-linked issues. We've spoken to top sources that are very much clued into what's going on at HDFC Bank, and it seems the exit, like I said, is not linked to the conduct of HDFC Bank, but the personal differences with the senior management. Now, the friction between Atanu Chakravarti and some of the senior management personnel has existed for a few years now, essentially stemming from the fact that the management felt Atanu Chakravarti, as a non-executive chairman, was functioning in a very, and I quote, executive style, which is the root cause of the issue. Now, although these differences had been building for a while and there had been disagreements on various issues that were linked to, the conduct of certain individuals, for instance, in the past, for the kind of lapses that had emerged, including more recently with the Dubai branch issue and how the bank handled that. But the resignation itself came as a surprise to the board. The board meeting was called last night at a very short notice. Even during the board meeting, we understand the board members quizzed Atanu Chakravarti for specific reasons for his resignation. But we're being given to understand he did not really offer much beyond what was stated in his letter, and that is to say, what was going on in the bank was not aligned to his values and ethics. We've also been given to understand that the exit has neither been directed by RBI nor initiated by the bank. So it was very much an individual level decision that was taken by Atanu Chakravarti. Given his abrupt exit, which came as a bit of a surprise to the board, which I repeat, while there had been differences, the resignation itself coming last night was a surprise. So in the meantime, the board, of course, reached out to Keki Mistry as a veteran of the group to step in for a short period until a new chairman is found. And the RBI subsequently approved his chairmanship for a 3-month term. So we'll have to see where it goes from here. But for now, the one line I'd like to clarify again is that the regulator finds nothing wrong with HDFC Bank or its conduct. This is a personal issue.
Thank you, Ritu, for that. We'll keep coming back to you if you learn more on this story. It's a big one.
Ritu, Rima, I'll tell you, I spoke with someone this morning, early this morning, it's very senior at HDFC Bank. And of course, Ritu, I think it kind of sort of corroborates and with what Ritu said, right? It looks like personal differences. And the one line which stayed with me, what he said is that he was trying to run the bank, quote unquote, right? He was trying to run the bank. So these seem to be personal differences with regards to, as happens with any board, any company. And of course, the only thing is that this is HDFC Bank and right at the top. So
the words used were personal values and ethics, right?
That is from Mr. Chakrabarti's side, right? Which is what I said, right? Usually when you leave, you kind of sort of, but maybe he wanted to make a point and yeah, exactly. So is this the basic question for markets is this a bank related issue? Is there some red flag? Is there some, the way it is, they're keeping the books or anything? It doesn't look like it's any of that. This is basically personal disagreements between Mr. Chakrabarti and of course some other senior executives. And of course, it looks like they didn't get along. And, as I said, and as Ritu said, it looks like differences between executives who were running and their style of functioning and what they wanted to do, et cetera, et cetera. So a bit of a control thing here more than anything else. So for investors, the basic thing is, I mean, this is not, from what we understand, from what we pick up, not regulatory, not with regards to how the bank was run, because it's a lending business at the end of the day, and those decisions matter a whole lot deal. But it doesn't look like it's those things which led to Mr. Chakrabarty's leaving the bank. We'll take a quick commercial break here. The interactions which are lined up here on the program over the next 2.5 hours. 8:35. We'll have the management of Mastek to discuss the recent trend seen in the IT services space and, of course, the AI play. 9:20, Neelkanth Mishra of Axis Capital is a market master of the day. I mean, I think it's pretty important with what's going on. 9:35, the management of CEAT joins us to discuss the company's FY27 outlook and beyond. Management of Nazara, they've made a big acquisition, about 900 crores in total size. And towards the end of the program, the management of JK Lakshmi Cement to discuss, of course, the implications of the Iran war and, what happens for the business at JK Cement, JK Lakshmi Cement, and of course, the broader industry as well. Stay tuned.
Welcome back. Markets are jittery. The implied open for GIFT Nifty is lower by 450 points. At one point, it was down more than 500 points, 550 points lower. Crude prices have risen sharply, now $111, $112 per barrel. So once again, oil and gas names, the sensitives, will be on our radar. So this is time to talk about individual stocks. Our team is joining in, and let's begin with Sonal first. Sonal, hi.
Hi, good morning. Well, that's the big story, right? What's happening in the oil and gas space. Now, do remember last night, Iran issued an evacuation warning toward the oil facilities in the Gulf, especially Qatar, UAE and Saudi Arabia. And also, additionally, Iranian-linked drone and missile strikes hit key Qatar energy facilities in Ras Laffan industrial city, and it did pose extensive damage there. Now, do remember, this is one of the biggest LNG producing facilities in the world, big exports from there, so this causes a big disruption to gas supply globally. We did see crude oil prices going to that level of $112 a barrel. Gas prices rose as well. Additionally, UAE also has shut gas facilities, and that is an area where we get the maximum amount of gas from. So there are more disruption coming in the energy space. So keep an eye out on sectors, the oil and gas space. We have pains, and of course, we've been talking about how gas supply curbs have impacted the entire value chain. So there could be some more pain in this space.
Okay, all right. Well, Sonal, thanks very much. And we'll keep this the big story, of course, is oil and gas and what happens there. More on this as we go through the show. Manappuram Finance is the other one, right? HDFC Bank was one, but financials, there's Manappuram in focus as well. Gaurav has got details. Gaurav, morning.
Well, good morning. If you look at Manappuram Finance, now they have got all the approvals which were required from the regulatory point of view for Bain Capital to acquire that stake that they were going to acquire in Manappuram Finance. Now, the last leg of this set was remaining, and now they have received for the subsidiaries, which is Ashirwad Microfinance and Manappuram Home Finance, they have received the requisite approvals from RBI for indirect change in control and management. And with this now, management is very confident that the acquisition worth 4,300 crores can be completed by the end of 31st of March 2026 itself. So in the next 10 to 11 days, we may see acquisition happening and entire fund flowing in Manappuram Finance. Now, the company has also said that they will, they are actually intending to complete the open offer as well in accordance with the timeline prescribed by SEBI. Remember, this deal was signed in March 2025 last year, and at the same time, after the open offer, Manappuram Finance, Bain Capital will acquire stake anywhere between 18% to 41.7%. Now, brokerages are also very positive about it because Jeffrey says that this is actually going to be 4 to 5% book value accretive and 8 to 9% EPS dilutive. So, all in all, they are actually waiting for this turnaround visibility to come, but they are also positive. Yesterday also we saw the stock was up 5%. So, let's see how it performs for investors today.
Thank you. That's the other big stock to watch. Nazara Tech will be tracking that because the company is spending about $100 million to make some acquisitions in Spain, gaming companies, casual gaming this time. Vinny.
Hi, so absolutely now they're focusing a bit more on casual gaming. $100 million, that's around 900 crores odd that they will be paying for this. This is for the first 50% that they will be acquiring in Blue Tile as well as Best Play. The remaining is going to be on the basis of the EBITDA that will be calculated on a 6.6 times EBITDA trailing, and that could be done anytime before 2028. By 2028 is what they have said. Obviously, this is going to be more performance linked. It's going to be on the basis of the achievements that come in between calendar year 27 to 2029 on revenue as well as EBITDA performance, and then that payment will be decided on what they will be making. So first amount that they'll be paying is going to be right now is $59.7 million. That is going to be at the first close of this acquisition, and then the remaining $40 million will be 6 months post this first close as well, and 50% will be any time by 2028. Now, obviously, the stock had already seen a run-up yesterday, around 6-7% run-up. So today we expect to see some mild bit of a green, but concerns remain in terms of free cash flow that's lying with the company as on Q3 was around 700 crores. So where is that remaining amount going to be coming in for is something that we'll watch out for.
Okay, all right. Thanks a lot for that, Vinny. Let's hop across to Ria. She's here to give us some more stocks in the news. Hey, Ria, morning.
Well, good morning, Nigel. Let's start off with Bellrise Industries first. They are going to buy UK-based firm Chester Hall Precision Engineering, which operates in the component supply space for aerospace, aviation, as well as defense. Now, this is being done at a deal value of rupees 164 crores, and the acquisition was completed at an EV to EBITDA multiple of 6 times. And as per the company, this is expected to be both EPS accretive as well as ROCE accretive from day one as well, itself. Moving on to Mazagon Dock, they have signed a $39 million contract with SCI for 1 unit of the 3,000 deadweight tonnage platform supply vessel. GR Infra as well has won an order. They have been declared as the L1 bidder for the rupees 2,441 crore HAM project from NHAI. The execution period for this is 910 days. And lastly, Vedanta will also be in focus today. They are going to be holding a board meeting on the 23rd of March to consider the third interim dividend for this financial year.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are the oil and gas companies, Manappuram Finance, Nazara Tech, Bellrise, Mazagon Docks, GR Infra, Vedanta. Stocks with negative news flow are HDFC Bank, oil marketing companies and paint companies. But back to tracking the happenings in the commodities market. Manisha now joins in. Manisha.
Well, thank you so much for that. On my top list, of course, is crude yet again, and we've seen 4% of gains come for that one in the Asian markets right now. We are holding $112 a barrel. And with this gain now, we are up 50% since the West Asia conflict began. And it's not just the crude oil prices, natural gas, heating oil, gasoline. All of these commodities are trading anywhere between 3 to 6% on the higher side in the Asian markets and have gained anywhere between 30 to 45% since the West Asia conflict began. with the fresh attacks coming in on infrastructure in the Middle East, whether it is about Qatari facility or Iran South Pars gas field, the markets are looking at longer lasting impacts of this. Even if there is no more attacks and even if there was a resolution coming in tomorrow, the world believes that it would take 2 to 3 months for the global energy markets to realign yet again. And it's not just crude oil prices. Much of the safe haven money seems to be going in case of the dollar index. That one is surged to nearly 100. And we are looking at money coming out of precious metal prices. So gold is now trading below $4,900 an ounce. Silver has declined nearly 20% in the last 1 week itself, just about holding $76 an ounce. And that's exactly the case that you're looking at in metals as well. Heavy profit taking there as well. Copper prices declined 2%. You had zinc, tin, aluminum all declined more than 1% in the overnight markets. And Asia is doing no better.
All right. Thanks very much for that. Manisha, we'll take a break. We are back. Energy is going to be the top focal point. We're back with the management of Mastec to discuss the recent trends in the IT services space. And of course, how's the developments in AI impacting how the business is being run. So Ashank Desai is going to be with us. Deepan Mehta of Elixir Equity is also with us in just a bit.
Welcome back. Let's talk about IT. IT led the rebound in the markets yesterday. There was a CLSA note where they said that after meeting with various companies, the large cap IT companies, one takeaway is that there is no increased evidence or there is no evidence of increased deflation on account of the newly released AI tools. That provided some relief to the stocks yesterday. Ashank Desai, chairperson at Mastec, is now joining in. Thank you very much, sir, for joining in. This is Rima here. You know, what was also flagged off, from CLSA after meeting the managements of various companies is that there is some delay in decision making because customers are now testing the potential of these new AI tools. And then on the sidelines is the Middle East crisis as well. At Mastec, have you all seen any delays in decision making or ramp ups in deal?
See, I would comment it at a very larger level of industry. Nice to meet you. The whole issue of implementation of AI applications has to be seen in the context of organizations. Organizations are complex bodies, and you can't impose suddenly a new thing without many other stakeholders taking charge of it, owning the implementation of the program, changing the business processes if required, and above all and everything, ensuring that all the other guardrails regarding data, cyber security are in place. All this is a complex work. So technology is moving very fast, but we see the organizations cannot move that fast. It's not about only Mastech, it's about all the industry here, all of us here. It will not move as fast, and we have seen it years after years. If you take cloud, it took good 6-7 years to really take off. I remember talking about cloud in 2006 or 7, but it took that much time. Same thing happened about the digital. Digital thing started in 16, 17, but it took 3-4 years when it really started moving fast. So one has to understand the customers of Indian IT industry. They're all large customers, large Fortune 500, Fortune 2000, and such large customers. They will take their own time. It's not going to move as fast. So we are seeing it, to answer your question, that people are trying a lot of POCs. Of course, there is an implementation of AI also is happening. It's not that it is not happening. There are certain applications like implementations of large products like ERPs and all where AI is getting used. And that we are also doing that. But the point I'm saying is, it is just the beginning. Much more is going to come.
But I get that, these new AI tools cannot just be lifted and they can't replace the existing software services. That the lift and replacement doesn't work because enterprises are far more complex for that. So that point is well taken. But while the enterprises try and understand the best way to work around the AI tools to extract the maximum productivity, till you come to that conclusion, that what architecture you need, what suits you best as a company with the appropriate guardrails. Till then, there is a status quo on decision making. And that will slow down the revenue potential for the Indian IT companies. So to what extent are we seeing this delay in decision making? When do you expect that to turn? And therefore, what will be the impact on the Indian IT companies? Should FY27 be another very slow year of revenue growth?
So it is like this. Indian IT industry has been working for last 1.5-2 years to build the capability to address the AI market. It is about training people on people at a entry level and 3-4 year senior level, training them, training senior levels at understanding AI and applications of AI. All that work is going on over last 1.5-2 years. Impact of that has to be felt by our customers, which they are feeling now. So some of these things that you are talking in terms of delays and lag of implementation of AI is partly related to the supply part of it, apart from just demand. Once the supply of such abilities gets ready all over IT industry, you will see the initiative by the IT industry to do large applications. We are all doing that. We are seeing now large applications being addressed by us because we have talent available to us. We have taken effort to make it happen over last. We have built architecture. We have built tools. So some of the effect is going to be seen in FY27. So certainly there will be a better year than 26. I certainly feel that.
Okay, so FY27 should be better for than FY26. You've said that when it comes to Mastech, and I guess that holds for the industry as well. One quick question, when it comes to Mastech, you've spoken about committing to your clients 15 to 30% of productivity improvements over a 3-year period, which means a potential revenue deflation of 5 to 10% annually. At least there doesn't seem to be as much work to offset that. So two-part question. One, in terms, are we really seeing 5 to 10% revenue annual deflation for the industry? Or what would be the average if it's not this number to work with? And two, is there enough new volume to offset this?
Yeah, so that's the thing that, as you, Rima, said, that there is a productivity benefit, which has to be weighed in with the new work that we are doing because of AI. So it's not just reduction and nothing happening at the other end. We are seeing large applications where there is going to be applications of AI. We are using it. Let's take an example. Today, to do an AI remark, you need data sets and data which is of high integrity with a high quality. And ERP systems, Salesforce systems, are all these systems who are creating that data. AI will not work without it. AI just can't be imposed on something which does not exist. So ERPs and Salesforces and all other products and SaaS products are going to get a business to build the data. That's one part. The second part is even after creating that data, it requires large amount of reorganization and data integrity issues. So there is a work required at a data level. After that, AI applications start coming. So AI is going to drive some work at the tail end to make AI happen. And some of it is already started. People are implementing some of the systems to make their AI applications more productive. So one has to look at the overall system. AI is not one piece which can be just implemented without no implication anywhere else. It has implication to data, it has implication to infrastructure, it has implication to business processes. It's part of the overall system. That's the point we are making. And as it is part of the overall system, we do feel that some of these tensions or some of these constraints rather will get released as we move ahead, and more applications will be possible, which will kind of balance with the issues that you are talking. We are very confident. We have seen it all the time, Rima. See, this happened when multiple technologies were introduced. They were all introduced very slowly. When products came, you remember, you would be in the industry when that time SAPs and Oracles came. Everybody said, oh, there is no application required now. What really happened was SAPs and Oracles created a need to implement the product itself. And people started doing larger complex applications in the company because products were available.
Correct.
So service companies came and said, we'll help you implement. Now that came a little bit later. First product started coming, the implementation came later, and you know what happened. Today, large percentage of our revenue comes from on-premise and cloud industry. And we do, of course, cloud. But I'm just saying, all of this has to be seen the system of evolution.
Okay. All right, sir. Out of time, but thank you very much for joining in. We take your point that maybe there is some cannibalization in the near term, but that structural opportunity is very much there. And the Indian IT companies have proved in the past that they are capable of adapting to every new tech cycle. But let's get back to the war in West Asia intensifying. And now it's the energy infrastructure assets which are under fire. Prashant?
This is important. I just want to put this up and just walked across to the wall because actually this is positive. This is good news if the peace holds. And I'll tell you why this is good news. Because this is President Trump posting on Truth Social, essentially saying for the first time, I mean, we're actually hearing some moderation from President Trump, right? He's saying that Israel, out of anger for what has taken place in the Middle East, has violently lashed out at a major facility known as South Pars gas field in Iran, which is what I was talking about at 8 o'clock on the setup link, right? This is the largest natural gas field in the world. And that was attacked by Israel yesterday. Now, President Trump goes on to say, and I'm quoting here now, a relatively small section of the whole has been hit. He says, and this is important, right? The United States knew nothing about this particular attack. And the country of Qatar was in no way, shape or form involved with it, nor did it have any idea that it was going to happen. So, I'm assuming there has been so much pushback because this chain of cycle of escalation attacking energy infrastructure. I mean, it's basically mutually self-assured destruction, energy destruction, for the lack of a better way to put it. And obviously, people have sort of impressed upon President Trump that this must stop. Otherwise, I mean, essentially, we're going to go into an energy freeze in that sense. He goes on to say, unfortunately, Iran did not know this, that US or Qatar was not involved. or any of the pertinent facts pertaining to the South Pars attack and unjustifiably and unfairly attacked a portion of Qatar's LNG gas facility, right? Then he goes on to say, this is the operative word, no more attacks will be made by Israel pertaining to this extremely important and valuable South Pars gas field unless Iran unwisely decides to attack a very innocent, in this case, attack, in which case, I mean, then he basically goes on to say that, you know, we're going to bomb them and we're going to do an unimaginable damage, etc., etc. All of that, of course, is rhetoric, and we've heard that many times in every tweet, every Truth Social post of President Trump. I mean, he's basically gone on and said again and again that, you know, we're going to do this and do that, unimaginable, etc. But the thing to take away from this, of course, is the de-escalation. I mean, people have impressed upon him that you cannot do this. You can't allow Israel, or, I mean, you can't basically sanction the attack on energy infrastructure, because then you're essentially looking at, as I said, an energy freeze, basically. So I would say this is positive. Of course, the peace has to hold, and if the peace holds, this is a sliver, a glimmer of hope in what was looking at 8 o'clock, even at 8 o'clock, a very, very dull open. GIFT Nifty will come up on your screen. I'm not sure if that is reflecting any of this at this point in time. It was down very sharply. If you can have the GIFT Nifty back up again. But I think, you know, markets perhaps at some point will start to pay attention to this. They will first want proof of evidence that this is actually happening and no more attacks on energy infrastructure is taking place. If that is the case, I think this is not bad news. This is maybe incrementally a little positive. Back to you guys.
Okay, all right. Thanks a lot for that, Prashant. Well, we'll slip into a short break. On the other side, Deepan Mehta of Alexa Equities is waiting for us. He'll give us some fundamental stock talk. Welcome back. Hope you're having a good morning. The GIFT Nifty suggesting a sharp downtake. Hopefully by the end of today, we actually don't see that sharp a cut in terms of a 450 to around 500-point downtake. But Deepan Mehta, Director Alexa Equities, joins us on the show. Hi Deepan, good morning. This has come out of nowhere, right? The shocker with regard to HDFC Bank, the ADR overnight was down close to around 7.5% or thereabouts. However, with the information that we have right now, that appears there is no operational problem with regard to the bank. This appears more of a personal drift. What is your view on the stock? And if it opens 7.5% lower, would you be a buyer?
Yeah, Naja, good morning and thank you for having me on your show. I don't think it's a major concern from HDFC shareholders' perspective. But generally, we are not that positive on private sector banks, especially HDFC Bank. I think their growth rates are now below the system growth rates, and they have renewed competition from the PSUs and new age fintechs and NBFCs as well. And on the whole, I think that these banks are fairly valued. Also, I think they are overowned to a large extent. I mean, with 37% weightage in the Nifty coming in from financials, you obviously have a lot of ownership within that sector. So a correction in HDFC Bank is not a reason to buy. In fact, I think in the medium to long term, one should look at becoming underweight these private sector banks and work around the lenders through some other means, like, say, distributors or even multi-product NBFCs.
So you're saying that you wouldn't buy the dip and you actually will look at rotating out of some of these private sector banks that are currently a very large weight of the headline index. Is that correct?
That's right. Not immediately. I think, the time to sell anything in the market is looking more and more difficult. But yes, I think at a strategic level, in like a 1 year, 1 to 3 year time frame, we intend to be more and more underweight, at least private sector banks, and maybe keep positions in the PSU banks. I mean, if you look at the PSU banks, banks like Canara Bank, Union Bank, their figures, their balance sheet quality, and their kind of all the qualitative factors are equal to or better than some other private sector banks. So I think that kind of arbitrage which was there is over and done with. And the best thing now is to just kind of focus on niche players within the banking sector or companies which are extremely attractively valued or have a high dividend yield.
Okay, Dipan, we'll come back to you at 9 o'clock. HDFC Bank will also be holding a conference call with analysts. Before that, let's quickly revisit the story. Ritu is now joining us on the phone line, and she's also been, trying to understand some information on what happened, which led to this resignation. Ritu, what have you learned from your sources?
Well, Rima, let me start with what this is not. The non-executive chairman, Atanu Chakravarti's exit is not linked to any sort of governance or other issues linked with the bank. Our sources have made it very clear that there are no issues, regulatory or otherwise, with HDFC Bank. This is not linked to any red flags on NPAs or any kind of governance issues. So that is not the reason. The reason for Atanu Chakravarti's exit as chairman of HDFC Bank is very much linked to personal issues. Now, what are those personal issues? Our sources, multiple sources we've been speaking to inside and outside of the bank, and they indicate to us that the reason is that Atanu Chakravarti's style of functioning was very executive for someone who was a non-executive chairman, and that led to some differences between him and the senior management personnel of the bank. But that said, this is not a new issue. It is something that had been brewing at the bank for many, many years now. He's been, remember, the chairman of HDFC Bank since 2021, and these issues have cropped up on various occasions. But the exit itself came as a bit of a surprise to the board. The meeting, we understand, last night was called at a short notice after his resignation letter was received. And even during the meeting, the board did quiz Mr. Atanu Chakravarti, the reason for his exit, but he did not elaborate on anything specific outside of what is mentioned in the letter, and that is to do with the values and ethics not matching his own for the last couple of years. We've also been given to understand Mr. Atanu Chakravarti may have had some issues when it comes to the conduct of certain personals linked to past issues in the bank and the way they were handled by HDFC Bank. But beyond that, there was nothing more that was actually put on the record or detailed. So very much a personal issue, not linked with the bank. The regulator finds nothing wrong with the bank. And to also make it very clear, the exit was a personal decision, not directed by RBI or even the board.
I think that's important because, for any business and especially for a bank, when something like this happens, the question is whether there's something wrong, whether there is more than what meets the eye, what are these differences, etc., etc. So this looks like, a conflict on a personal front, maybe in terms of how, on the work front, professional differences, etc., and not very much to do with what perhaps was happening with the business of the bank or on the regulatory front, etc. So it's a reassuring story. And for those who, of course, own HDFC Bank or watching with trepidation in terms of what happens today, I think this provides at the margin some comfort. We take a break. We are back with the pre-open, but we'll also, of course, be connecting with Sudarshan and Mitesh with technical trading ideas. Stay tuned.
Welcome back. Dipan Mehta, still in conversation with him. Dipan, we left the conversation that don't buy the private sector banks right now, even though you get a dip. Look for niche financial opportunities. So that brings me to Manappuram Finance, because RBI has given the final approval for Bain Capital. So now it will be jointly controlled and the stake can go up to 41%. It's quite significant for Manappuram Finance. One, Bain gets some nomination rights. There's capital which is going to come in. Is that a buying idea, an opportunity, according to you?
Yeah, certainly, Rima, I would look at it. But I think the key factor in Manappuram is, of course, it's attractively valued. But how they're going to execute the non-gold business, because that was the pain point for Manappuram. And now I'm sure the gold business also is doing pretty well for Manappuram. So certainly it's a company worth diving deeper into it, keeping it on your watch list, and then seeing if there's any change of management or anything, any specific on-the-ground changes are taking place to ensure at least that the lending practices, collection practices, NPA management on the non-gold side, how that is evolving, or whether the company is again pivoting back to more and more gold loans because they kind of lost out in terms of performance and returns as compared to Muthoot Finance. And Muthoot still remains our top pick within the gold loan companies. So I would look at it in positive light. And certainly it's a very good development from that point of view. And it will improve, of course, the credibility and the access to capital and maybe cheaper capital for Manappuram as well.
Okay, Dipan, we'll leave the conversation here. Thank you very much for joining in. Pre-opening rates are in, 530 points lower on the Nifty. Remember, markets had rallied nearly 3% in the last 3 trading sessions. So there is a give back today because Wall Street ended with a cut of 1.5%. The Dow closing at the lowest close of 2026. Oil prices have been on the boil, and then you've got bad news coming in on HDFC Bank, and generally you overlay that with the macro jitters, perhaps you should prepare for a lot of red on the screen. So it's perfect time then to get in our technical experts, Sudarshan Sukhani, Mitesh Thakkar now joining in. Gentlemen, good morning. Perhaps not so good for the bulls, and plus today is that Sensex weekly expiry. Sudarshan, what would the approach to the Nifty be?
Yeah, good morning. Well, yesterday we said close all long positions which were taken on Monday and Tuesday, and that was a good decision because the long side has very limited potential. We stepped aside today. I think this dip that we are likely to see, this very enormous dip, is a buying opportunity. but you have to give very wide stops because the markets can test 22,950. So your stops are 22,900. If a trader is willing to take that stop, keep small positions, then this sharp correction may actually result in a buy. So consider buying only if you are willing to take a wide stop and trade only in small quantities.
So what would the stop loss be, Sudarshan?
I'm sorry?
What would the stop loss be if you buy at open?
22,900. That's the test of the previous low.
Mitesh, I remember yesterday you were saying that you would buy the Nifty only if it closes above 23,800. That didn't take place, and otherwise the advice was to exit some of the long positions. Now this morning there's going to be a gap down opening. What is the call?
I think, very clearly, my sense is that the markets on a medium-term, long-term pictures are slightly in a negative zone. What happened in the last 3 days was more of a pullback, and the first target was around 23,800, 820, which we kind of met but failed to sustain above. And then, if it would have closed above this, then maybe 24,200, 250. But we kind of, appear to be failing at the first level itself. A strong chance that we might actually go back to about 1,100, 150 zone, which is where the support pivot was before we had a good bounce back. So maybe a retest is on the cards. If it breaks below that, then we'll look at even continuation on the downside because, as I said, the bigger picture is still negative.
I don't know if you can pull up the what's moving the Nifty, that graphic, right, which basically gives you an index point contribution to I don't know if you can pull it up in the pre-open session. We are able to do it post 9:15, but if we are, we should just look at it because I think it'll give you a clear sense of how much of this pressure is coming in from just that one name, HDFC Bank. There you go. So, yeah, I mean, it's about 180 points, 180, and this was the pre-open, so let it settle. But this is in line with what the GIFT Nifty was showing. So, yeah, I mean, 3 minutes to go for the end of the pre-open session. So, this is not... the initial 60 seconds when things run wild, and the stock's showing a 10% downtick at this stage. Well, see, 758 on HDFC Bank right now. Sudarshan, what about you? I mean, you're just a view on HDFC Bank to kick this off?
Well, it's a buying opportunity. If you are an investor with at least a 1 year time horizon, these opportunities come very, very infrequently.
Okay. Mitesh, same question to you on HDFC Bank?
My view is slightly different over here. I was looking at the monthly, weekly, quarterly charts. I think 750 is an important average, and then you have about 715, 715. Maybe, the decline will get some arrest in that zone of 750, 720. But in case we start breaking below that and the indicators have broken down, that's why I'm slightly worried, then I think the stock might even correct further. So, yes, I think, people who want to look at a short-term trading point of view around 750, 720 zone, if you see a reversal sign, a long is definitely feasible. But for the long term, I don't think this is a good stock. As of now, I think it's been underperforming the markets, plus the long-term charts are slightly on the weaker side.
All right, that's the call on HDFC Bank. Let's get in your own technical trading ideas for the day, Mitesh.
Yeah. I have a mix of buys and sell, and obviously with the markets showing this kind of a negative opening, the sell side calls are more, but I managed to find a buy call as well. So on the buying side, the sole call is Mazgaon Dock on a mild negative opening. Try to buy it around 2440, 2435. With a stop below 2400, look for targets of 2525. The rest are on the sell side, and because of the gap down opening, you might have to worry about the risk reward equation and see, what sells can be executed. But the first one is Apollo Hospital. Sell with a stop at 7505 for targets below 7400. Bajaj Finserv is a sell with a stop at 1809 for targets of 1755. And Solar Industries, that's a sell with a stop at 13930 for targets of 13100.
So Mazgaon Docks is the only buy idea for Mitesh this morning. Sudarshan, yours?
Well, it's mainly buying. If there's a 500-point decline, you look for good quality stocks. JSW Energy is a buy. Now, the stop losses are irrelevant because they will be very different. But you traders have to identify that. But JSW Energy is a buy with an initial stop of 500. IEX is a buy with a stop under 120. Torrent Pharma is a buy with a stop under 4250. And my only short is Titan stop above 41.75. Understand, you have to adjust your stops.
Okay, gentlemen, we'll try and come back to you. For now, there is collateral damage on the rest of the private sector banks. So while HDFC Bank is the top loser in pre-open, Axis Bank, Kotak Mahindra Bank also down nearly 2.5%. And there will be some give back in IT after yesterday's big move. But HDFC Bank, clearly the top story today. Stock is down nearly 10%. Amit Tandon, MD of IAS, now joining in on the show. Amit, good morning. Last night we got rocked with the news about the resignation, the sudden abrupt resignation of Atanu Chakraborty. And he has said that statement once again will come up for you on your screen. He's observed over the last 2 years certain happenings and practices within the bank that are not in congruence with his personal values and ethics. He didn't elaborate on the practices, but the street is clearly worried, though sources have indicated to Ritu that this has not been initiated by the bank or the RBI, and there are no red flags or governance issues. But what was your reading of the statement?
Good morning. As you said, there's never a dull moment in the market. Something or the other keeps us engaged. Look, I'll begin with a disclosure that HDFC Bank owns 10% equity in IIS. What that means is that they...
We'll just cut out. Apologies. I think Mr. Keki Mistry is speaking on that HDFC Bank investor call. Listen in.
Here, our biggest treasure that we all have collectively with the members of the board. Each of them are extreme professionals. And you, as part-time chairman, is the trust and the integrity. I mean, that is a value system with which we have all grown up, and we've all been mentored in this wonderful umbrella of the brand HDFC, and we are proud of that. We'll continue to ensure that this particular trust is maintained not just now, but sustained for several years going forward. We will not do anything that will bring in ignominy. Of course, there will be a large organization, will have errors and omissions. We will continue to address them as we go along, but never will the tone of the top have anything which will have any kind of embarrassment to anyone, including our own conscience. Thank you so much.
With that, Renju, we can open up the lines for questions.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. The first question comes on the line of Kunal Shah with Citigroup. Please go ahead.
Yeah, thanks for taking the question and doing the call at the short notice. Firstly, maybe you indicated that at least there are no material matter that bank is aware about, or no specific happenings or operational issue. But maybe for such a strong wordings in the resignation letter, what do you think would have actually triggered that? Maybe that it's mentioned that it's not in congruence with his personal values and maybe ethics. So if you can highlight if there is something which would have triggered the friction which would have got created. And the second question is again, maybe it coincides the reappointment term of MD and CEO, which is now due in next 7 months. So how, since there are like board members also who are there on the call, maybe in terms of whether what would be the impact with respect to the MD and CEO reappointment, and maybe the application which would be made to the RBI, any timeline which you can suggest in terms of how should we look through in terms of this development over next 2-3 months? Yeah.
So let me try and answer that question, and then maybe some of my colleagues on the board can also step in. Firstly, let me say that we are not, none of us as board members are aware of what are the specific issues which Mr. Chakraborty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned.
Okay, and in terms of timeline, so maybe generally 6 months prior to the reappointment we see it getting applied?
I'm sure the NRC will meet as in the near future and take a call. Prashant is very much part of the bank. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years.
Sure. Okay. Thanks. That answered the question. Yeah.
Thank you. Next question comes from the line of Kaitav Shah with Anand Rathi. Please go ahead.
Hello. So in terms of, hi, am I audible?
Yes, you are.
Yes. Good morning, sir. Thank you for having such a quick call. So in terms of timeline, there was an additional message that was received by the investors that you all received the resignation day before yesterday, and the board received.
It was
yesterday. And sir, so within that timeline, you were also approved by the RBI to become interim chairman. So that happened very quickly. If you can just tell us what happened within that timeline.
All right. So let me answer that. I'm right now in Delhi. I'm not in Bombay. I was in Delhi yesterday also. There was a board meeting in the evening. After the board meeting got over and Atanuji gave his resignation letter, some of the directors of the bank went and met RBI, spoke to them, and that is the time RBI approved. So it happened at very short notice. It did not come with a 1-day lag or a 2-day lag, as you may have indicated. The letter was received by the bank yesterday evening, and they met the RBI. They met RBI later on in the evening after the meeting was over.
Thank you, sir. The speed really helps. Thank you. That was the question.
Thank you. Next question comes from the line of Suresh Ganapathy with Macquarie. Please go ahead.
Yeah. So KK, was the issue with Mr. Chakrabarty there for a long period of time? You definitely would have minuted in all the board meetings the kind of disagreement that he would be having, because these things don't happen overnight, right, KK? So it's been a 2-3 year process perhaps. The press is quoting there is a power struggle and he wanted to operate on an executive style, again strictly going by what CNBC is saying. Has there been a long period point of differences over the course of last 3-4 years?
Well, differences on minor issues do come up from time to time, but there was nothing material whatsoever. Let me reassure you, in no board meeting has there been any kind of, complete differences of opinion or anything of that sort. And the board minutes will reflect that. Relationship, human beings are human beings. There will always be some relationship issue between individuals. Those kind of things happen. There was no power struggle in the bank, as you put it, Suresh. The bank works, the entire bank, the management team in the bank works as a cohesive unit, and to my mind will continue to work as a cohesive unit. When this thing happened yesterday evening, the first thing the board members did, people who were in Bombay, they met RBI, spoke to RBI. RBI gave their approval for making me interim chairman for a period of 3 months to just stabilize things and then move on. So that's the background. And differences of opinion and differences of views may always be there between individuals, but there was nothing, I repeat, nothing substantive, nothing whatsoever. And believe me, as I mentioned earlier, at the age of 71, I would not take on this responsibility for 3 months if the systems, processes, governance practices in the bank did not align with my principles and my level of integrity.
Thanks, KK. That is reassuring. Just one more thing. Of course, we talked about power struggle at the board. There
was no power struggle at the board. Absolutely nothing.
But what about power struggle at the employee level between the CEO or the DMD or the CXO? Just again, that also comes in. Is this also functioning well?
No. KK, you can join, but I would like to address that question of young Suresh. Number one is, Kaizad is a very dear colleague, and I have the highest regards and respects for him. We have worked together. Unfortunately, I do not know what kind of stories are going around, but today that manhandles the entire business, the asset business of the balance sheet, which reflects the kind of respect and stature that he commands within the organization, both at the board level and at the management level as well. So that will continue. In fact, he will only get more responsibilities as we move forward. And the very fact that we were all unanimous, both at the board level, to send his name for yet another term as a deputy managing director reflects that. And we're extremely happy that the approvals have come, and he's going to be there for next 3 years, which is going to be one of our best years in the history of the bank. Thank you.
Okay, that's clear. Yakik, you want to add something, or this is fine?
No, I would add to what Shashi said. There is complete, let me repeat, complete and absolute unity in the management team.
Sorry, just one last question I have to squeeze in. How are the regulators, you have in Delhi, you have of course met, how are the regulators, the government, the SEBI, the board, everybody is looking at this particular thing? Because you need to get the shoe-in of the regulators at this point in time, right? So can you give us a clarity on that matter?
I have not come to Delhi to meet anyone. I come on a personal visit with my wife, so I'm really on a holiday today. But so I've not met anyone in the government, and RBI, my colleagues on the board went and met them yesterday, and maybe someone may want to speak on that.
So there were 2 whole-time members and 2 independent members who had visited the regulator. The regulator heard us out. He obviously, was very supportive of the fact by his demonstration of approving Keki Mistri's appointment as an interim part-time chairman in the shortest possible time. That reflects, as Keki mentions, a very strong messaging to the world at large. And I think, they have been undertaking a lot of their supervision, in their supervisory cycle, a lot of examinations, both off-site and on-site, which we have navigated right over the last 5 years in the recent past. And I think we have been whilst these examinations are not in the public domain, but I guess the fact that, we continue to remain in our positions says it all. Where there has been extreme amount of confidence to the respective independent committees, whether it's the audit committee, whether it's the risk policy committee, which are the fulcrum in terms of governance, controls, and of course we have the NRC committee. These are all manned and by independent directors with strong vintage, credibility, experience, and stature. And some of them are on this call, and they have, as I said, they have very comfortable with the functioning of these committees, who in turn oversees the operations in every aspect of it, whether it's risk management, whether it's compliance management, whether it's audit management, etc. Yes, any organization, whether small or big, will have issues, but these are all addressed at every point in time, and whatever is pending would have a lot of timelines, and these are the things that goes on in a very normal and a calm manner.
Okay, thank you.
Thank you. Next question comes from the line of Prashant Periwal with BlackRock. Please go ahead.
Hi, Sachin team. Look, so far, whatever I've heard on this call, it doesn't make me any wiser than I was an hour ago, right? So, we've not seen, chairmen in India resign and quoting that they did not like, what was going on. It's basically a very scratchy remark, right? People could resign because of personal reasons. Generally, that's what we see in India. So there is something. Would you kind of open up and, try and build some confidence with your investors? What exactly was it? Because he was the chairman of the bank. I mean, he was not like any other employee that resigned, saying something and means nothing.
Yeah. Well, let's get... that's the call, by the way, and I think it's a pretty strong, united front that HDFC Bank management is presenting to the markets. And important that, this was arranged at 9 o'clock in the morning, right before markets open. And you can see the impact. The pre-open initially showed a 10% downtick on the stock. And I think it's basically recovered the entirety of it, 5 or 6% lower. We reported shortly after 8 in the morning that this perhaps is the result, the resignation perhaps is the result of internal differences between Mr. Chakrabarti, who stepped away, and others. That Mr. Chakrabarti, according to sources, of course, there was sort of trying to function in an executive way while he was in a non-executive position. So it was those things that nothing to do with regulatory or how the bank is lending or the actual core business of it. So analysts like Suresh Ganpati of Macquarie quoting that CNBC story in that interaction with Mr. K.K. Mistry and Mr. Jagdishan as well. The call is on. We'll put out any more highlights, details, etc., which is said in the call on the screen as we go along. We've kept Nilkant Mishra waiting for a while. He's head of global research at Axis Capital and chief economist at Axis Bank. Nilkant, good morning and apologies, but we had the HDFC Bank story.
No, this is very important.
And thank you for joining us once again. So just the, it's everything. It's every day, or not every day, but maybe a couple of weeks, something new comes up, which seems equally urgent, pressing, world-changing. And now this is the Iran thing, right? Nilkant, what is your sense? Doesn't look like there is an end in sight. At a macro level, top-down level, how important is this for India?
No, this is very important. Whenever in the last decade I've been asked what is, when I share my bullishness on India with investors, global investors in particular, when I'm asked, what do you think are the risks? And I say, we import nearly 50% of our dense energy, and that's a big risk. And so that vulnerability does get exposed at these times. So if oil prices stay elevated, we lose significant amounts of growth. It's a one-time impact. We see some inflation effect, which is a one-time impact, and potentially the need for a currency adjustment. So this is a very important development. But at the same time, I don't expect it to last long. Now, which is what I think the market expects, the oil market expect, everyone is, even companies. In fact, companies are thinking that, we have 2-3 weeks of inventory, but I think it'll end before that. The concern I have is that we are now, perhaps it will end only when the market panics. So it's one of those catch-22 kind of scenarios where the two parties that are affected, one party is, of course, taking out leadership, is reducing the capability to make ballistic missiles and all that. But the other side is saying that, look, for us, it is about survival. So we have enough to survive, and that we will keep the Strait of Hormuz blocked. And remember that 7% of world energy supply is blocked. If this lasts more than 4 weeks, 4 more weeks, I think the risk of a significant global recession is quite meaningful. So that's the call, right? So how long can the regime persist? The other side is now starting to escalate. So you must have seen that some gas fields were hit yesterday. The risk that in the accident or in the retaliation, some mistakes are made. In many of these battles, thousands of aircraft are flying. There are so many missiles being shot at. There could be some error with the map. There could be some AI-generated error, and mistakes can be made. So I think those risks are high. And therefore, the invading parties may only pull back if they see pressure from the financial markets. So if this does not end by mid of April, I think the markets will start to panic, and that's when perhaps the end of the war will be visible. So I don't expect this to last 1 year either way.
But you did say if it lasts more than 4 weeks, correct me if I'm wrong, if it lasts more than 4 weeks, perhaps a global recession is likely.
Yes,
okay.
Because
this is we are wrapping up the 3rd week, Nilkant, now, right? So you're basically saying one more
No. 4 weeks from now. So mid-April.
4 weeks from now. Okay.
The point is, you see, we have taken out 7% of world energy supply. So 32-33% of world energy supply is crude oil, and 20% of that is stuck. The 25%, 24% of world energy supply is natural gas. 2.5% of that is stuck. It flows through the Strait of Hormuz. And so if you do 32 into 20, which is 6.4, plus 2.5 into 24, which is 0.6, that's like 7% of world energy supply, which is stuck. This is the one-on-one. So you will have efficiency gains, you will have substitution effects, like India has substituted to some extent the gas that was sent in or used in power plants, shut that down, and of course switching to coal. Other countries will be doing the same. Some have reduced the less economically important parts of their economies. So maybe 1 or 2% can be offset, but 4 to 5% of impact on world GDP in this last 1 year is I think, and remember that there are second order effects showing up. So we now have real estate companies wanting to write to RERA that projects are going to get delayed because tile supply is stuck. There are retail companies which are slowing down their store expansions because tiles are not available. There are auto component companies which are struggling to get carbon black. There are issues with LNG supply in certain parts of auto manufacturing, which can actually start affecting auto production. So the second order effects of this, and remember there's going to be global impact of this. We saw in the newspapers today that some workers are exiting Surat, the textile plants, because they can't get LPG cylinders. So the second order effects can be quite. Now, the reason why I think everyone, including companies and markets and investors, are reluctant to sell, and frankly, from 1 year perspective, that is the right thing to do at this stage. But this inventories don't last forever. And I think these supply chain disruptions will get really extreme with every passing day. And at some point, I think the markets are likely to panic. And when they panic, I think everyone who's thinking that when they panic and the market panics and it falls, I will go and buy, will actually be questioning. It will have to get to that level of intensity. And that's when I think the invading parties start to pull back. So that's the likely outcome. Either way, this cannot last 1 year because it's going to be too painful for everyone from US to China, all the parties that are involved.
So if it lasts for 4 weeks from here on, mid of April, what, according to you, will be the impact on global GDP and India's macros, Neelkant? And in that context, yesterday there was a lot of discussion on what benchmark we should use, whether we should use Brent crude prices or whether we should use India's crude oil basket, where the levels are much higher, $140, $145 per barrel.
While interesting discussions, I think that the impact is way more significant. So it is look at oil prices. See, normally, commodity pricing, everyone is used to doing cost plus kind of analysis, right? So you put a cost curve, say that zinc, the 96th percentile of producer is at, say, $2,400, or I don't know what that number is today. And therefore, zinc is going to be at 2,400. I've heard people saying that, look, oil storage costs have gone up. So now every week or every month, this is the dollars per barrel that rise. I don't think that is how oil will be priced now. Oil, now the pricing has to destroy demand. So if, say, 5% of world energy supply is gone, and if you look at it in crude oil terms, nearly 40% of traded oil is gone, you need to destroy that demand or reduce that demand. And therefore, so the prices keep going up till some buyers say that, at this price, I can't buy. So we are seeing that some of the weaker countries are, their fertilizer access has gone, they're reducing transportation, in some places ATF is in shortage. So those things will start to happen. Whatever the price is today, I think the fact that there is a physical shortage of energy. So if there's a 4 to 5% net energy supply problem, there is a 4 to 5% of world GDP which is at risk. So it's as simple as that. Now, The reason why no one is feeling that right now is that there are inventories in the system. There is anticipation that we shouldn't panic, we shouldn't sort of upset our customers. But as the dates pass and the panic starts to set in, as inventories start running out, is when I think the markets start to really worry. Now, we should only hope that in the urgency to close the conflict, that mistakes are not made. Meaning that just like that unfortunate incident of the girls' school in the first wave of attacks, if the maps are not updated, or if there is an attempt to take out, say, some senior person, and in the process some energy facility is hit, and in retaliation, Iran ends up hurting the energy production facilities, which then take 1 year to go up, I think then the market panic becomes quite severe. And perhaps that is what is needed for a proper negotiation to happen. Because I think the strategic intent of regime change, which was stated very early in the conflict, it is clearly proving to be much harder to do. So one side is trying to survive long enough that the markets can get under pressure. The other side wants to end it before the markets come under pressure. The one outcome I see here is that markets come under pressure is the important signal for this conflict to end.
Nilkant, it's quite crazy, right? The way this is being fought. I mean, taking out leaders. I mean, it's in a way unprecedented, the way it's being fought as well. But so many things are now, they seem unprecedented. I mean, straight away taking out the leadership, top leadership, and we didn't see that kind of stuff, right? So
yeah, and it sets a very bad precedent. So if you see like the Pakistani attack on the Kabul hospital, and 400 people died, it's like there are no more rules, no respect of boundaries, borders, and so anyway. But see, the statement that you started with, that every couple of weeks you see some challenge like this. Look, this is a 15-20 year readjustment which the world is likely to have to go through. And we're not, I mean, the one thing we haven't discussed, and perhaps this is not the right forum right now, is AI, the impact of AI on economies and supply chains and all that. But the readjustment that the Chinese consume too little, produce too much, that the dollar is too strong, the fact that and this seems to be an attempt by the US to if you think about the Panama Canal, the Venezuela change, the Cuba change, now the Strait of Hormuz, perhaps other straits which are, or maybe even Djibouti and the Houthi rebels. So the effect on trying to control the choke points, the global supply chain choke points, these are all parts of a much longer strategic battle. Strategic war, and which is going to continue as these are occurrences because of that. Yeah, sorry.
Just a quick 30-second response, Nilkant. Will FIIs make a comeback? What will it take? And two, around 23,000 levels, are we at near fair value?
I do think so, but remember, as I said, it will be market pressure which will bring an end to this battle. So it's very hard to say if this is it, and whether the end of the battle will also mean. Remember, there's a non-linear impact on energy prices over the next 1 year. So a 4-week battle will mean that 3 months it could take 3 months for oil prices to normalize. If it lasts 4 weeks more, it could take 6 months for oil prices to normalize. So there is a very non-linear impact on energy prices. And so how long this goes, how far it goes, we don't know. The moment the war ends and oil prices start falling, there's a lot of inventory that will come into the market. I think that will be a big relief, and that could bring the FIIs back. But frankly, those are not the signals which are currently very important. I think what we have to see is what kind of market pressure is necessary for the two warring parties to come to a settlement. And remember, China is also party to this, meaning that when the US-China summit is postponed, it is clearly the US trying to tell China that, look, we need you to act on this. And so both sides, I think, will perhaps are waiting for the economic stress to get to a point where a consensus is forged. And that may not be very, very friendly to markets.
Yeah, and I think Iran, of course, is half jokingly, but I think maybe it's true that while Israel and the US are are fighting actual battle with, and actually both are fighting actual battles, but fighting Iran is fighting the S&P 500. Right? I mean, I think they've realized that that's the leverage that they have. Disrupt markets enough, markets panic, and then there is that reflection.
And this is, Prashant, just 10, 15 more seconds. This is how the modern wars are fought. There's a nice book written by two Chinese colonels in 1999, which talks about this, that if the opponent is too strong, try to find a weak spot and then latch onto it. And wars are no longer going to be only fought on battlefronts with missiles and soldiers.
Yeah.
It could be fought in financial markets, in trade wars. And I think those things are now clearly becoming obvious.
All right, Neelkanth, thanks very much. Good conversation. And we will get you back on with that AI bit, right? That's a whole other conversation which we will address. Thank you for joining us. Nigel, you want to come?
Well, just one quick point on HDFC Bank. The low that they made today was around 770 rupees. I was looking at the value of subsidies. If you look at the forward basis, it'll be close to around 120 to around 140. Take it at around 130 rupees. So if you say that in the stock at around 800 rupees, deduct around 130 rupees or thereabouts, it comes to around 670 rupees for the core business. And I was looking at the forward book value. Most estimates are in the vicinity of around 440 rupees to around 450 rupees. Hence, on a standalone basis, HDFC Bank will be available at sub 1.5 times, which is the cheapest we have seen in many, many years. So for the time being, you're seeing a sharp drawdown on the stock. The low of today is around 770 rupees. It appears the near-term headwind is there with regard to the news flow, but valuations are actually the lowest we have seen in multiple years. I think it's even lower than the COVID multiple of around 1.6, 1.7 times or thereabouts. Just wanted to put that out. Value of the subsidies around 130 rupees. Book value at around 450 rupees, so around 1.5 times.
And that's the point I made in the morning. 1.7, cheapest in 20 years. Yeah. But we didn't know the clarification when, at that point. Now add that valuation bit to the clarification that there is no actual issue in terms of how the bank is run, lending, etc. The core business, I mean, this is basically internal differences. People couldn't get along or whatever. So then, I mean, I think, if you take that and combine both those, I'm not saying that this is the time to buy, but in terms of thinking about downsides, I mean, I think there isn't very much, and I think the market's reflecting that. Already about 5% off the lows of the day at about 800 plus.
Yep. A point to buy, we don't know, but maybe it's not the time to sell.
Exactly.
Probably.
Exactly.
Yeah. And not to forget that Asia is weak today. So the Japanese index has extended the loss and is down nearly 4%. The Korean markets are down 2.5%. Taiwan is down over 1%, 1.2% cut coming through on the Taiwanese market. And there you have, Hang Seng is down 1.8%. And HDFC Bank is a stock where the FII holding stands at 47, 48%. So if there is a flight of capital away from the FIs, if the FIs are selling, then HDFC Bank comes under fire, news or no news. But let's invite the management of SIAT on the show now. Arnab Banerjee, MD and CEO of SIAT, is now joining in. And some of the discussion points that we'd like to talk with Mr. Banerjee are up for you on your screen. Mr. Banerjee, let me begin first with the raw material. What has been the spike in your raw material components in Q4 as things stand today? And how much of that are you planning to pass on?
Right. So in the first 2 months of Q4 itself, there have been some increases over Q3, especially the synthetic rubber side. It went up by about 8 to 10%. Even natural rubber went up by 8 to 10%. And in March, we are witnessing a further spike over the Jan-Feb level by about 8 to 10% further. So significant spike. But in the pass-through, there will be less impact in Q4 over Q3. So our raw material price in Q4, which will hit the P&L, will be much lower. It will be slightly higher than Q3, but the major impact will come in Q1. Having said that, the price increase actions have already started. We have increased prices in aftermarket by about 1% and plan to increase further within March as well as through the month of April. OEM prices are indexed, so they will go up as on 1st April by about 2.5-3%. And we have announced price hikes in international markets as well for about 3 to 5%. Again, there's an order book, so the pass-through will take some time through the month of April and into the month of May.
Okay. What's been the aggregate increase in the raw material basket as of now, January to March?
January to March, the felt increase will be less than the actual increase in terms of buying raw material because of inventories and pass-through. So we will be slightly higher than Q3, but not significantly higher than Q3 in Q4.
Okay. Would you like to put a number? And therefore, what happens to margins? Your gross margins in Q3 were 40%. I think EBITDA margins was about 13.5%.
Yes, in terms of gross margin, the slight impact of raw material that we have in Q4 will impact gross margin to that extent, but it will be minimal. As I said, the impact will be felt much more acutely in Q1, and hence we have started acting on the price increase to mitigate that impact.
From April 1st, prices go up by how much? You will try to put it, I think, in a staggered manner, right? Push up prices.
Right. So our intention is overall replacement should be 2 to 3%. Starting March, 1% is already taken. And the balance will be taken by the end of March or through the month of April. So that is replacement. OEMs are index pricing, so it should go up as on 1st of April. Again, we expect around 2.5%, 3%. The international business is where we have an order book position, so pass-through will be slightly delayed. But we expect around 3% to 5% over April, May, June.
All right. And typically your inventory that you hold is for how long, sir?
Finished good?
Yes. No, your raw material inventory, because that will, you'll get hit with a lag. So I ask.
Yeah, exactly. So raw material inventory is very, we are now holding very low inventories for domestic raw materials. But international raw material, domestic will be just about double digit in terms of number of days. International raw material is higher. So overall weighted average would be close to 25, 30 days.
Okay, all right. Mr. Banerjee, also I wanted to ask you with regard to exports. I think exports as a percentage of your mix is close to around 18 to around 20% or thereabouts. Have you seen any kind of problem with regard to container availability, the routes as well? Is there some inventory stuck at various ports? And if you could clarify on Middle East exposure, I believe it's relatively smaller. But run us through that number as well. Total exports, how much is the Middle East?
Yeah, so Middle East export is completely stopped as of now. So there is no cargo going to Middle East at all. Middle East has been increasingly diminishing in terms of saliency, about less than 20% of our overall international basket. But fortunately, we have had good order books in the other parts of the world. So we have been able to divert production and to those other markets because of healthy order book. And our impact on international business sales will be very minimal in the month of March. But going forward, if Middle East stays suspended, we have to ensure, and we are doing that, to keep the order base healthy for Europe, LATAM, and the US and Southeast Asia, so that we can manage our sales volumes accordingly. But Middle East sales is currently absolutely zero.
And exports to the Middle East as a percentage of revenue would be?
Is less than 20%.
That's the overall exports. Just purely Middle East where sales are suspended?
Yeah, Middle East versus overall export is 20%. Overall export is 20% of sales.
4% of the total mix.
Yes.
Okay, all right. And the point you wanted to clarify with regard to availability of containers and logistical issues for the remainder of the exports, ex of Middle East?
Yeah, container availability is increasingly going to be a concern. We are managing somehow now, but gradually the availability issues are raising its head. And freight charges have gone up. So we have increased the freight surcharge recovery from our customers. So that is how we are going to mitigate that. On the raw material side also, the freight has almost doubled. So freight is going up, which we are trying to mitigate from the customer side. And container availability, I think, increasingly will be an issue, which could be a disruption going forward.
Okay. On account of the LPG shortage, has production been impacted for you or any of your vendors?
Well, for us, the effect has not been great because we have had alternate fuel arrangements wherever the impact could have been there. So production goes on unabated as of now. There are some small impacts. For example, in our canteens where LPG is used, it could be a problem going forward. So we have to make arrangements, alternate arrangements for food for employees. For our vendors, yes, gas is a critical ingredient to maintaining their production lines. So far, we have visibility up to inventories, for our inventories, raw material inventories of April and May. Business continuity is very important, so we are ensuring the availability of raw material, which we can see more or less up to April and May, there's no issue. But increasingly, yes, disruptions in supplies and increase in price is expected if the war doesn't stop right now.
Right. Just very quickly, Mr. Banerjee, you would have an idea about what's happening in the auto component ecosystem, right? I mean, it's usually the weakest guy which breaks the link, and then it's an effect which is felt across the ecosystem. Is that starting to happen? We had Neelkant who was talking about second order effects earlier, right? Is that happening? That kind of disruption? I'm not talking about your business, but in the auto ecosystem.
Not yet felt because of inventories by the players and the second level, the tier 1, tier 2 suppliers. But it is imminent if the war prolongs. Then those second order disruptions are likely to happen. So everybody is scrambling for business continuity at this point of time, visibility of raw material stock. We also are doing it. We are caught between this as well as the probability that the war will probably stop and sanity will prevail. In that case, we also don't want to get stuck up with very high inventory at very high prices. Yeah. So essentially, the strategy around and with CEAT is to buy for production. And we are buying in lots of every 10, 15 days. And in future, those disruptions will become more real if the war prolongs.
Yeah, absolutely. And hopefully this does not lead to actual demand destruction. And we'll see. Mr. Banerjee, thank you very much for joining us. Good speaking with you and appreciate your time here on CNBC TV 18. We'll take a break. Nazara Tech will be joining us on the big acquisition that they've made. The announcement came yesterday. Stay tuned, coming up. Welcome back. Markets looking pretty bad, right? 2.33% lower as things stand. We have the Nazara management with us. Now, Nazara, the UK arm of Nazara, will initially acquire a 50% stake in Blue Tile and Best Play for 918 crore rupees. The remaining 50%, is going to be acquired by 2028 at a valuation based on 6.6 times trailing calendar year EBITDA. So let's just get the transaction structure out. It's a big one for Nazara. Nazara, of course, has done many acquisitions over the last few years. And but this, in terms just the sheer size of it, this is a pretty large one. Nitish Mitterson is joint MD and CEO of the company. Is with us. Nitish, good morning. Great to have you with us here. And I dare say congratulations. It's a large one and it's overseas. And that is immediately, the worry is such large capital allocation outside the country. Is it advisable? How's it going to work out? Etc. But we'll get to that in just a bit. Tell us a little bit about the transaction structure itself. In total, what are you going to be paying?
So the transaction is, of the acquisition of Blue Tile Games and Best Play Games. They're two sister companies that Nazara UK has acquired. Nazara UK is a 100% subsidiary of the parent entity here in India. So the transaction is really structured in a three-way manner. We do a 50% up purchase upfront, where we get controlling stake, for which we pay about $101 million. Then, as you mentioned, in 27, 28, we buy the balance 50% at a 6.6x of EBITDA in the trailing year. To set a perspective, their revenues were USD 153 million for 2025, with a EBITDA of about 28 million USD, and it's been a fast-growing company. What's really important in this particular opportunity is that the team is a very high-quality team. The founder is an ex-Google founder, and they come from most of the leading gaming companies, global gaming companies. So retaining this team, especially because they're doing excellent work in the space of AI related development of gaming, is very important for us, because it's not just that they will continue to leverage AI for their growth, but we can use a lot of their technology and knowledge base to also significantly accelerate the adoption of AI in the rest of our businesses. So I think retention of the team was very important. So we also have earnouts that start in 2028 all the way to 2030, which would be, in our estimate, a most probable estimate of about 90 to 100 million, $94 million to be precise. So I think that's the structure of the deal. The good news is that the company is...
Right. And Nitish, if I can come in, sorry, the earnouts mean exactly what? You will pay, provided the operating team reaches certain thresholds.
Yeah, think of earnouts as incentives or whatever you call it. It's really, we will pay on an annual basis based on them meeting certain projections that have been baked in today on forward numbers. So it's performance linked, and the whole deal is structured in a way that is, Nazara gets significantly de-risked, and only if the team really performs well.
So the total size is what, including these earnouts and everything? If they achieve these targets, for you to own 100%, what's the total value that you'll be paying?
So because there are many variables, there's going to be a range of it. But if I were to call a most probable range, it would be in a $300 to $350 million, including the earnouts, payable till 2030. And a lot of the earnouts, etc., will be paid out from the cash generated in the target companies.
So this is you have to pay this, say, $350 million, including earnouts, right?
Yes.
By March of 2030.
June of 2030.
June of 2030, this has to be paid out.
Yeah.
And this 100 goes out now, and the rest of the 250 is, some portion goes out every year.
That's right. But the first payout will probably, after this, happen in 2027. Yeah, so next year.
And how is this being funded, Nitish? Give us a sense of that.
Yeah. So the initial payment will be, the initial 100 million is also broken into two components. It's $60 million on closing, which would happen in the next 2 or 3 months. And the balance 40 million after 6 months from closing. Significant portion of the upfront will be funded through our own existing capital. The remaining could be paid up to 25% in Nazara equity. Also, the cash generated from the target companies, and especially any additional fundraisers or debt that we may do to structure the financing over a period of time.
So you will perhaps need additional equity or debt fundraise to fund this?
At some point of time, yes.
At some point. How soon do you think? Because the payout is till June 2030. When do you think you will need to tap the external funding route?
Yeah, I think our funding is not usually, dependent or focused on just one transaction. As you know, we are active in the M&A space. And I think this particular deal, because this is puts us really on the global gaming backdrop in terms of the scale that we have done, and it's putting a lot of other opportunities on the table. So we will see the opportunities as they come and fund the company as required. But we are very confident that any funding that we do, any dilution that we do, is going to be extremely accretive from a per share cash basis.
And will these acquired companies, Nitish, also in turn own stake in Nazara Tech?
It depends. If we issue equity, like I said, in this particular transaction, the second payment onwards, we can issue up to 25% in Nazara equity. So depending on what we do, they could hold some stakes in the credit.
So 100 million, say 60, you said 60 goes out now. So 60 million goes out now.
Yes.
And 25% of the remaining 40 million can be paid through stock.
No, the first 100 million is all cash.
All cash.
The second payment would be, when we buy the next 50%, and the earnouts after that. Those would be up to 25% in equity.
Okay, so can you put numbers to it?
Yes, sure. I think the FY27, FY28 purchase of the additional 50% would probably be in a range of 120 to 140 million. And 25% of that would be paid in Nazara equity. Like I said earlier, the earnouts which are due between 2028 to 2030 would be in the 100 million range, again of which 25% could be in it.
So, so basically about $30-35 million could be paid out in
Nazara equity.
In Nazara equity.
But over the next few years, I think it's important to understand that.
By FY28, you said, right? By the next tranche has to be paid out by $150 million to be paid out by FY28. Right. And out of that, 25% can be paid in Nazara equity.
Yes.
Yeah. And just what is the total amount of fundraise you will have to do for this cumulatively over this period?
We haven't, at this point of time, calculated from a fundraise perspective, because again, important to understand Nazara's existing business is also generating cash. And we will, obviously, our attempt will be to fund as much as we can internally and not go for fundraise.
On the outside, Nitish, I mean, I'm sure you would have worked out the financing. So just give us on the outside, what is it?
Maybe over a period of time, I would say, 1,000, 2,000 crores kind of number.
1,000, 2,000. Is it 1,000 or 2,000?
Like I said, it's a wide range because we are doing many other activities. We are not only doing this particular thing. We are funding our existing businesses. So it's difficult to put a very sharp number on it, right?
But closer to 2,000 crores in fundraise?
But not, again, just to clarify, not at this point of time.
Yeah, I know. Yeah, over the next few years, because this has to be paid out by FY30.
Yeah, but again, look, I don't want to put a specific guidance here because it's possible that next year we may have like I said, this is a stepping stone for us, for Nazara to become a global gaming giant out of India. And it's possible that next year we may have even a larger opportunity or a more attractive opportunity. And therefore, I really don't want to guide the market saying I may raise only 2,000 or 1,000 or 500. We'll see how we'll do what is right for the company.
Okay. So you've told us the acquired companies, both of them, have a combined revenue of $153 million with an EBITDA of $28 million. What else does it bring to the table? Because it opens up the whole avenue of casual gaming for you.
I think 22 million monthly active users currently. Total downloads of these 17 games, about 375, touching 400 million till now. About 10 million installs a month. But more importantly, they have a very unique proprietary platform called Best Play, which is really an internal user acquisition, discovery and monetization engine. And I think that can be very, very useful for the existing Nazara businesses and also has a lot of scale opportunity. The other really important thing in this particular one is the use of AI. All of us have been talking about how AI can negatively disrupt industries. But I think in the gaming space, if we adopt AI very actively, there can be a very strong tailwind coming from AI, both in terms of revenue growth and margin expansion. And this particular team and company has been using AI very effectively. And we're hopeful that we will also adopt that at the Nazara level across our different businesses through this acquisition.
Okay. Got that. And these acquired companies also generate cash? Because you also said that you will use the cash generated by the two companies to fund the acquisition.
Of course, they are highly cash-generating businesses.
So this will be EPS accretive from year one?
I'm not sure about EPS at this point of time because we're working with our auditors to see how the amortization of intangibles would really play out. But it would be highly EBITDA accretive. And it would highly be, if you were to look at it from a cash generated per share, it would be highly accurate.
Okay. Do you have numbers of what the consolidated entity, because you will be acquiring a controlling stake, what would Nazara's numbers look like for, say, next year?
Yeah, if you look at our 9 months numbers for this year, we did 1,431 crores of revenue and 177 crores of EBITDA. I wouldn't be able to share the Q4 numbers yet. We're still in Q4, but you can extrapolate to see that this company that we're acquiring is almost as large as our existing business. So at the least, we should be doubling next year, and with organic growth of both businesses, hopefully more than that.
Okay, one final question, Nitesh. Does this signal that Nazara is ready for bigger acquisitions? You've made many acquisitions in the past, but this appears to be one of the bigger ones, going up to $350 million in terms of a total payout.
As I've shared a couple of points earlier, one, we decided about 18 months back to refocus strategically on the core gaming business, which is why also certain things that we did, like deconsolidation of our esports business, etc. So we're sharpening the focus of the company significantly. We see this as our biggest opportunity to really create a global gaming giant out of India. And the last 7-8 years of M&A activity, working with a diverse company, not only in India but outside, has also given us confidence to be able to take bigger steps. Yes.
Yeah. Got it. We'll just, we'll leave it on that note. Thank you very much for joining us. Appreciate your time here, and wish you all the best of luck. We'll sort of, keep chatting as you continue to sort of close this acquisition and continue to execute. We'll take a break. We're back on the other side. Vinay Rajani of HDFC Securities on the other side. Do a quick technical check on things. The market fell down heavily.
Welcome back. It's a dismal looking screen. It's more than 500 points down on the Nifty. It's 23,250. The immediate line of support from here on will be Monday's intraday low of 22,950. So we've still got about 300 points to go from that. But for now, the Nifty's down close to about 530 points. Vinay Rajani, HDFC Securities, is now joining in on the show. Vinay, thanks for joining in. What are you all doing? Down 500 points at open. Any trade?
Yeah, good morning. So after 900 points recovery from the lower level, Nifty has resumed the downtrend. And as you rightly said, that it is very important that Nifty should hold above the 22,955, the Monday's low, because breaching of that will resume the downward momentum and we can even see a further lower level. So technically, primary trend has been bearish. Now it is all we need to see is that whether it is protecting this 22,955 level or not. But as far as breadth of the market is concerned, that is also suggesting that weakness could continue because the percentage of stocks above 200 DMA in NSE 500 are still at 28%. So in the history, we've seen that this number nearly bottoms around 10 to 13% reading. So this number is still at 28%. This suggests me that the weakness in the broader market and overall sentiment of the market will remain bearish. Though we have to see the Nifty. So Nifty, we are asking traders to, those who are holding, can keep a tight stop loss at 22,955. And the recent resistance, the yesterday's high will act as a strong resistance. So primary trend is bearish and one should remain cautious in the market. That's what we feel at this point of time.
Stocks, Vinay?
Yes. So we have seen some breakdown, short-term breakdown on the silver as a commodity, and that can be seen, the weakness can be seen in the Hindustan Zinc. Also, the metal yesterday fell in the global market. So Hindustan Zinc has given a fresh breakout on the charts, and yesterday there was a short build-up also in the derivative side. So we feel that Hindustan Zinc March future can be shorted here around 521. I would suggest to stop loss at 531. On the downside, I'm expecting a target of 500. The second stock I would pick from the real estate space, which is clearly struggling in this particular scenario. So Lodha is looking weak on the chart. So Lodha March future can be shorted around 830. Stop loss can be kept at 848. On the downside, I'm expecting a target of 805.
Got it. All right, Vinay, thanks a lot for joining in and giving us all of those details. For the time being, the markets are under pressure and the Nifty Bank is getting absolutely slammed, down more than 1,000 points. And the key reason is HDFC Bank. So let's revisit that story. Ritu joins us to run us through details on that story, what was said in the con call, and a brief check in terms of valuations. Ritu, take it away.
Good morning. Thanks for that, Nigel. To briefly recap for our viewers, Atanu Chakravarti resigning as chairman of HDFC Bank, and our sources indicated that this resignation was very much a personal matter. To clarify yet again, it was not linked to the conduct of the bank or any kind of regulatory or governance issues whatsoever. In fact, top sources indicate to us that the regulator does continue to have comfort with the functioning of HDFC Bank. There are no red flags on NPAs or governance or anything of that sort. Our understanding is that the resignation stemmed from the friction between Atanu Chakravarti as the chairman working in a very executive style in his non-executive position as a part-time chairman. And that's something that has been a cause of friction for many years, culminating now in this resignation. That said, the exit was neither RBI directed nor board directed. It was very much a personal issue. And as we have been reporting, and this is something that was confirmed in the con call that was just held, the board repeatedly asked Mr. Atanu Chakravarti in last night's meeting the reason for his resignation and specific governance issues, but he said there was no regulatory matter to highlight. It was that his values did not align with that of the bank. Now, in the con call itself, you had the chairman who is now taken over, KK Mistry, for a 3-month term, during this transition period, reiterating that there is no material impact to disclose. There is no specific practice or issue that has yet been brought to the board's attention. For Mr. Atanu Chakravarti to resign in this manner. He maintained that the board has oversight. It is fully operational. The strategic direction, business priorities, they do not change at all. And repeatedly reiterating Mr. KK Mistry that at the age of 71, he would not have taken on this role if the bank's governance did not align with his own values and integrity. Sort of again pointing out to some of the comments that have been made by Atanu Chakravarti in his resignation letter, with KK Mistry even going on to say that there is no embarrassment to anyone's conscience. Their conscience is clear. And he also said no board member was aware of any specific issues that Mr. Chakravarti cited in his letter. In fact, he said some of the board members met with RBI yesterday and that RBI has so far been very supportive of the bank. They're very, fully involved in the picture, and their comfort is reflected in the fact that they immediately approved KK Mistry's appointment at such a short notice. Again, KK Mistry highlighted that perhaps there were differences between Atanu Chakravarti's thinking and the bank's own thinking. And there was nothing beyond that. Now, the other point of contention that was, called on by some of the analysts was that the CEO Shashi Jagdishan's own term, the current term, is set to end in October, and whether the bank is looking at extending that. To which KK Mistry very clearly said they back Shashidhar Jagdishan and the kind of work he's done, and at the appropriate time, the NRC will take up this matter and put it forward before the RBI. With Shashidhar Jagdishan also chipping in that the best for the bank is yet to come.
Thank you very much for that. Sonal now joins in for more on oil and gas.
Well, that's a big developing story and has had impact on the entire market. The big news, of course, is that Iran has issued an evacuation warning to all facilities across the Gulf, especially UAE, Saudi Arabia and Qatar as well. And there have been some missiles which have hit a critical gas infrastructure in Qatar, in Iran as well, which has basically disrupted gas supplies, or would possibly disrupt gas supplies globally as well, because that would be one of the biggest gas facilities in the Middle East and West Asia as well. Now, that is one of the reasons why there's a fear that there could be more inflation in terms of gas prices. Already oil prices have hit that level of $119 a barrel. Now, UAE also has shut gas facilities on the back of that. We are talking about higher crude oil prices, higher gas prices. And, even if the Strait of Hormuz opens now, because critical gas infrastructure has been hit, it will take time to bring back production. So we could look for weeks of supply disruption despite cargoes running because of higher costs and no production happening in those facilities.
Okay, all right. We'll take a quick commercial break here. On the other side, we have the management of JK Lakshmi Cement joining us to discuss the West Asia war impact and, of course, demand trends for the sector. Stay tuned.
Welcome back. As promised, let's get chatting with the management of JK Lakshmi Cement. We have with us Mr. Arun Shukla, the President and Director of the company. Hi, Mr. Shukla. Good morning and good to see you in. The key focal points that we're going to be looking at are flashing for our viewers on the screen. Demand, pricing, how much of inventory are they sitting on? Well, Mr. Shukla, let's get straight to the point then. Could you tell us, the raw material cost spike that we have seen? I understand that both petcoke as well as coal prices have moved up. So first, what is your mix, your raw material mix between petcoke, domestic coal and imported petcoke or coal? Please go ahead.
So good morning and thanks for having me here today morning. In our case, in North and West, we have about 50% of petcoke and coal ratio. And in East, majorly we are using indigenous coal, which is, Indian coal, and some small portion of petcoke. So East, I think we do not have, much of an impact. But yeah, North, we are dependent on imported coal and petcoke. But we do have flexibility of, kind of changing the fuel mix, like more of a coal than petcoke. So we are trying to manage that. So yes, I think I suppose this is a temporary phenomena which is going to get set right as we move forward. But yes, this is one thing which is definitely, I think, is going to increase our cost in coming quarters.
All right. So, but you'll have some inventory, right? Particularly with regard to the imported coal as well as the petcoke for your northern operations. So the negative impact of the spike that we have seen in input cost, that starts flowing in the second half of the first quarter. Would that be a fair estimate?
Absolutely. You are absolutely right. Yeah.
All right. And also, since you said your East domestic coal, have you seen a bit of a spike up in e-auction coal, or do you all get linkage coal?
No, we have linkage coal long-term, fuel supply agreement. So we are not being impacted now.
Got it. The other point is that packaging cost as well has reportedly gone up. So for a company like yours, have you experienced that kind of a spike, maybe PP bags cost moving up? Is the availability as well a bit of an issue?
Yeah. I think, cost has gone up. In our case, maybe I think cost increase is not that much. But definitely because of this, polypropylene cost has gone up almost by about, 25-30%. So that is going to impact, bag costs at least by 100 rupees a ton going forward. But in our case, I think impact would not going to be that much.
Okay, so 100 rupees per bag is the likely increase, in a bit in the coming month or so, or a month and a half.
Yeah.
And if you want to quantify the fuel price increase, what would it be?
If somebody doesn't have this, inventory from previous, prices, then I think impact is going to be close to about, 250 to 275 rupees a ton.
Okay, so the next obvious question would be, what about price increases? Do you think demand is strong enough that in the next 2 months you can take this sort of a price increase to offset this 250 to 70 rupees per bag higher input cost?
Yeah, demand is good. November 15th onward, demand has been good. In March, there is little bit of sluggishness post-Holi. And perhaps I think that is going to come back to the normalcy very soon. But yeah, demand is good. Cost has gone up. Then definitely, I think price increase has to happen because we cannot really kind of absorb that much cost, 250, 300 rupees going forward. Okay. I think it's a big cost increase here.
All right, and the company we're talking about is JK Lakshmi Cement. So I think we should just, get that corrected as well on the screen. Mr. Shukla, a quick couple of other questions then. Since we're talking about pricing, the hope is you can push through a price increase. But as of now, if you have to compare the average pricing in Q4 with the average pricing of Q3, could you tell us how much higher are prices and break it up for us? If I got it correct, I think trade and non-trade for you, the mix is 50% apiece. So, break it up for us.
Yeah, so in our case, I think non-trade trade is about 56-44, 56 trade, right? Okay. And if you compare prices with respect to previous quarter, in trade, prices has not moved up. A little bit here and there, but on an average, I think that remains at the same level of last quarter. But in case of non-trade, prices have gone up a little bit. If I have to really quantify, then maybe about 10 to 12 rupees in different market.
10 to 12 rupees a bag. This point about demand, could you break it up a little bit more? Government spend has been a little bit volatile. So where has this demand really come from? From November second half, as you mentioned, demand came back in a strong way. What was your observation?
November and December, I think there was good demand for non-trade segment. And even January also to a great extent. But now February, March, I see there is a good demand coming from individual home builder segment. So trade segment, which we call it, right? So the mix of, a trigger for demand in the initial 2 months, I would say government spending and of course institutional sales demand. And the last 2 months, I would say more of a individual home builders driven demand.
Okay, and what about premium sales as a percentage of your mix? You had briefly mentioned in the past that you want to see that move up, I think 25-30% or thereabouts as a percentage of your mix. Where is it right now?
We are at about 25%.
You're at 25%, and in the coming year, you believe you can take it to 30%?
Yeah.
And premium sales, per bag, how much higher is it in comparison to normal sales?
So gross level, I think, is about 500 rupees per ton higher than the base product.
All right, so approximately 25 rupees per bag.
Yeah, yeah.
The other point is, what about this EBITDA per ton? Earlier, you all were talking about getting to that 4-figure mark. That's not really happened, right? Because of input cost going up, and now you'll struggle a little bit as well. Do you still think realistically in the coming year you can get to closer to 900 or 1,000 rupees per ton in terms of an EBITDA per ton?
Yeah, so directionally we are all right, Nigel, because our gap with respect to the leaders in the industry was quite high before. So we have been able to bridge that gap up to a great extent.
Yeah.
In fact, entire industry has gone down, below 1,000 level. You must have seen, result of last quarter of different companies, right?
Correct.
So to that extent, I think we have done fairly well, and we are well directed. And going forward, yes, I think we still believe that, and in fact, we are working on all those, levers by which we can reach to that 4-figure mark in terms of EBITDA per ton.
In sometime in FY27?
Yes, definitely. I think a little bit, I think we are around, and a lot of, levers which we have been working from before, that is going to get fructified going forward, and we are going to be comparable with leaders in industry in terms of EBITDA. That is for sure.
We'll have to see, sir, how you go about achieving that, because that's the big hope, and that's what you all have been guiding your investors. But achieving that is going to be a bit of a task, particularly with this input cost spike. But we take your word for it. The other question is on the balance sheet. You have an ambitious plan to move towards 30 million tons odd. So on an annual basis, what kind of capex spend are you looking at? And update us on the debt number. What is it?
So I think debt-wise, we are quite okay, well within the range, threshold level, right? And the kind of, capex outlay we have going forward. So about, 3,000 crore for 4.6 million ton, which we are going to expand in East. This is what is there on our platter now. For that, we have already ordered equipments, and jobs have started at the, different sites, which is at different level of, progress, right?
Yeah.
So this is what the update is. So, and then, of course, I think we do have plan for other locations also, Northeast and Rajasthan, Nagaur, where we have mining leases.
Mr. Shukla, you're currently at 18 million tons, correct?
Yeah, right.
All right. So you're looking to get to around 30 million tons. As I said, the announced capex is already 3,000 crores.
Yeah.
How much of that will be funded via debt? How much via equity?
It's going to be about, 2:1 ratio. Yeah. Debt, yeah.
So debt will be around 2,000 crores approximately, and you all will come to the market to raise some equity as well?
Sorry?
You all will come to the market to raise some equity. 2,000 out of the 3,000 crores will be debt. The remainder will be internal accruals?
Internal accrual.
All right. And very quickly, what kind of volume growth can you guide? For this year on a low base has been fairly okay. So what do you end this year with in terms of a volume number? And on that base, what can you grow at?
So industry, I think growth is expected to be about 7 to 8%, 7%, I would say. And our growth is, estimated growth is higher than the industry growth this year.
Okay. All right. And updated debt number?
I'm not, having the latest one, so maybe I think I can share that with you.
So we'll re-invite you then as you declare your numbers for Q4, and we'll get an update on that number as well.
Sure, Nigel. Yeah.
But Mr. Shukla, it's a pleasure speaking to you. Thanks a lot for giving us some clarity with regard to the ongoing war situation, the kind of impact it will have on cost, which could move up by 250, around 270 rupees. You're indicating demand is strong. You'll outgrow the industry, and EBITDA per ton moving to around the 4-figure mark in the coming year. Appreciate you joining in. Well, on that note, we'll wrap up on this edition of Bazaar, but the team of Chartbusters will be joining you on the other side. Stay tuned. War worries continue to spook investors. Gap down on Dalal Street. Key indices kickstart trade sharply lower. The volatility index is up more than 10%. All sectors bleed.
Major escalation against energy infrastructure from warring Israel and Iran push crude to $112 per barrel. Prices have surged to a whopping 50% since the start of the conflict. Approaching a fourth week, oil marketing companies HPCL, BPCL, IOCA are all down and out.
The top drag on the Nifty is HDFC Bank. Part-time chairman, Mr. Thanu Chakraborty, calls it quits. The management confirms CNBC TV18's new break. Says Chakraborty's exit is not linked to the bank's conduct, regulatory concerns. Mr. KK Mistry says that the RBI in the loop on all matters and they have been supportive.
The RBI clears Bain Capital's acquisition of joint control of Manappuram Finance and its subsidiaries. Also clears indirect changes in control and management of key subsidiaries. Jefferies maintains a hold rating, says margins are nearing a bottom. Re-rating depends on a visible turnaround.
Nazara Tech bets big on gaming, acquires controlling stake in two Spanish companies in Blue Tile as well as Best Play for around $100 million. The management tells CNBC TV18 the acquired entities will help double the top line by next year. The stock fails to keep up in a weak market. Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam, and a lot of headwinds, Mangalam, in today's trading session. The problem is that the largest weight, that's HDFC Bank, that has close to around 12% weight on the Nifty. That's down close to around 4.5%. But as I mentioned earlier today as well, if HDFC Bank is going to be under pressure, the next in line will have to try to do some part of the heavy lifting. It's not very, very evident because the market structure itself is weak. But I think Reliance Industries is the stock that's moved to the high point of the day. So HDFC Bank at the day's low, but the intraday chart of Reliance Industries will come up for you. And that's telling you why we've seen a 40-50 point recovery from the low point of the day. That's the one we're talking about. But Mangalam, why don't you hop across to the wall and run us through market moves?
Well, Nigel, it's a perfect storm, so to say, because not only do we have weakness in the global markets, we also have weakness coming in from HDFC Bank. At the same time, all of this is happening on a day where the banks are shut. So, it is on low volume. So let's see how the DII volume participation comes in today. But I'm just looking at a couple of data points that tell you that maybe fear is back in the market. Obviously, on Monday when the India VIX was 22, the Nifty went below that 22,000 mark. From there on, we started seeing a massive cool-off in the India VIX. All of yesterday, it was sub that 19 mark. And suddenly, we have a big spike that we've seen in the India VIX because war has intensified. Brent prices are at $112 per barrel. So again, the risk factor, as the market started to ease out a little bit, has come back on the table. And that's reflecting in the kind of moves that we're seeing right now. So which means that even if recoveries happen, they may be fraught with some sort of fragility or maybe some sort of volatility. Then add to all of that, the Nifty is down 500 points. HDFC Bank is contributing about 100 points on the downside. So even if you do not account for HDFC Bank, and that was absolutely flat in today's trading session, we'd be still down about 400 points on the frontline index. And that's the kind of weakness that we've seen from the global spaces of the market. And apart from HDFC Bank and apart from the notable losers in the oil marketing space, some of those trades which played out when the market was lower, the upstream oil companies, so ONGC is up 2% right now. Adani Total Gas, no direct visible benefit coming in on account of the higher crude prices, but we've seen as soon as the markets were lower, this stock did about 20-25% in the gains in the previous couple of weeks, and now that one's back on the table with an 8% up move. And Balrampur Chini, in fact, the entire sugar pack was higher on hopes of higher ethanol prices or maybe higher ethanol blending on the back of higher crude prices. Remember, crude prices at $112 per barrel are at the highest that we've seen since the start of this conflict. And the other trade which is coming undone is the platform companies. We here yesterday itself were saying that as risk is falling off the table, these platform companies are coming back in fashion, but it was just fairly short-lived. Zomato or Eternit is down 4.5% once again. Swiggy is down about 4%. An Urban Company, which was up around 11-12% in yesterday's trading session, is down about 3% as well. The other trade that is coming back in the market right now is that of the induction cookers. So we had TTK Prestige, which put behind itself a 16% gain in the week. The markets were lower, gas shortage coming in. The stock's up around 1.5%. Yesterday, as the risk was easing, that stock was down by about 7-8%. Now coming back, Butterfly Gandhimati up 9%. Stovecraft is the other one, which is up 4% as well. So all in all, risk is back on the table, and that's exactly what's taking place. We'll monitor the levels as we do. At some point, the Nifty will be, oversold, and at some point, we will see a bit of a recovery. But whether that recovery will be as formidable as we've seen earlier, because earlier risk was not back on the table. Now we have the India VIX, which is back at 22. Nigel.
Well, that's right, Mangalam. Thanks a lot for that wrap. Well, keep an eye on a few stocks, though, that are trying to put in a bit of a fight. ONGC is a direct beneficiary if crude as well as gas prices stay up. So that stock has spiked up. It's now at the high point of the day. And Power Grid, earlier this week I had a chat with Nikhil Nigania of Bernstein, and he was quite positive on the prospects of NTPC as well as Power Grid. He said that some of these ignored stocks or these old boys on the exchange, on the Nifty, they could actually come back into play. So I think both of them should come up for you on the screen. At some point of time, we'll get the intraday chart of ONGC, Power Grid, as well as NTPC. All of them could come up for our viewers. Yeah,
just one stock, Nigel, Berger Paints, that's the one that should come up for you. It's seen a big correction from the top, and typically at $112 per barrel for crude, you would have thought that maybe paint stocks would be under pressure. But this one's seeing some buying from the lows, currently at the higher end of today's trading range. So it'll be very interesting to see whether Asian Paints has also seen some sort of recovery or not. Asian Paints is still down about 2.7%. Let's see Kansai Nerolac or not, whether that's seen some recovery. These companies have already announced some price hikes. So let's see whether the current jump that we've seen in crude is enough for the price hike to continue or not, because this is the lone outperformer in an otherwise weak sector so far. So Kansai Nerolac down 2%, Asian Paints down 2.7%. Berger, on the other hand, has seen a recovery.
All right, let's get straight to Sachita Ananduthekar from Trade Bulls for a technical check. Sachi, what do you think? Be brave and buy, or stay away for now?
Good morning, Nigel. Good morning, Mangalam. I think when we look at the entire structure, the structure is clearly indicating weakness. This is the fifth downward gap that we have seen on the Nifty since it break below that 25,000 mark, which also marked a breakdown below the 200-day exponential moving average. So I think the pullbacks that we have seen so far are very fragile. Nifty has been reacting from its 5-day exponential moving average resistance. And so far, we don't have any, meaningful signs of a bottom in place. So even the level at around 22,955, which we have seen so far, I think that particular level is also at threat. If you look at the relative strength indicators, there is no sign of any divergence. So probably we may see this particular weakness getting continued. There would be, temporary pullbacks within this particular trend, but major trend or the major thrust still remains on the downside. So it's better to be cautious, put some, cash on the sidelines. Probably in a week or so, we may get these better opportunities to invest. But from a trading perspective, there are certain pockets of strength which do give us the opportunity to trade on the positive side for a couple of trading sessions. But the major trend still remains weak. So it's better to keep a long-short combination when you're trading.
All right, keep a long-short sort of combination when you're trading. What do we go long on? What do we go short on, Sachi? Because, the trades that were doing well earlier and you would have hoped to carry them are getting unbound right now. And the trades that weren't doing very well over the last few trading sessions are now doing a lot better. So how do you mitigate that? And what would your top trading ideas be today?
Good morning, Mangalam. Mangalam, I think the rotation has been very significant. We have not seen, follow-through moves, getting continued for more than 2 days. But if you look at the relative strength performance of certain pockets, these indicators are giving us strength to go long on a couple of trading stocks from a trading perspective. Now, one particular idea that we have recommended to our clients to go along is DMart. Now, if you look at the weekly charts, since last 4 weeks, despite of the market volatility, the stock is trying to form a base near its 200-month exponential moving average support, which is somewhere close to around 3,800. Yesterday as well, we saw a bullish belt-out formation on the daily scale. It's a good, reversal candlestick formation. So probably we may see a range-bound action within this particular stock. We may see a quick move towards 3,900, 3,940, and that's why we are recommending building long positions here in DMart. One can keep a stop loss at 37.80 on closing basis and review the positions at around 39.40. On the short side, clearly, I think financial space is very vulnerable, and even here, Bajaj Finance is in a severe downtrend. The 960 support has also been breached, and 860 support has been breached in today's session. If you look at the overall structure, it looks like a bearish flag formation breakdown. We are expecting that the stock may slide towards 790 zone in a couple of trading sessions. But from a trading perspective, one can keep a stop loss at around 862 on closing basis and expect an immediate move towards 830. Even this is something that we have recommended to a client. So a sell call on Bajaj Finance and a buy call on DMART.
All right, got it, Sachi. Thanks a lot for that. Well, by the way, Reliance Industries, that's really the stock of the last 15 minutes. When, you have two batsmen out there, both the highest weightage on the index. HDFC Bank is struggling, so Reliance Industries is coming on strike and trying to do some kind of firefighting as we speak. But let's get straight to the top story then, which we're closely tracking. Following Atanu Chakraborty's exit, interim chairman KK Mistry says that the chairman's exit is not linked to conduct or any regulatory concerns. That's a CNBC TV 18 news break confirmed. Let's listen in.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent in line with regulatory requirements. None of us as board members are aware of what are the specific issues which Mr. Chakraborty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years. The board remains fully committed to safeguarding institutional resilience and investor confidence. The bank operates with strong governance standards, robust internal controls, and an extremely experienced management team. The governance architecture that HDFC has built over the decades is grounded in transparency, institutional integrity, and long-term value creation. I also want to emphasize, and this is the last statement I'll make, that I would not have taken on this responsibility at the age of 71 if it did not align with my principles and the level of integrity that I would expect from the bank.
We'll continue to ensure that this particular trust is maintained not just now, but sustained for several years going forward. We will not do anything that will bring in ignominy. Of course, there will be a large organization, will have errors and omissions. We will continue to address them as we go along, but never will the tone of the top have anything which will have any kind of embarrassment to anyone, including our own conscience.
All right, so that's some top leadership commentary coming in from HDFC Bank, lending their heft, credibility, and some sort of calm to the street, which is panicking right now. HDFC Bank. The interesting part, however, is that all through today's trading session, it's held on to that 800 mark. We made this point earlier that, the 800 put has the maximum open interest on HDFC Bank. So it's an important support coming in from the F&O perspective out there, and that's the one which is still holding up around that 800 mark. So an important level to track as we move along today's trading session. Take a short break, getting more on the markets and a lot of stock-specific action. Stay tuned. 2,300 of them in the red for about 500 in the green. Welcome back. The HDFC Bank stock has been taking the Nifty lower. Reliance has been taking it higher. But importantly, the IT pack, the third one in the ring right now, is currently at the low point of trade. So pull up, TCS. That's the one which is at the lowest point of today's trading session. So no support coming in from the IT pack as well right now. So it's HDFC and the IT stocks against Reliance, and that explains why the Nifty is still holding with a cut of nearly 500 points. But on to the other geopolitical developments. The West Asia war escalates. Energy infrastructure has obviously been bearing the brunt of this escalation. The world's largest gas field, South Pars, and multiple gas fields across UAE and Qatar have been hit. Let's take stock of the impact, bring in Sonal to understand what such an escalation entails for prices. Sonal, you've been talking about how, the world's been speaking about oil, but the bigger impact that happens is that on gas.
That's right. Gas has seen a bigger impact, and the global energy market is reacting to a series of developments we have seen that overnight across key gas infrastructure in the Gulf. The South Pars North Dome gas field, the world's largest natural gas field, has come under attack. This field holds an estimated 48 trillion cubic meters of gas, accounting for roughly 25% of global proven reserves. It forms the backbone of gas production for both Iran and Qatar and is central to global LNG supply as well. At the same time, Ras Laffan Industrial City, Qatar's main LNG export hub, has also been targeted. It handles approximately 77 to 80 million tons per annum of LNG exports. That is close to 20% of global LNG trade, with supplies primarily moving to Asia and Europe. Any disruption here has direct implications for global gas availability. In the UAE, gas operations have also been affected. The Habshan gas processing plant has halted operations. This is a key processing hub in the UAE's gas network, handling billions of cubic feet of gas per day. The disruption points to a broader risk to energy infrastructure across the Gulf region. Markets have responded to these developments, right? We've spoken about oil prices. They have risen to that $112 per barrel mark. LNG markets are also pricing tighter supply conditions. There is a possibility of cargo rerouting as well. And taken together, these events are impacting a significant portion of the global energy system. So around 25% of global gas reserves are linked to the affected field. 20% of LNG trade flows through the impacted export hub, and close to 20% of global oil flows through this broader region as well. So the key takeaway is on supply timelines. So even if the Strait of Hormuz remains operational now, right, that was the big bottleneck, LNG supply from the Middle East is likely to remain constrained over the next few months due to the damage that we've seen to infrastructure. And that is the big story that we should be tracking. What happens to gas supplies globally going forward?
All right, let's also hear out views from Neelkant Mishra, Head of Global Research at Axis Capital and Chief Economist at Axis Bank. What he says that he sees significant risk of recession if the war lasts beyond 4 weeks. Let's listen in.
Remember that 7% of world energy supply is blocked. If this lasts more than 4 weeks, 4 more weeks, I think the risk of a significant global recession is quite meaningful. So that's the call, right? So how long can the regime persist? In many of these battles, thousands of aircraft are flying. There are so many missiles being shot at. There could be some error with the map. There could be some AI-generated error, and mistakes can be made. So I think those risks are high. And therefore, the invading parties may only pull back if they see pressure from the financial markets. So if this does not end by mid of April, I think the markets will start to panic, and that's when perhaps the end of the war will be visible. So I don't expect this to last 1 year either way.
All right, time to slip into a short break. Come back. We continue to focus on markets and on stock-specific action. Stay tuned.
Welcome back. Even as the Nifty is holding lower, we do have a couple of broader market stocks which have recovered from the lows. So case in point, something like in Oil India, again, a beneficiary upstream company. ONGC has moved higher, so has Oil India. So pull up that one. The other one that's, recovering from lows is Tata Power and Vedanta too, ahead of the board meet on, on the dividend. We'll probably see an up move on that one as well. And Mahanagar Gas is the other one, which too has moved higher. But let's get you some ideas for profit in a market as volatile and weak as this. We do have our colleagues from Money Control Pro, Lekha Jamnani joins in with a stock that she's tracking closely.
Yes, thanks. So KIMS Hospitals offers a compelling opportunity in the current volatile macro environment. Now, despite near-term margin pressure from an ongoing expansion cycle, the company is building a strong foundation for operating leverage over the next 2 to 3 years. Its recent Q3 results delivered a margin compression, which I think is transient and typical of expansion phases. Operationally, the business remains strong. Patient volumes are scaling well, while ARPOB has risen 20% YOY, driven by a richer case mix, higher equity procedures, and expansion into premium markets like Mumbai and Bangalore. Although occupancy is currently subdued at around 50% due to capacity addition, it is expected to improve as new hospitals mature. Early signs of operating leverage are visible. New units are ramping up steadily, with Nasik already EBITDA positive, and other key facilities like Thane and Bangalore nearing break-even over the next 2 to 3 quarters. As high ARPOB markets scale, both margins and return ratios should improve meaningfully. Now, KIMS continues to expand aggressively with plans to add around 2,000 beds by FY29, alongside a mix of brownfield and asset-light projects. Now, this provides strong medium-term growth visibility. Structurally, the hospital sector benefits from a significant demand-supply gap in India, rising incomes, increasing insurance penetration, and growing preference for organized healthcare. At 20 times FY28 estimated EV/EBITDA, KIMS trades at a discount to its historical averages, thereby offering an attractive risk-reward.
Appreciate you joining in, Lekha, and giving us, that quick explanation on that one. For the time being, we wrap up on this edition of Chartbusters. Stay with us. Trading Up comes up next.
Good morning, you're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu, with me, Hormaz Fatakia, as well as Ritu Singh. It's a bad day for the bulls. The last couple of trading sessions, we thought that there could be some sort of respite which is coming in, and that's why we saw a near 800-point recovery from the lows on the Nifty. And that just as we were building some sort of confidence, the war has intensified. The HDFC Bank news has come, and wham, we're down 500 points straight off the bat, 2.2% taken out of the Nifty. The Nifty Bank down by 1,500 points, and the Sensex not doing well either, 1,750 points down on that. And the worst brunt of that is on your portfolios, because the market breadth, 2,350 stocks which are in the red for about 500 stocks which are in the green. So the last few days told you that maybe risk is out of the system. Turns out maybe not. In fact, what this does is any sort of recovery from here on makes it a little more fragile until there is complete clarity on de-escalation from here on. Ritu, not looking like a good day for the bulls.
Not at all, Mangalam, and I guess you could blame a lot of that on what's happening with HDFC Bank, the single biggest dragger for the Nifty. But that said, it is not the top loser on Nifty 50. In fact, I was looking at the list. You also have names like Eternal, Shriram Finance that are in pressure. But yes, overall, this is definitely a point of concern. But specifically, what's going on with the top movers and shakers, and to set up the market for us, let me toss it across to Hormaz, who's walked by to the big wall to take us through the snapshot of exactly what's happening in the markets at the moment.
Well, 3 days of gains, and that has turned out to be short-lived. 2/3 of that has already been wiped out in just the first 100 minutes of the trading session today. And the Nifty led lower by the Nifty Bank. The brief recovery that we saw has now been sold into as well. So we are back down 500 points. The Nifty Bank down 1,500 points. And the bigger impact is on the broader markets. If you take a look at the stocks that are in the green across the indices, at one point, all Nifty stocks were in the red. Right now, there are 5 of them currently in the green. For the next 50, it's only 2. For the Nifty 200, there are only 11. And on the Nifty 500, there are 45 stocks that are currently in the green. So 455 stocks on the Nifty 500 currently trading under pressure. Now, let's make it a little more worse. Look at the indices where every single constituent is trading in the red, and it's not 1 or 2. The Nifty Bank, financial services, IT, realty, auto, FMCG, PSU banks, all of them are seeing every single constituent of these indices are trading in the red. Not to discount Nifty Pharma and the Nifty Metal Index. Here too, there are 1 or 2 stocks that are in the green, but most of the other constituents continue to remain in the red as well. What's doing well, though, are the renewable stocks. The Varian Premiers did well yesterday. Today is the turn of Acme Solar and NTPC Green. Varian Premier too have recovered from the lows of the day, though. And this impending gas crisis and the attacks on the gas infrastructure has again put the induction cooktops related stocks in the spotlight. Look at Butterfly Gandhimati today. Look at Stovecraft. Look at TTK Prestige. All of them trading with gains of anywhere between 3% to as high as 8%. And lastly, can't not forget the oil marketing companies because of the rise in oil prices. HPCL, BPCL, IOC. HPCL is now near its 52-week low. The 52-week low is around about 320 or 325 odd. BPCL and IOC too trading with substantial losses, and that is the pressure point right now on the markets. It is the banks that is the big drag. Reliance, of course, recovering from the lows of the day, lending some support, but as of now, it's HDFC Bank and most of the other oil sensitives that are the big drags.
All right, we take that point, HDFC Bank and all the other oil sensitives. But the big story today by far is HDFC Bank, as part-time chairman Atanu Chakrabarti has resigned, citing ethical concerns. Or the management says that Chakrabarti's exit is not linked to the bank's conduct. Ritu joins in, as always, to talk about all of this that has taken place overnight and since then. Ritu, a lot of commentary coming in, the price is down, and there's so much that has happened ever since the letter became public.
Yeah, Mangalam, but I would like to start with what you have, in fact, the heftiest word of all that has come in, and that is from the Reserve Bank of India, the regulator itself backing HDFC Bank. You know, if this doesn't assuage investors, I don't know what will. You very rarely have the regulator come out with a statement on an individual, and now you have RBI saying that HDFC Bank has no material concerns on record as regard its conduct or governance. So that should put to rest any sort of concerns the markets may have had on the reason for Atanu Chakravarti's resignation as part-time non-executive chairman of HDFC Bank. Let me quickly recap what has happened so far. You have Atanu Chakravarti, of course, resigning as chairman and independent director with more than a year that was still left in his term, and he cited differences with the brand's practices. In fact, I quote his resignation letter where he said, "Certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal values and ethics," end of quote. Now, Chakravarti is a career IAS officer. He served as an Economic Affairs Secretary, DPAM Secretary, before he took over as chairman of HDFC Bank in May of 2021. And as we've been telling you since early morning, sources are telling us this exit is not linked to any concern about the bank's conduct. You have Reserve Bank of India also now coming out and clarifying that there is nothing wrong with the bank's functioning. There are no red flags on regulatory action, NPA, compliance concern that can be linked to Atanu Chakravarti's departure. In fact, we also understand that neither RBI nor the bank or its board initiated it. It was very much an individual level decision. Now, our sources indicate the friction was internal and personal because Chakravarti, despite holding a non-executive position, was functioning, in the words of our sources, in an executive style and involving himself in day-to-day operations, which created differences with the senior management. That had been brewing for some time, but the resignation itself came as a bit of a surprise to the board, and the meeting, of course, was called at short notice to take matters on hand. Now, sources indicate he may have had concerns about the conduct of certain individuals that was linked to past lapses within the bank. That could involve, as recent as the Dubai bank branch matter. Now, whether they were formally raised or documented is not very clear. For now, you have K.K. Mistry, a veteran of the HDFC Group since 1981, coming on as the interim part-time chairman. But, there are challenges before the bank. Of course, it needs to find a permanent chairman. You also have the CEO, Sashi Jagdishan's term ending in October. Whether the board extends that, what happens on that front? And, of course, in the middle of navigating this critical phase of its merger integration and the competitive retail landscape also evolving. So, it's a difficult time. And you have this big change now coming in.
And shows in the price as well. At one point at the pre-open, HDFC Bank was down 9%. So you would say that the losses have been cut at least slightly, still 5% lower. But Ritu, earlier in the day, the management also had an investor call. They tried putting up a united front here. Give us the highlights from that.
Well, yes, through the course of this 1 hour con call this morning, the leadership reiterating time and again that there are no material issues. Of course, now you have the RBI saying it, so that gives some heft to the matter. But K.K. Mistry, who is now acting as interim part-time chairman, he fielded almost 70-80% of the questions. And on the key point of whether there was something fundamentally wrong, his answer was an unambiguous no. No material matters, no operational issues, no specific practices even brought to the board's attention, and the board's oversight is fully operational. The strategic direction, business priorities, none of that changes. As to concerns that were cited by Atanu Chakravarti, values and ethics, you had K.K. Mistry saying, and I'll just quote him where he said, "At the age of 71, I would not have taken on this role if the bank's governance did not align with my own values and integrity, and that there was no embarrassment to their conscience." Now, he also confirmed that the board members met with the RBI yesterday, who was very supportive, and their comfort is reflected in the fact that they've approved K.K. Mistry's appointment at such short notice. Now, on specific concerns raised by Atanu Chakravarti, Mistry said, no board member was aware of what exactly he referred to, and even when they quizzed him many times during the board meeting, he did not elaborate beyond his exit letter. In fact, K.K. Mistry also backed the current CEO, Sashidhar Jagdishan, saying he hoped he would continue to serve the bank. Remember, his current term is ending in October, and K.K. Mistry clarified that, the committee would look at this appointment at an appropriate time. You also had Sashidhar Jagdishan on the call, who called it an unfortunate development, but again reiterated that the best of the bank is yet to come.
Right, and following Atanu Chakrabarti's exit, interim chairman K.K. Mistry has said that the chairman's exit is not linked to conduct or regulatory concerns. That's a CNBC TV18 news break which has been confirmed. And as Ritu pointed out, the RBI also has said that it is a domestically, systemically important bank with extremely sound financials. The current exit has nothing to do with the state of the bank itself. So let's hear out K.K. Mistry's bites itself, and thereafter we will get this discussion going forward.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent in line with regulatory requirements. The board remains fully committed to safeguarding institutional resilience and investor confidence. The bank operates with strong governance standards, robust internal controls, and an extremely experienced management team. The governance architecture that HDFC has built over the decades is grounded in transparency, institutional integrity, and long-term value creation. I also want to emphasize, and this is the last statement I'll make, that I would not have taken on this responsibility at the age of 71 if it did not align with my principles and the level of integrity that I would expect from the bank.
I think that last comment from KK Mistry we must replay, directly countering what Atanu Chakravarti was saying on values and ethics systems at the bank. But we have Sanjay Parekh, who's the founder and CIO of Soham Asset Managers, who joins us now to discuss, some of his thoughts on HDFC Bank and the broader markets as well. But Soham, thanks very much Sanjay, thanks very much for joining us here. We've heard from the management that there are no governance concerns, there's no value and ethics related conflicts. Now you have the regulator, the Reserve Bank of India, in a very rare instance, coming out and saying that, the board, they've taken the matter into consideration. The bank is sound. There is no concern on capital or otherwise. Why do you think, Sanjay, we've not seen, of course, the stock has recovered from the lows that we saw at the start of the day. But why do you think, investors still seem concerned? The stock is still down.
Yeah, I mean, you all have covered it very, very well. And I think KK covered it extremely well. I mean, you can't add any value to that. But broadly, having watched HDFC Bank from listing days, these are the epitome of ethics, governance, best practices, true trusteeship, and growth. So these are the people, and also risk management. So over 25 years, you watch them, and this is a matter of principles where, they have actually educated so many of them on what is risk management, what are ethics, what is governance. So companies like these or Infosys, these are the best in class on governance, and we should seriously not doubt them on that. And now it's backed it by Mr. Chakravarti saying that there are no governance lapses. That is exactly the principles is what I think are more important today, which they emphasized categorically. Mr. KT Mistry telling that at 71, why would I put my neck and agree to the same if there is some issue? Or even Shashi Jagdishan, whom we respect so much, again talking about conscious or trusteeship. So these are like absolute top and best in class principles. There are certainly some differences, maybe some personality issues, and I really very strongly believe that this will be behind us in 1 or 2 days, and we'll be back to normal. Of course, we have some war situation which is a little aggravated, and hence the overall market has reacted. And global investors world over at times would take some more time before they realize that it's a mild issue or a non-issue, and it's nothing to do with fundamentals or the growth prospects of the company. And you getting the best-in-class opportunity, at least I believe, at 1.6 times on FY28. Ex-COVID, I've never seen such an attractive valuation in 10 years.
But, Sanjay, actually, this is coming at a time when the bank is in a very critical phase, as I was highlighting earlier. the integration issues still remain. The high CD ratio has been a big point of concern. Margins have been under pressure. There were some credit cost-related concerns as well in the last quarter. Can they really afford a management crisis at this point of time? Not only do you have a chairman exiting very non-transparently without really detailing, and the management also saying they're not aware of what specific issues he had in mind when he resigned. You also have the CEO whose tenure is set, the current term at least, is set to end in October. This transitory phase and the issue coming at this time, do you think it's going to weigh on the stock a while longer?
No, I genuinely believe there is no major issue on the operational front. It will be back to normal. So that is the starting point. And yes, at times there would be differences of opinion. And I'll just give you an analogy. A president in a constitution has some powers. The prime minister has some powers. Now, certainly, the president has to do their role. The prime minister has to do their role. At times, if there is an overstepping, and I don't know the details, but I'm just giving an analogy, then certainly there will be issues. So there may be ideological issues, but as Mr. Chakravarti himself, who is so respected, said that these are not governance lapses. So I think in such a large bank, there could be personality issues. There could be some difference of opinion, which is absolutely fine in a lot of large organizations. So I think we will go back to basics very, very soon of what are the growth prospects. And on the merger also, I think a large part of the merger-related pain, we are behind it. They've gone on record that, now they will grow, in line with industry and then ahead of the industry on terms of loan growth. And the liability side also certainly is challenging in this environment. But with that, I also believe that, it's a transitory phase which they'll fix. And RBI is also supportive of not being very stringent on LDR ratio. So I think we will see growth at reasonable growth, more like 15% plus, and then moving up a little bit, but more 15-16% growth rate and ROEs of 15-16% longer term with 1.6 price to book. At least in Nifty, I have not seen such reasonable valuation. There are very few stocks of such reasonable valuation.
Fair enough, Sanjay, but there have been, you may have mentioned that the fundamentals of the bank are intact, but the one thing that the market does not like is uncertainty. And Atanu Chakravarti's letter mentions the fact that there have been things that he had observed for the last 2 years that were not in line with his ethics and so on. That letter does not highlight those issues in specific. So there is no clarity on that. The management, of course, has gone on to say that there are no material issues to be shared, but the market is in such a state that you sell first and then you go on to think whether what they have done is right or not. Does that not create this uncertainty around an institution as big as HDFC Bank, which as early as a couple of years back used to be that one safety net for a lot of the investors?
I think, when people of governance and of senior standards like Keki saying that these are not ethical issues, they are not material issues, I'll not put my neck if I had any major lapses. So, as I said, it looks to be, and always, there'll be both sides of the coin. Some of them, at least I believe, large institutional players would not react and they would respond. Retail, of course, needs to be educated and handled, and that's what exactly you all are doing. So that is where once this will be a transitory phase, and I very, very strongly believe it will be a matter of 1 or 2 days, and we'll be back to business as usual and fundamentals. I don't think there will be an issue on operational aspect of the growth plan. There could, as I said, this could emanate from some personality issues or some differences, which happens in any organization. It's just that, unfortunately, it's come out this way.
So, at your level, are you buying this dip right now? I mean, let's just ask you.
Yes, Mangalam, we own it. So that is a disclosure. It's a large holding for us in our fund. And we've been owning, I've been an investor last 25 years. We've been investors in different institutional representation that I had. And we will surely add, at current levels.
Sanjay, Quick word, we're running out of time. First you had the IDFC issue, now you have this HDFC issue, which you say the markets will move on in a couple of days as clarity emerges. But do you think, PSU banks back in favor, given some of these issues that seem to be popping up for private peers?
No, I don't think this will have any maneuvering towards PSU banks, And the earlier part, what you said, was more of an anecdotal risk issue of a fraud in one of the banks you discussed. Here, it's more looks like, more like, as I said, more like interpersonal relationships or certain differences in operational aspects. So I don't think this would change whether people will move from private to public. As you know, the quarterly ends, people will look at advances growth, deposit growth, and there at least, they've gone on record saying the outlook is looking better. So in a matter of few days, you will see people moving back to, what is happening on advances growth, deposit growth. That trajectory, surely one should follow. And as it comes out, I think we'll see the confidence building back in the bank.
Sure. Sanjay, thank you very much for joining in with your thoughts. We appreciate your time. Let me do a short break, but when we return, we'll discuss more on the markets and technicals with Rajesh Palvia of Axis Securities, also discussing top trading bets.
$527 points lower for the Nifty right now, and that's because it's a perfect storm which is playing out for the market. If you look at the F&O desk right now, The reason why the market is lower is not because of just the war, not because of just HDFC Bank. It's a bunch of things. One, war has intensified. Secondly, domestically, we have the HDFC Bank management impact that has happened. Thirdly, the money market is closed, so obviously the market is falling on much lower volumes as well. And fourth, we have the Sensex weekly expiry, which will play out today as well. So those are the four important cues that are playing out in our market, and that has resulted in a big cut that we've seen in our indices. In fact, if you look at the contribution chart of the Nifty, that tells you the story of the day, where it's not just HDFC Bank. The India VIX, which on Monday was at around the 22 mark, over the next three trading sessions came down to sub 19, and we saw a cut of almost 17%. Wham! Come today, and this perfect storm, the India VIX is back above that 22 mark. HDFC Bank is contributing just 89 points of the 535-point downtick that we're seeing. So had it not been for HDFC Bank, we'd still be down about 450, 460 points. So that's not a concern. In fact, the Nifty Bank is lower, not contributing to the frontline index. The Nifty IT index is also lower, not contributing either. That's at the low point of trade. And Reliance is recovered from the lows, but not enough to curtail that sort of 500-point sell-off that we're seeing. The other part, which is leading the market lower right now, is the fact that the last few trading sessions, the recovery that took place, gave a lot of confidence to put writers. So yesterday, as late as the last hour, we saw writing at the 23,700 put, 23,800 put, 23,600 put. All those guys have been caught on the wrong side, and this, them having been caught on the wrong side has led to them covering their position. So 23,700 put, you see those reds at the bottom of your screen, they are basically people who've covered their position. The green on the screen, which is the 355 rupee jump that we've seen, is a spike in the options premium. So that has led to a further decline in the market. And similar is the case with 23,500 and 23,600 put as well. Now, will a recovery take place from here on? And will the call writers go, be caught on the wrong side? Who's to say? But right now, the 23,300 call writers are fairly active, premium of 200 rupees. They're hoping for some sort of supply to come by at 23,500. We've seen some confidence build up at the 23,300 put and the 23,200 put. 23,300 put has a premium of 285 rupees and the 23,200 put has a premium of around 200 rupees. What does this tell you? That 23,000 is an important support. 23,000 and 22,955, which is basically Monday's low, is now an extremely important support zone for the frontline index. That's what put writers are hoping for. But if we fall below the 23,200 mark for a very long time, then these put writers will be taken to cleaners as well. All of this depends on a significant weight on HDFC Bank. HDFC Bank, through the course of the day, has not broken and stayed below that 800 mark, and that's an important level. We pointed out this morning as well, the 800 put has the most amount of open interest. And today as well, despite the fall that we've seen, 800 put is most active and still has the maximum open interest. So that's an important level to watch out for HDFC Bank.
800, watch out for that on HDFC Bank, because a lot hinges on that level, not only for the stock itself, but also for the index as well. As Mangalam was highlighting as well, that 23,300 call, the writing seen there, and that recovery that took place just a few minutes ago towards that 23,300 mark, that got sold into as well very swiftly in today's trade just a few minutes back. Good time to get a quick chart check from Rajesh Palve of Axis Securities. Rajesh, good morning. Thank you for joining in. Now that we are almost back to where we were on Monday, do you see further downside from here? Do you use any potential recovery to cut back on any existing longs? Your call on the index and your stock recommendations as well.
Yeah, good morning. So 3 day of recovery is now, sold off in one day itself. And looking at the structure, as Mangalam was pointing out, yes, 23,300 has attracted major call writing activity. So that level may act as a major supply zone for any kind of pullback action on intraday perspective. So until the Nifty not able to take out 23,300, I think whatever pullback which we are attempting here are getting supply pressure. Put writers are not confident at all. They have shifted their writing position at very lower level. So I think 23,000 would be the next level to watch for. If he breaks below 23,180 or 23,150 zone, which is today's day low. So if he breaks those level, I think then next level for Nifty would be around 23,000 itself for intraday perspective. So highly oversold trajectory for market. Market is not getting any kind of confidence. All sectoral indices are trading in red. Bank Nifty is contributing more on the downside as most of the large cap banks are, sliding. So I think market may remain under pressure. As such, we don't feel that there would be any kind of major recovery will take place until unless any news flow comes from the geopolitical front on the positive side. Otherwise, I think traction is on the sell on rise kind of structure. One needs to keep a stop loss of 23,450 if you are on the short side of trade at this juncture. Breakdown below 23,150 will open towards 23,000. That could be the next target. Bank Nifty structure is weak. Till we are not able to take out above 54,500, I think any minor pullback should be used as a shorting opportunity, looking at the data. On the stocks front, I think the pocket where one can go short is NBFC space, where Bajaj Finance is looking very weak. This is the fourth consecutive week where stock is making lower high-low formation. The way stock has broken previous swing low, I think if it continues to trade below 860 level, the next target on the downside we may see towards 815 to 800 for Bajaj Finance. So one can go short in this counter with stop loss of 865. On the long side, one can look at Bharti Airtel. Here we have seen that stock is showing sign of strength from lower level, though still structure is not that great. But the safety is there in this stock as it's a large cap, and since last couple of days, stock is trying to attract some buying interest from lower level. So here we could see some recovery towards 1880, 1890 kind of zone. So one can buy and accumulate with stop loss of 1820.
All right, Rajesh, we leave it at that. Thanks very much for your time here. On that note, we have to slip into a short break. Don't go anywhere. We're back with more on the markets in just a bit.
Welcome back. A couple of these metal stocks are taking it on the chin. Hindustan Copper is down 5%. Hinzinc is down about 4.5%. We're seeing a big gash in a lot of these other names as well. The only one which is actually holding up in the green is Vedanta for two particular reasons. One, has some oil exposure, and secondly, also is considering a dividend. So all these factors keeping that stock higher as against others which are lower. A few of these power stocks also picking pace. So NHPC is one of them. Tata Power is the other one. JSW Energy is mildly in the green. But speaking about energy, power, speaking about all things, crude related, let's see how, the business pans out. As energy prices surge, Iran has struck important energy infrastructure in neighboring regions. Qatar and Saudi Arabia report damage to facilities, while UAE reports intercepting missiles that targeted energy infrastructure in Abu Dhabi. US President Donald Trump has denied US's involvement in the Israeli attacks on Iran's South Pars gas field. CNBC's Dan Murphy joins in with all the details of what took place overnight.
A ballistic missile fired by Iran struck Qatar's Ras Laffan industrial city. This is the world's largest liquefied natural gas export hub. Qatar Energy confirmed extensive damage and fires at the facility, but no casualties have been reported. Ras Laffan has been offline since March 2nd, when Iran's first drone strikes forced Qatar Energy to declare force majeure on its contracts. Last night's strikes makes any near-term restart increasingly unlikely. Meanwhile, in Abu Dhabi, authorities intercepting missiles targeting both the Habshan gas facility and the Bab oil field. The intercepts were successful, but falling debris forced the immediate shutdown of both sites. The Abu Dhabi media office confirming no injuries and saying both sites remain offline this morning. Two refineries in Saudi Arabia were also attacked. A threat to Gulf energy assets is a threat to global energy supply. A reminder that Qatar, the UAE and Saudi Arabia together account for roughly 20% of global oil exports. Qatar is the world's largest LNG producer, accounting for about 20% of global supply, feeding Asia and acting as a critical swing supplier for Europe. Virtually all of that gas moves by the sea through the Strait of Hormuz. The UAE is also a major oil producer, pumping around 4 million barrels a day. The UAE now attempting to move crude through its Habshan Fujairah pipeline in a bid to bypass the strait after its Fujairah energy hub also came under attack this week. The ADNOC CEO Dr. Sultan Al Jaber said Iran's blocking of the Strait of Hormuz constituted, quote, global economic warfare. And Saudi Arabia typically exports about 7 to 8 million barrels a day and is the only country with meaningful spare capacity in a crisis. That capacity is locked out, with its east-west pipeline unable to move the volume required to calm the market. And the strikes on energy infrastructure here has inflamed America's closest Gulf allies. Saudi Arabia's foreign minister using his strongest language yet, saying Saudi Arabia reserves the right to respond politically or non-politically. Speaking at a meeting of Gulf and Arab leaders, Prince Faisal also said what little trust there was with Iran has been shattered.
What I care about now is that the attacks on my country and on my neighboring countries that are not involved in this conflict end. That's all I'm interested in. And we're going to use every lever we have, political, economic, diplomatic, and elsewise, to get these attacks to stop. That's what I care about. Any re-engagement with Iran, this conflict, will end at some point. But I have to tell you, what little trust there was before has completely been shattered. Has been shattered on multiple levels. First, because Iran knows that most of the countries in the room today worked very hard to support diplomatic outcomes. Also, because we were quite clear with Iran that we would not be combatants in any confrontation that came. Not only that, that we would not allow our facilities to be used to target Iran, that would be restricted to self-defense.
Arab governments had lobbied Washington aggressively to prevent exactly this kind of attack, fearing their own facilities would become targets in retaliation. Those fears have now been realized. Qatar expelled senior Iranian diplomats from the country, saying staff from Iran's military and security attaché at the embassy are persona non grata and have 24 hours to leave the country. Qatari officials also tell CNBC this morning Iran's blatant aggression against the state will not be accepted. And here in the UAE, the foreign ministry also hitting back. The UAE called the strike on its Habshan gas facilities and Bab oil field a terror attack, warning the escalation posed a direct threat to global energy security. The foreign ministry also said the UAE reserves its right to take all necessary measures to protect its security. Meanwhile, back in Washington, D.C., President Trump seeking to distance the United States and Qatar from Israel's attack on Iran's South Pars field. He posted on Truth Social a couple of hours ago saying Israel will make no more attacks on South Pars. However, he did say if Iran decides to attack Qatar, the U.S. will not hesitate to blow up the entire South Pars gas field, which would be a significant escalation in the offensive. For now, these hits at critical infrastructure points are taking key production offline, meaning oil and gas supply could stay squeezed even long after the war potentially ends. Reuters also now reporting that the Trump administration is considering deploying thousands of U.S. troops to the Middle East as reinforcement. The deployments could help Trump with securing the Strait, as well as Karg Island, which is a critical oil export hub for Iran.
Dan Murphy, thank you for that update there. Let's now hear our views from Neelkanth Mishra, the head of global research at Axis Capital and chief economist at Axis Bank, who says that he sees a significant risk of recession if this war lasts beyond 4 weeks from now. Listen in.
Remember that 7% of world energy supply is blocked. If this lasts more than 4 weeks, 4 more weeks, I think the risk of a significant global recession is quite meaningful. So that's the call, right? So how long can the regime persist? In many of these battles, thousands of aircraft are flying. There are so many missiles being shot at. There could be some error with the map. There could be some AI-generated error, and mistakes can be made. So I think those risks are high. And therefore, the invading parties may only pull back if they see pressure from the financial markets. So if this does not end by mid of April, I think the markets will start to panic, and that's when perhaps the end of the war will be visible. So I don't expect this to last 1 year either. India has substituted to some extent the gas that was sent in or used in power plants, shut that down, and of course switching to coal. Other countries will be doing the same. Some have reduced the less economically important parts of their economies. So maybe 1 or 2% can be offset, but 4 to 5% of impact on world GDP in this last 1 year is I think. And remember that there are second-order effects showing up. The second-order effects can be quite. Now, the reason why I think everyone, including companies and markets and investors, are reluctant to sell, and frankly, from 1 year perspective, that is the right thing to do at this stage. But these inventories don't last forever. And I think these supply chain disruptions will get really extreme with every passing day. And at some point, I think the markets are likely to panic.
Right, Brent, now at nearing that $113 per barrel mark as against 112, 111 this morning. So it's only inching higher, and this impact is visible on no other stock more than L&T, because has a fair amount of orders coming in from West Asia. As the markets saw some recovery in all of the last 3 days, the L&T stock moved as of yesterday itself to levels of close to 3,600 rupees, a little over that as well. But come today, come the weakness, once again, the stock is down 4.5%, has gone back to levels from where it started this week. And remember, all through this month, this stock has been badly hit, down nearly 20% from the start of this conflict. So it's lost about 20%, gone into bear market zone, technically speaking. And currently, recovery of the last 3 days has been sold into in half a trading session back to where it started this week. That's about L&T. What we'll do is take note of this and more other stock-specific news on the other side of this short break.
Welcome back. It's still a 520-point cut on the frontline index. 23,258 is where we're at. But let's focus on some specific stocks that have been in news. For instance, RBI has cleared Bain Capital's joint control of Manappuram Finance and its subsidiaries, particularly the home finance ones. And despite this positive news flow, the much-awaited clearance from RBI coming in, the stock has been under some pressure because of the broad-based weakness in the markets. Let's go across right now to Gaurav Javalkar for more on the development, its significance, and you know, what next for Manappuram from here on. Gaurav.
Yes, if you look at Manappuram Finance, in March 2025, we heard about the acquisition from Bain Capital in Manappuram Finance. And now, after 12 months, they have received all the approvals from RBI. Now, the last leg of approval was remaining, and that they have received in terms of Ashirwad Microfinance and Manappuram Home Finance. Both of these companies are their subsidiaries, and now RBI has given their approval for indirect change in control and management, and with this they have received all the approvals as per management. Now what they are aiming is that by the end of FY26, which is 31st March of 2026, they will be completing this acquisition, which is of a size of around 4,300 crores. So it's a big news and a big inflow which will come in Manappuram Finance. And at the same time, they have also said that they will be completing the open offer which was required for this acquisition in accordance with the timeline prescribed under SEBI. Now, if you go back in time and see the structure, they are going to acquire anywhere between 18 to 41% stake in Manappuram Finance after the open offer. And remember, the deal was signed in March 2025. So again, after 12 months, they have received all the approvals, and now in the next 10 to 12 days, they are expecting the deal to conclude. So all in all, it's actually a positive news for Manappuram Finance. But given that there is a broad-based pressure in the market, we are not seeing as good number in terms of the share price today. But let's also not forget that yesterday the stock was up almost by 5%. So let's hope for this deal to conclude in this year itself.
All right, we take that point, Gaurav. Thanks a lot for that. Meanwhile, news at the bottom of your screen where Prudential is looking to exit ICICI Prudential Life Insurance. That stock down about 3.5% on the back of that news. We'll obviously get more on, where this is emanated from and what the impact this could have on business is something that we will monitor. In fact, let's go across to Ritu. Ritu has some more on this. Ritu, Prudential looking to exit ICICI Prudential Life Insurance would create a supply event for the stock, I suppose.
Yes, that is something I think our colleagues will address, but I quickly wanted to make a point on Manappuram. 12 months in the making, the deal is expected to conclude now by the 31st of March. But remember, while Manappuram has been given a go-ahead from RBI, you also have Federal Bank's deal that has been approved recently, Yes Bank as well. There are quite a few that are still waiting in line, and the focus now, of course, shifts to these. For instance, the RBL deal with Emirates, that's a big one to wait for. And of course, Sammaan Capital IHC and the Shriram MUFG one. So Manappuram out of the way, but there are many more that are pending in the queue for a final RBI nod. We'll slip into a short break on that note, but we'll get you more news and updates, including some of these flashes that are coming up on your screen in just a bit.
Welcome back. The other important event from last night was the US Federal Reserve as they voted to keep interest rates unchanged amidst mixed signs in the labor market and a war. Let's listen in to what Fed Chair Jerome Powell had to say after the policy announcement.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. The FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The possibility, rather, that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case. And of course, we don't take things off the table. And the thing I really want to emphasize is that nobody knows. You know, the economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. That you know, to your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected.
Right, take a short break. So much happening and reflecting the market as well. We'll continue our coverage after this short break. Stay with us. Well, the markets continue to hold lower and we are out of time on this edition of Trading Hour. But you stay tuned to CNBC TV 18. On the other side of the short break, the team of Halftime Report will take all the market action forward. But before we wrap, from Ritu, me and Hormaz wish you all a very happy new year for all those celebrating Gudi Padwa. And also over the weekend, there is Eid at the same time. There is Navroz as well. So season's greetings to all of you watching.
Stocks see a deep gash of red as the war in the West Asia region hurtles out of control. Financials, realty and IT are the biggest drags, while energy is the most resilient.
Atanu Chakrabarti steps down as part-time chair of HDFC Bank, and KK Mistry steps in with the consent of RBI, which says there are no material concerns on conduct or governance. Even as Atanu flags values and ethics, the bank stamps out any concerns but admits to differences in thinking. The stock slides.
Brent jumps to near $112 per barrel after Israel attacks Iran's South Power gas field. Iran retaliates, targeting assets across Gulf, sparking sharp surge in oil and gas prices. Trump denies U.S. involvement in Israel's attack.
Axis Bank's chief economist Neelkant Mishra expects a global recession if the Iran war continues for 4 more weeks. He sees the market going into panic if the war doesn't end by mid-April and second-order impacts become visible.
Hello and welcome to Halftime Report. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Ekta Batra and Vinny Motiwala. Good afternoon, girls. Yesterday, this time, we were talking about third consecutive day of gains for the markets. Most of that is reversed because of what happened overnight. Again, it is all about what's happening in West Asia, critical energy infrastructure being hit, and that is something which has led to our own markets falling. It's a 500-point cut on the Nifty. We are below the 23,250 mark. Bigger cuts coming in from the mid-caps, Bank Nifty, and there are sectoral impacts that we'll discuss through the course of the show as well. But yes, continues to be a down day. Realty, auto, financials, all of them are falling anywhere between 2.7 to 3.1%. And, all the sectoral indices, they are in the red as we speak, barring few Nifty stocks, most of them in the red as well. So continues to be a very difficult day for the markets.
Continues to be a difficult day for the markets. Like you said, all the sectors are trading in the red. Just two names in the Nifty 50 that are trading in the green right now is ONGC and Coal India. Coal India also has been flip-flopping between the red and the green. So that will be interesting to see where that moves. But ONGC is the only one strongly holding on to gains. Other than that, Coal India. Now, when you talk about, like Sonal was mentioning, broader end of the market, that's also under pressure. But interestingly, some of the names that are coming into the gainer sides from the Nifty 500, Adani Total Gas, Acme Solar, Gujarat Fluoro, Aether Energy are some of the names over there. Clearly today a bit more of a pressure in there, and advance decline ratio obviously is in the favor of declines versus advances. Nifty continues to, through the day so far has been down 500 points. There's no sort of recovery, Ekta, that we've seen coming in also.
Yes, absolutely. And it's not really just an India problem at this point in time. It is obviously what we are seeing across the globe. So if you just look at what happened with Asia, we had the Japanese markets which were down around 3.3%. We have the Hong Kong markets which are down over 1%. The Kospi which is down around 1% as well. And remember that many of these markets such as the Taiwanese and the Kospi have been outperformers this year. Back home, one of the key worrying parameters is the 52-week low ratio versus 52-week highs. So currently we have around 5 stocks which are at 52-week lows as compared to 1 stock which is at a 52-week high. So that's possibly one of the key parameters to watch in terms of the sentiment for the market, which remains extremely weak in today's trading session. But let's tell you what we have lined up in the next 60-odd minutes on Halftime Report. We will be putting the spotlight on the oil and gas space in our What's Trending segment and take the discussion forward with Matrix Global's Richard Redgolia. We will also be focusing on HDFC Bank and bring you insights into the boardroom tussle and what the management had to say. We will also be speaking to the management of Emcure Pharma ahead of the semaglutide patent expiry.
Okay, let's start with our What's Trending segment for today, and we are tracking disruptions in the global energy market, reacting sharply to reports of key gas infrastructure being targeted in the Gulf area. Sonal is here now. She's gone to the big wall to explain us, what this means. We'll also obviously continue this conversation with Richard, but first to Sonal on what this impact is and what does it mean for us as well. Sonal, over to you.
Well, the global energy market is reacting to a series of developments across key gas infrastructure in the Gulf. The South Pars North Dome gas field, the world's largest natural gas field, has come under attack. The field holds an estimated 48 trillion cubic meters of gas, which is accounting roughly 25% of global proven reserves. It forms the backbone of gas production for both Iran and Qatar and is central to global LNG supply. At the same time, Ras Laffan Industrial City, which is Qatar's main LNG export hub, that has been targeted too. Ras Laffan handles approximately 77 to 80 million tons per annum of LNG exports. That is close to 20% of global LNG trade. With supplies primarily moving to Asia and Europe, any disruption here has direct implications for global gas availability. In the UAE as well, gas operations have also been affected. The Habshan gas processing plant has halted operations. This is a key processing hub in the UAE's gas network, handling billions of cubic feet of gas per day. Now, the disruption points to a broader risk to energy infrastructure across the Gulf region. Markets have responded to these developments. Oil prices, they have risen from $105 to $110 per barrel. LNG markets are also pricing in tighter supply conditions now. We'll also see possibility of cargo rerouting from their routes. Taken together, these events are impacting a significant portion of the global energy system. Around 25% of global gas reserves are linked to the affected field. Nearly 20% of LNG trade is exposed to this, and close to 20% of global oil flows through this broader region. The key takeaway is on supply timelines. So even if the Strait of Hormuz remains operational, LNG supply from the Middle East is likely to remain constrained over the next few months due to the infrastructure disruption and precautionary shutdowns. And that is very important. In fact, to take this conversation ahead, we have with us Richard Radolia, who is the CEO at Matrix Global, joining in now. Richard, thank you so much for joining us. A two-part question here. Of course, these are big numbers that we are talking about in terms of oil and gas supply. If you can give us a sense of how big of a supply disruption are we looking at and how long will it be? Because even if the strait opens now, we do have production hits which are coming in. So what is your take on that?
Excellent question. Thank you for having me. It's obviously very big. The strait itself is really the key. It being closed is the number one factor. Any attack on infrastructure also has a dramatic effect, and we're seeing it on price. What we're starting to see is a bifurcated market in the world. We're talking about LNG, which is obviously very important given the bombing of the field that happened yesterday. And I think that field, while it supplies a lot of LNG to Iran, it's one of the major fields that Qatar uses for its LNG exports, of which it's the largest, I think the largest exporter of LNG in the world, approaching 20 to 25%. Also affecting this is the amount of LNG cargoes or ships that are there. They're very sophisticated ships that are needed to move liquefied natural gas. And so that's very important. And that's one of the reasons why we're seeing a dramatic change here in price. Now, something to be aware of, what we're seeing, and when we talk about change in price, and I said the market is bifurcated. One of the major things that's happening as it relates to the crude side of the equation is Brent. Brent is one of the key global benchmarks that most crude from Asia, Europe is priced off of. That market is trading around $112 to $113, which I believe is the highest price it's traded at and will settle at since the beginning of this war. What's interesting is WTI, which is its counterpart, is trading almost $16 under the current Brent price. That, I believe, is probably the widest differential ever experienced between these two crudes. The reason that is important, it shows you where the market is focused. It's focused on the Gulf, the buyers that are buying from the Gulf, and this would be India, Europe, and China in particular. But this is something that's very important to realize. Now, you made a point about what does this mean in the future? And while we talk about the crude, as you say here, you can see the differential right there. That's a remarkably different differential. Brent is up $5.83. WTI is only up 86 cents. The price of Brent 2 months out is $12 cheaper. And so the market is looking at this as at this point, it's very important. It could get exacerbated, but it's something we have to be aware of.
Okay. Richard, well, as we speak, we have Brent crude, which is now spiked up to $113 per barrel. But if you had to narrow down geographically which region would probably see the maximum amount of impact because of these disruptions in the gas market, what would it be? Because most of the analysts are pointing towards Asia possibly bearing the brunt of the supply disruptions.
It will be. It'll absolutely be Asia. Remember, the U.S. is the second largest exporter of LNG, and most of its LNG is going to end up going to Europe. So the greatest impact on the LNG side and on the crude side is going to be, in order, Asia, including China and India. Those two are going to bear the brunt of this. Now, while we talk about the crude price here, which is interesting, you look at the Brent at $113, the product price is also extremely high. When you look at the price of gas oil, which is distillate, which is the most utilized or the most highly demanded product in Asia, the price of a barrel there is over $212 a barrel. So we're seeing not only a dramatic effect on crude and on LNG, we're seeing a dramatic effect on distillate prices as well.
Richard, Sonal mentioned very nicely in a link right now that we have 25% of global gas reserves that are at risk. We have 20% LNG trade that is exposed, 20% oil flows that are going through this conflict as well. Now, especially because of LNG, the issue that comes in, what is it in terms of the breakup that we have, that we are dependent on US? Is there anything in terms of a breakup of percent over there? And how much would be maybe a UAE, Qatar, that side that one would be dependent on globally?
Well, the market will bid it away, right? Basically, what will happen is if the differential, in this case, let's look at the crude differential. But if you look at the LNG differential between an LNG cargo loading in the Gulf Coast of the United States and an LNG cargo elsewhere, which is the Persian Gulf, which you can't get out, the market will say, well, I need supply, and it will bid up the price of the LNG in the Gulf Coast of the United States and try to move it to Europe. But a lot of that, remember, LNG tends to trade on long-term contracts, so much of it's already spoken for. Under the Biden administration, for whatever reason, they delayed a number of LNG export facilities. Fortunately, under Trump, we've seen new facilities come online. I believe a new one just came online that will allow the U.S., which is a very large exporter of natural gas and producer, to move it to other parts of the world.
So, Richard, you said US is a big exporter and gas prices. If you can give us a sense of how gas prices have moved higher. We have Henry Hub, we have the Korean marker. Are we seeing prices differentiating there as well, how we are seeing in crude prices? And if prices go higher, do you think, I'm not sure if you'll be able to answer that, but do you think this disruption continuing would not impact US so much? Because for them, higher gas prices would be beneficial.
Well, the U.S. in a way, the U.S. producers and refiners are benefiting by this, right? They're receiving higher prices for the goods. Now, LNG or natural gas in the United States is still relatively minor. It's trading around $3.27 an MCF. So just like we see Brent trading at probably the widest differential to WTI of $15 to $16, the same thing applies to the natural gas price in the U.S. versus natural gas prices elsewhere. And that will continue over time as long as the Gulf stays closed. If this continues, then we're going to see U.S. prices rise to basically meet the world prices. But that is going to take time. Your analyst in the very beginning said it's going to take time for this market to find equilibrium. And the way it does that is it moves excess capacity in one region to another to take away the price. But when you're removing 20% of supply in the world, it is very difficult to find a balance. And the only way you do that is through demand destruction and lower economic activity.
Okay, all right, Richard, we're going to leave it on that note. Thanks very much for joining in and giving us all of that perspective with regards to the gas prices as well as Brent crude. We need to take a short break, but on that note, on the other side, we'll get you a lot more on the markets as well as stocks. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. Nifty is where we started it, right? 23,200, about that level is what it's trading at, meandering around that level. But let's move on and talk more in terms of equities, right? Morgan Stanley's Jonathan Garner says that they continue to highlight that Asia is more vulnerable than other regions to the ongoing interruptions that you've seen in oil, LNG and other input products, to agriculture, industrial production, including ammonia, urea, helium and sulfur. Now, in the adverse scenario, they would expect Asian markets to resolve down towards their bear case scenario target, which is 15 to 20% below the current levels.
Okay, and that's quite a bearish view coming in from Morgan Stanley there. But let's hear out views from Neelkant Mishra, Head of Global Research at Axis Capital and the Chief Economist at Axis Bank, who says he sees significant risks of recession if the war lasts beyond 4 weeks.
Remember that 7% of world energy supply is blocked. If this lasts more than 4 weeks, 4 more weeks, I think the risk of a significant global recession is quite meaningful. So that's the call, right? So how long can the regime persist? In many of these battles, thousands of aircraft are flying. There are so many missiles being shot at. There could be some error with the map. There could be some AI-generated error, and mistakes can be made. So I think those risks are high. And therefore, the invading parties may only pull back if they see pressure from the financial markets. So if this does not end by mid of April, I think the markets will start to panic, and that's when perhaps the end of the war will be visible. So I don't expect this to last 1 year either way.
In fact, Neelkant Mishra also spoke on the second-order effects, while the management of SIAT says continued disruption could impact raw material prices. Listen into that.
India has substituted, to some extent, the gas that was sent in or used in power plants, shut that down, and of course, switching to coal. Other countries will be doing the same. Some have reduced the less economically important parts of their economies. So maybe 1 or 2% can be offset, but 4 to 5% of impact on world GDP in this last 1 year is I think. And remember that there are second-order effects showing up. The second-order effects can be quite. Now, the reason why I think everyone, including companies and markets and investors, are reluctant to sell, and frankly, from 1 year perspective, that is the right thing to do at this stage. But this inventories don't last forever. And I think these supply chain disruptions will get really extreme with every passing day. And at some point, I think the markets are likely to panic.
Raw material inventory is very, we are now holding very low inventories for domestic raw materials. But international raw material, domestic will be just about double digit in terms of number of days. International raw material is higher, so overall weighted average would be close to 25-30 days. If Middle East stays suspended, we have to ensure, and we are doing that, to keep the order base healthy for Europe, LATAM, and the US and Southeast Asia, so that we can manage our sales volumes accordingly. But Middle East sales is currently absolutely zero. On the raw material side also, the freight has almost doubled. So freight is going up, which we are trying to mitigate from the customer side. And container availability, I think, increasingly will be an issue, which could be a disruption going forward.
Okay, so we did hear the overall impact that comes in here as well. But on that note, we're going to slip into a very short break. After the break, we'll be joined by the management of Emcure Pharma, and we'll be discussing more in terms of semaglutide opportunity as well. Stay tuned.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Well, it's a down day for the markets, but there is one particular piece of news that the street will be looking at quite closely. Now, Emcure Pharma is the first management on the show, and the reason they're joining us is that the weight loss drug semaglutide's patent is set to expire in India. Several pharma players are eyeing a foray into the fast-growing weight loss market. In this backdrop, Novo Nordisk has partnered with Emcure to market and distribute its blockbuster obesity drug under the brand name Pavitra in India. We have with us Satish Mehta, who's the MD and CEO of Emcure, joining in to discuss the opportunities ahead for the company. Mr. Mehta, thank you very much for taking the time out. If you could just start by detailing, when exactly does semaglutide go off patent? Is it on Saturday? And how many companies are expected to launch the drug in the Indian market? There are estimates of around 50 companies launching. Is that the case? And where would Emcure be placed, considering that you do have a tie-up with Novo Nordisk, which is the innovator of the drug?
Thank you very much. It's an absolute honor and pleasure to join your show. As far as the patent is concerned, LOE is going to happen, from 21st of this month. And I don't know how many companies, but to the best of my knowledge, almost 50 brands are going to be marketed. So obviously, all the companies are looking at this particular product as a big opportunity. And I've been in the industry for the last 4 decades. This is probably one of the product of its kind of blockbuster, which is going to be hitting the market. LOE in due course of time, 50 brands will be hitting. And they are talking about maybe, and all numbers are being thrown. Somebody is talking about $250 million opportunity. Somebody talks about $500 million sometime back. They were also talking about $1 billion opportunity in our country. And the reason being, as far as India is concerned, we are close to 250 million guys who are having obesity, and 350 million people who have abdominal obesity. So to that extent, it's a huge market. So obviously, I personally feel that this should be a big opportunity. But as far as we are concerned, we got associated with Novo 3 months back, and we have been going and marketing the product. And to that extent, Povista, the brand recall is very good. In addition to that, unlike the products which will be going off patent, we have been essentially focusing on science and technology behind the product. Because one thing that is required to be understood, this is not a tablet which is getting genericized. This is one thing which is a biologic. It's a rDNA molecule. The solubility of the product is hardly 1%, highly insoluble compound. So one will be watching with interest how the market plays out, and there will be a lot of what I would say competition. Price war is also going to happen amongst all the generic players. In that, as far as we at Emcure is concerned, because of our association with Novo, we will be focusing on science, we'll be focusing on technology. We also have data, 50 clinical trials which have been done.
Mr. Mehta, that point is taken, but I have a two-part question. One is that you will not be launching your version of semaglutide in the market. Is that correct?
Absolutely correct. As far as we are concerned, we are completely aligned with no strategy.
Okay. All right. So you'll continue to be associated with Novo Nordisk. But if you just look at the numbers in terms of how Novo Nordisk is done in the market as compared to, say, Mounjaro, the market size is 50% or half of what Mounjaro has done. And now the market is going to get more competitive with many more companies selling at a much lower price at this point in time. Plus, you possibly have the fear of, consumers getting confused on the two brands, Novo's as well as Emcure's. So give us a sense in terms of how much of an opportunity you actually see from the semaglutide brand that you're selling.
As far as we are concerned, we see a great opportunity because, as far as the generics are concerned, they will essentially get involved in price war. As I was telling you some time back, that we will be more involved in selling the science. And in last 3 months, I have also been meeting a number of doctors. And to that extent, I think many of the doctors, in the short term for sure, they would prefer to go for the innovator. This is not any genericized tablet. And the other thing, that is happening, that as far as this particular product is concerned at the global level, it has also got approval, for MASH, it has also got approval for CKD. So to that extent, it is having a wider application. That's one area with the help of, technology and science and a lot of research work, which has been done by Novo Nordisk, to which, we will also have access. We'll be promoting our product to the doctors, and we will be essentially be focusing on science.
Mr. Mehta, on that itself, since you're saying there'll be 50 companies which will be launching it, you are doing it with the original innovator here, and it is a huge market again, but at a lower pricing. So what kind of revenue potential do you have from here? And will it be margin dilutive overall on a consolidated basis if sales continue to increase from this particular product?
Oh, it's very difficult to say at this point in time. Let's see what happens in the next 3 months, and then only I'll be in a position to opine. But as of today, I feel, that this particular product with the right strategy and the right pricing, that we have, we should be able to market the product, at a premium price. That's my take. Because innovation will always have its own niche in the market.
Okay. Would it be possible to tell us what the pricing is for your side of the drug?
No, it's very difficult. That's, work in progress. As far as we are concerned, along with Novo Nordisk, we watch the market condition, we know what's happening at an appropriate time, correct decision will be taken.
Well, Mr. Mehta, we had Mr. Bakshi of Eris Life Sciences actually mentioned that there's a possibility that the prices could fall to around 400 rupees per injection on a weekly basis. Do you think that that's possibly going to be the type of price reduction that we're going to see? Is that a realistic number for you?
I don't think it will come to that level. Actually, it's not going to happen. 400 is very much on the lower side. And I don't think, that will play out in the near future.
Okay.
And in the process, nobody will gain anything out of marketing this particular product at such a low price.
Okay, take that point. So 400 is not a price that you think would be the case in weight loss drug. Before we let you go quickly, Mr. Mehta, we are seeing what's happening with West Asia. Is it something which is impacting the supply side? What kind of inventory is the industry having, and particularly for Emcure as well?
No, but as far as this is concerned, there is going to be an impact in the sense, we are finding it progressively difficult to get the containers. The second thing that is happening, the solvents, are in short supply. The freight has gone up. And again, what really happens, that one of my suppliers just talked to me yesterday that as far as he is concerned, his plant, the gas supply has been stopped because they are giving preference to the consumer. So I think, let's see, in 10-15 days, we'll have a correct idea about what is the impact. And I wish, the entire, the war in West Asia, in next 10-15 days, there is some closure. Otherwise, everyone, including the pharma industry, is also going to be hurt. Make no mistake about that.
Okay, but I'm assuming you have inventories built up right now.
Yeah. Inventory has been built up. We're also proactively trying to get the solvents. But at the same time, maybe 30-45 days we can cover. But after that, if the war continues beyond, say, April, in that case, we will have to reassess everything. It is going to be a serious issue, serious problem.
Okay, if it continues beyond April, then that's a concern that even comes in for everyone. But thank you so much, sir, for joining us this afternoon, speaking with us in terms of semaglutide opportunity, as well as in terms of any concerns that come in going forward if the West Asia war continues. But on that note, we're going to slip into a very short break. After the break, we'll come back with more stock-specific action. Stay tuned.
Welcome back. You're still tuned into Halftime Report. Well, the big story today, of course, is HDFC Bank, where the part-time chairman, Atanu Chakrabarti, calls he resigns, citing ethical concerns. But the management says Chakrabarti's exit is not linked to the bank's conduct. Ritu is joining us to give us more details on this one. Ritu, over to you.
Well, it is a sudden and rather sharp exit at the very top for HDFC Bank. Atanu Chakrabarti resigning as part-time non-executive chairman and independent director with more than 1 year, by the way, still left in his term at the bank. Now, what is striking about this is how he exited, because in his letter, resignation letter, Chakrabarti pointed to, and I quote him, certain happenings and practices within the bank over the last 2 years that are not in congruence with my personal values and ethics, end of quote. Now, that is a very strong statement and naturally raised some questions, but almost immediately you had both the bank and then later the regulator itself moving to calm nerves. RBI, in a rare statement commenting on a specific bank, said HDFC Bank remains fundamentally sound with a professionally run board and no material governance concerns that are on record. And importantly, RBI says it will continue to stay engaged with the management going forward. Now, that's exactly what we had reported early this morning. And meanwhile, you had the bank also appointing HDFC Group veteran Keki Mistry as the interim part-time chairman for 3 months with RBI's approval. Now, our sources have been indicating the exit was not triggered by any regulatory issue. Neither the RBI nor the bank pushed for Atanu Chakrabarti's exit. It was very much an individual decision, but there were internal differences. We've been told that friction had been building for some time, largely around Chakrabarti's functioning style, which was seen by some as more executive in what is meant to be a non-executive role. In fact, the resignation appears to have caught the board off guard, and no detailed explanation was really shared with them beyond what the letter said, even when Atanu Chakrabarti was specifically quizzed about it in the board meeting. Now, on the con call today, Keki Mistry was categorical that there was no specific governance lapse that was ever flagged to the board as to the concerns relating to values and ethics that were pointed out by Atanu Chakrabarti in his letter. Keki Mistry made a rather strong statement, and again I quote him, at the age of 71, I would not have taken on this role if the bank's governance did not align with my values and integrity. You also had CEO Sashidhar Jagdishan on the call, who called it an unfortunate event and said the bank will now look at the organizational structure. Interestingly, ending with the statement saying the best of the bank will now start. So yes, strong words from the outgoing chairman, but equally firm reassurance from the RBI and HDFC Bank as to what's next. The bank will now, of course, need to find a permanent chairman. It will also have to potentially look at extending Sashidhar Jagdishan's role as MD and CEO with his current term ending in October, and of course manage this organization restructure all the while navigating a critical phase of its merger integration.
Okay, Ritu, thank you so much for that. And Ritu was also highlighting some of the commentary that came in the con call as well. Obviously, after Atanu Chakrabarti's exit, interim chairman Keki Mistry says that the chairman's exit is not linked to the bank's conduct or regulatory concerns. CNBC TV 18, a news break, that is something that has been confirmed. Listen in to more from the con call highlights.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent, in line with regulatory requirements.
As we move forward, we will sort of re-examine our organization structure, and with the consent and the advice of the board, we will announce it at the appropriate time. Not at this juncture, without the approval of the board, which I will take it up to them at the right time, post the financial year closure.
Okay, so that's the MD and CEO of the bank clarifying on all of the concerns. But if you just look at the valuations across private banks, it's not just HDFC Bank, have cooled off from their peak levels, with most of the stocks now trading at a noticeable discount to their past one-year highs on a price-to-book value on an FY27 basis. So as you can see, HDFC Bank is currently at around 2 times, Kotak Mahindra is at around 2.6 times. We have Axis also, which is shaved off valuations at around 1.6 times, and ICICI Bank, which is also lower as compared to its peak valuations of around 3 times in the past 1 year. Similar case for IndusInd Bank, but possibly one of the more resilient ones at this point in time. But nonetheless, let's get more on the markets. We have Mangalam now joining in to tell us more about what he's tracking in the F&O space. Mangalam, over to you.
Well, the good part is that there is no incremental selling, but the bad part is that there is a lot of selling nevertheless. The Nifty is down about 540 points, led lower by both the Nifty Bank as well as the IT index. So no support coming in from index majors. And even the broader markets, they're down by almost a little over 2% for both the mid and the small cap indices. And if you look at the advanced decline as well, right, from the start of today's trading session, there has been that gap between the two which has been maintained, the declines and the advances. By a factor of 5:1. So if you look at it, nearly 2,400 stocks which are in the red as compared to about 500-600 stocks which are in the green right now. The initial part of the decline that happened was on account of those put writers having covered their positions. Now that the market has found some sort of consolidation after this 500-point downtick that we've seen, the 23,300 call has emanated as a writer's favorite, and we've seen some writing at the 23,300 put and the 23,200 put. If you look at the premiums on all these options, it looks like the option writers have positioned themselves for support at 22,950 to 23,000. Remember, the Monday panic low on the frontline index was 22,955, and resistance is above 23,500. So those are a couple of important levels that we need to track on the frontline index. So Nifty support 22,950 comes up for you on the screen, between 23,000 as well, and the supply starts around the 23,500 mark. Apart from the usual suspects, we've been speaking about HDFC Bank, the oil marketing companies, etc. A couple of these stocks, surprisingly seeing a lot of short positions being added. Voltas and Dixon Tech. Voltas, remember, was a big mover in the recent past on the heat wave concerns and a belief that maybe this summer would be a lot better than the last summer. But turns out there are some shorting activities which are on both Voltas as well as Dixon. So apart from the usual suspects, these are a couple of stocks that stood out.
Okay, take that point. Thank you so much for bringing us all those updates from the F&O space, Mangalam. Let's get in Ashish Kyal, CMT, author at Wave Strategy Advisors, joining us now. Ashish, what is the next important level on the Nifty that we should be watching out for?
Hi, afternoon to you and all the viewers. If you look at Nifty, you see the prices have been showing violent move on either side, not only downside. If you look at past 2 days of movement, we saw a sharp reversal on the upside of nearly 700 points from 22,950 towards the level of around 23,840, 850 level. So there has been sharp reversal upside. But every time market tries to recover, it opens with a gap down of 500, 600 points, which we are seeing even now. So for me, the support is going to be at 22,950. There are still a lot of put sellers sitting at 23,000 levels. There are call sellers aggressively building up positions around 23,400. So it looks like market is going to be in a range with 22,950 as an important support and 23,500 to 23,550 as a hurdle. Having said that, I think the strategy over here can be very simple. Any break below today's low, which is around 23,180, can intensify the selling pressure. You might end up getting another 200 points on the downside towards 22,950. So avoid buying this market unless and until we start seeing some gap filling activity about 23,500. So 23,500 is the hurdle and 22,950 is the support. Trade accordingly.
Okay. All right, Ashish. Just hold that thought because we have Brent, which has now hit $114 per barrel. Remember that in 2022, during the Russia-Ukraine war, the high that Brent crude hit or sustained around those levels was around 120. So do watch out for those levels. But nonetheless, Ashish, just wanted your thoughts on the banking space. We have HDFC Bank, which is at a fresh 52-week low. A lot of the private banks are either close to those levels or at fresh 52-week lows. How do you approach it?
See, the main culprit in the sell-off that we are seeing over the past few weeks, banking has been a major hurdle because of which the entire sell-off is witnessed across the space. So if you look at Bank Nifty as of now, Bank Nifty is trading around 54,000, and the past 2-3 weeks of candle have been very strongly bearish. Having said that, Bank Nifty has a very important support of 53,400. 53,400 is where we witnessed at August 2025, from where the prices bounced back. So that's a very important support, and that has to be remaining intact. It's a very crucial price action area. And along with that, a few banks, including HDFC Bank, has been in a severe sell-off but oversold territory. Today, we are seeing some kind of a profit, some kind of a reversal on the upside. So the bank opened sharply lower at 769. Seeing some kind of reversal, we are already at 812, and the gap area is at 832. So I think banking space as a whole can be oversold right now, and we should start expecting some kind of a pullback eventually. But be very careful, because these pullbacks are getting sold off with gaps on the next day.
Absolutely. Have to be cautious here as well. But Ashish, thank you so much for joining us this afternoon on the show, giving us some of those important technical levels that we should keep an eye out on. On that note, we're going to step into a very short break. We'll come back after the break. We'll discuss more on markets, more on stock-specific action. Stay tuned. Welcome back to Halftime Report on CNBC TV 18. Nifty continues to be around the 23,250 levels. But now we have another stock in the Nifty 50 that's moved to the green as well, flip-flopping between the red and the green. That's Bharti Airtel. Apart from that, ONGC, Coal India continue to be there and private banks continue to be under pressure. But let's move on. And sources tell CNBC TV 18 that Prudential Corp is looking to exit ICICI Prudential Life Insurance. Yash is here now to give us more details on this one. Yash, over to you. What are you picking up here?
Well, Prudential Corporation has been a long-time partner for ICICI Bank in its life insurance journey in the country. But what we've been given to understand from our sources now is that the company, that is Prudential Corporation, is looking to exit life insurance, ICICI Prudential Life Insurance. Remember, Prudential Corporation holds about 21.93% stake in ICICI Prudential Life Insurance, and they could look to monetize this particular stake, about 22% stake, either via block deal route or an offer for sale route, similar to what they did as far as the AMC business itself is concerned. Prudential stake in ICICI Prudential Life Insurance is valued at about 18,500 crore rupees. That is as per the current market cap of ICICI Prudential Life Insurance. And as far as, you know, its decision or intention of exploring this particular stake sale is concerned, what we've been given to understand from our sources is that Prudential Corporation is looking to get more control, more ownership in India's life insurance industry, and hence looking to sell this particular stake in ICICI Prudential Life Insurance. We are also given to understand, though, early indications that Prudential Corporation could be in conversations with Bharti AXA Life Insurance for acquisition of Bharti Life Ventures' entire stake in Bharti AXA Life Insurance Company. We've written to all parties involved in this transaction. A response remains awaited from all the companies.
Okay, all right. So we'll come back to you, Yash, when there are more updates on this. Thank you so much for joining us with all those details. We'll do one thing. We'll step into another break. When we come back, we'll get you more on the markets and stock-specific action. Stay tuned for that.
Welcome back. Well, still weak for the markets. We have the Nifty, which is now down over 500 odd points. We have the mid-cap index, which has shed over 1,260 odd points as we speak. And just keep your eye out on the India VIX, which is a volatility barometer. That one has spiked 15% and is now up 127% for the year. That's all the time that we have on the show, but do stay tuned. Business Lunch will take all of the action forward.
Stocks see a deep gash of red as the war in West Asia hurls out of control. Financials, realty and IT are the biggest drags, while energy is the most resilient. Atanu Chakraborty steps down as part-time chair of HDFC Bank, and Keki Mistry steps in with the consent of RBI, which says there is no material concerns on conduct or governance. Even as Atanu flags values and ethics, the bank stamps out any concerns but admits to differences in thinking. The stock slides. Brent jumps to near $112 per barrel after Israel attacks Iran's South Par gas field. Iran retaliates, targeting assets across the Gulf, sparking a sharp surge in oil and gas prices. Trump denies U.S. involvement in Israel's attack. Axis Bank's chief economist Neelkant Mishra expects a global recession if the Iran war continues for 4 more weeks. He sees the market going into panic if the war doesn't end by mid-April and second-order impacts become visible. Hello and welcome to Business Lunch, live from the CNBC TV 18 Motilal Oswal studio. I'm Arundhati Ramnan, and with me as always is Harmaz Patakia, and you're probably wondering where he is. He's at the wall and he's going to take us through what's happening with the markets today, which the West Asia war has sent into a tizzy. Hormaz?
Indeed, and the 3-day recovery that we saw on the index turned out to be a very fragile one, as we have almost given up 2/3 of that recovery already. And the biggest factor behind this fall today is the rise in oil prices. Now, oil prices yesterday were a little lower. Brent at one point had even threatened to break below the $100 a barrel mark. Today, it's at 114. That's the worry. Now, US crude is not seeing such a big price action, but Brent is the one, 6% higher now, $114. That's the first big worry. The second big worry is the Nifty Bank. And the Nifty Bank today is down almost 1,600 points. That's seeing some bit of recovery from the lows of the day. On last check, private banks so far had shaved off almost 85,000 crore rupees in market cap. And this slight bit of recovery that you see on the Nifty Bank is because of the recovery that is seen in HDFC Bank. At one point in pre-open, HDFC Bank was down 9%. And then you can see there is a bit of an intraday recovery that has been playing out over the last 30 minutes or so. Still down 3.5%. Still being the index heavyweight is the one that is down and is contributing the most to the Nifty downside as of now. But the 800 levels has been protected on HDFC Bank. That is the big positive so far, at least going into the second half of the trading session. But you see the pain in the broader markets. You take a look at the number of stocks that are in the green, they would either resemble a landline number or a pin code. You look at the Nifty, only 2 stocks in the green. Nifty 100, 5, Nifty mid cap 6, small cap 7, and the Nifty 500 has only 44 stocks in the green, which means that over 450 stocks in the Nifty Bank or in the Nifty 500 are trading with losses. Now take a look at the sectors where every single constituent is trading with losses. And that's not one or two. The Nifty Bank, financial services, IT, real estate, auto, FMCG, PSU banks, can't discount metal and pharma. They have only 1 or 2 stocks that are in the green, fidgeting between gains and losses. But these are the ones where every single constituent is trading with losses as of now. Now the biggest impact on the rise in oil prices has been felt on the oil marketing companies. Not just today, HPCL is now nearing a 52-week low. BPCL and IOC too have extended their losses now. There was a brief recovery earlier in the day that has been sold into, and all of these 3 stocks are down at least 25% so far in the month of March. Now take a look at the most active names on the Nifty 500. The recovery in Adani Total Gas is seen today 9% higher, but the recovery in Eternal has been sold into. We did a big layoff on the quick commerce names yesterday, and Eternal is one of them, 5% lower. And L&T, the most exposed name to the West Asia crisis, down almost 20% already in this month of March. Metals is another name. The dollar is back at 100, and that is not good for metal names. And Hindustan Zinc, of course, there is a big silver play as well. Silver yesterday was down to almost $75. That is having an impact on Hindustan Zinc. The Lloyds Metals, copper has given up all the gains of 2026, has turned negative for the year. Hindustan Copper is down 4%, and APL Apollo 2 not doing well in today's session. The one sector that did well yesterday was IT, and that recovery too has turned out to be short-lived. Be it large cap IT, be it mid cap IT, all of these names trading with losses of close to 3%, led by Infosys and TCS. And lastly, there are names that are at 52-week lows. It's a long list of stocks, but prominent among them, Bata has been a rank underperformer, continues to remain at 52-week lows. Kotak Mahindra Bank is one of the 5 Nifty names that are at 52-week lows, including HDFC Bank and ITC. Some of the others include PCBL and Ambuja Cement, still at 52-week lows. So does not look a pretty picture as of now. It's the Sensex weekly expiry today as well. It promises to be a very action-packed second half of what has been a painful day so far for the markets.
Absolutely, Hormaz. Not a pretty picture at all. And the war in West Asia is roiling markets around the world. And, you know, one of those key factors is the rise in crude oil prices, as he pointed out, right? Prices have surged past $110 per barrel after Iran carried out fresh attacks on multiple energy facilities across West Asia, raising fears of disruptions to global oil and gas supplies. Iran launched missile strikes on a Qatari facility housing the world's largest LNG export plant. Saudi Arabia also reports damage to facilities, while UAE reports intercepting missiles that targeted energy infrastructure in Abu Dhabi. CNBC's Dan Murphy now joins us with the latest updates. Dan?
Good morning to you. Well, as you've mentioned, Israel hit a major Iranian gas field, and as a result, Iran has escalated its attacks on Gulf energy infrastructure. Qatar was hit with ballistic missile attack today on its Ras Laffan industrial city site. This is the world's largest LNG export hub. Qatar Energy there saying there was extensive damage and the strike caused a fire, but there were no casualties. And remember as well, this site has been offline since early March, since Iran's first drone strike. And the latest strike means any near-term restart is unlikely. That's certainly something that markets are attempting to price now as well. And here in the UAE, missiles targeting the Habshan gas facility and Bab oil field were intercepted, but falling debris forced both of those sites offline. Again, no injuries were reported here. And Saudi Arabia's critical energy infrastructure was also targeted. The strikes on energy infrastructure here certainly inflaming America's closest Gulf allies as well. The reaction to this coming thick and fast. Qatar has expelled Iranian diplomats, calling this strike a, quote, blatant aggression. The UAE also condemning the attacks as terrorism and said it was a direct threat to global energy security. And perhaps most interestingly was the reaction from Saudi Arabia. Saudi Arabia's foreign minister using some of his strongest language yet, saying Saudi Arabia reserves the right to respond politically or non-politically. At the same time as well, the fallout in Washington also continuing here as we see this escalation continuing. President Trump taking to Truth Social and saying Israel will not strike South Pars again, but if it does, the United States will, in his words, massively blow up the entirety of the South Pars field. Now, this is important because South Pars supplies about 80% of Iran's domestic gas needs. Its destruction wouldn't just hit the regime, it would hit an entire civilian population as well. So markets are certainly pricing that as a live possibility. And as you flagged, Brent is trading close to this 110 US dollar a barrel handle this morning. And on Truth Social, President Trump wrote that the US knew nothing about Wednesday's Israeli strike on South Pars, but Axios, citing both Israeli and American officials, reported that Trump was informed in advance. The president either approved a strike and then publicly denied it, or the chain of command between Washington and Jerusalem is less coordinated than either side is admitting. Neither of those explanations are reassuring for the markets. And what's also interesting to watch now is the fact that Reuters is also reporting that the US is considering deploying thousands of troops to the region aimed at securing key shipping routes and critical energy infrastructure, including addressing that major block still underway in the Strait of Hormuz, part of the reason that we are seeing triple digits for Brent and near triple digits for WTI. So exactly what happens next here, how Iran intends to respond, what the Gulf states will do, and how the political fallout resumes is all top of mind for international investors right now.
Dan Murphy, thank you for summarizing the entire chain of developments that have taken place in West Asia over the last 24 hours. But the escalation in the war is likely to further disrupt the global energy market. Sonal is joining in with more on this. Sonal.
Well, the global energy market is reacting to a series of developments across key gas infrastructure in the Gulf. The South Pars North Dome gas field, the world's largest natural gas field, has come under attack. The field holds an estimated 48 trillion cubic meters of gas, which is accounting roughly 25% of global proven reserves. It forms the backbone of gas production for both Iran and Qatar and is central to global LNG supply. At the same time, Ras Laffan Industrial City, which is Qatar's main LNG export hub, that has been targeted too. Ras Laffan handles approximately 77 to 80 million tons per annum of LNG exports. That is close to 20% of global LNG trade. With supplies primarily moving to Asia and Europe, any disruption here has direct implications for global gas availability. In the UAE as well, gas operations have also been affected. The Habshan gas processing plant has halted operations. This is a key processing hub in the UAE's gas network, handling billions of cubic feet of gas per day. Now, the disruption points to a broader risk to energy infrastructure across the Gulf region. Markets have responded to these developments. Oil prices, they have risen from $105 to $110 per barrel. LNG markets are also pricing in tighter supply conditions now. We'll also see possibility of cargo rerouting from their routes. Taken together, these events are impacting a significant portion of the global energy system. Around 25% of global gas reserves are linked to the affected field. Nearly 20% of LNG trade is exposed to this, and close to 20% of global oil flows through this broader region. The key takeaway is on supply timelines. So even if the Strait of Hormuz remains operational, LNG supply from the Middle East is likely to remain constrained over the next few months due to the infrastructure disruption and precautionary shutdowns. And that is very important.
All right, Sonal, many thanks for those details. But on that note, it's time for us to head into a short break. But as we do that, here's a programming note. Markets move in cycles, and for 26 years, we've been tracking them very closely. Because in volatile times, what investors really need is insight, not just information. And above all, perspective, not panic. If you have a question about your investments, we're here to help with guidance from experienced market experts who understand today's fast-changing market environment. So join our special market editors on Your Stocks and MF Corner every day at 2 p.m. and stay one step ahead of the market.
Well, 23,200 was briefly taken out on the index. So now we are 570 points lower as we speak. So, of course, this is not courtesy HDFC Bank. The recovery in HDFC Bank is now getting slightly sold into as well. Now, at one point, the stock was down around 3. Yeah, there you can see some bit of selling coming at higher levels as well. But the top loser on the Nifty right now is Shriram Finance. 6.5% lower on the stock now. The top loser on the Nifty. Eternal is the other one, 5.5% 4.5% lower here as well. And as I mentioned at the start of the show, 5 Nifty stocks are at 52-week lows. Add another one to it. Bajaj Finserv is now at a 52-week low as well. So 4% lower on that stock, and very close to a 52-week low is Bajaj Finance. So 4.5% gone there as well. 830 is the 52-week low for Bajaj Finance, currently at 839. So very close to 52-week lows as well. But the big story today, of course, being HDFC Bank and the fact that its part-time chairman Atanu Chakraborty resigned, citing ethical concerns. But the management says that Chakraborty's exit is not linked to the bank's conduct. Ritu is here with more details on this. Ritu.
Well, it is a sudden and rather sharp exit at the very top for HDFC Bank. Atanu Chakraborty resigning as part-time non-executive chairman and independent director with more than 1 year, by the way, still left in his term at the bank. Now, what is striking about this is how he exited, because in his letter, resignation letter, Chakraborty pointed to, and I quote him, certain happenings and practices within the bank over the last 2 years that are not in congruence with my personal values and ethics, end of quote. Now, that is a very strong statement and naturally raised some questions, but almost immediately you had both the bank and then later the regulator itself moving to calm nerves. RBI, in a rare statement commenting on a specific bank, said HDFC Bank remains fundamentally sound with a professionally run board and no material governance concerns that are on record. And importantly, RBI says it will continue to stay engaged with the management going forward. Now, that's exactly what we had reported early this morning. And meanwhile, you had the bank also appointing HDFC Group veteran Keki Mistry as the interim part-time chairman for 3 months with RBI's approval. Now, our sources have been indicating the exit was not triggered by any regulatory issue. Neither the RBI nor the bank pushed for Atanu Chakraborty's exit. It was very much an individual decision, but there were internal differences. We've been told that friction had been building for some time, largely around Chakraborty's functioning style, which was seen by some as more executive in what is meant to be a non-executive role. In fact, the resignation appears to have caught the board off guard, and no detailed explanation was really shared with them beyond what the letter said, even when Atanu Chakraborty was specifically quizzed about it in the board meeting. Now, on the con call today, Keki Mistry was categorical that there was no specific governance lapse that was ever flagged to the board as to the concerns relating to values and ethics that were pointed out by Atanu Chakraborty in his letter. Keki Mistry made a rather strong statement, and again I quote him, at the age of 71, I would not have taken on this role if the bank's governance did not align with my values and integrity. You also had CEO Sashidhar Jagdishan on the call, who called it an unfortunate event and said the bank will now look at the organizational structure. Interestingly, ending with the statement saying the best of the bank will now start. So yes, strong words from the outgoing chairman, but equally firm reassurance from the RBI and HDFC Bank as to what's next. The bank will now, of course, need to find a permanent chairman. It will also have to potentially look at extending Sashidhar Jagdishan's role as MD and CEO with his current term ending in October, and of course manage this organization restructure all the while navigating a critical phase of its merger integration.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent, in line with regulatory requirements. None of us as board members are aware of what are the specific issues which Mr. Chakraborty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years.
As we move forward, we will sort of re-examine our organization structure, and with the consent and the advice of the board, we will announce it at the appropriate time. Not at this juncture, without the approval of the board, which I will take it up to them at the right time, post the financial year closure.
On that note, it is time for us to head into another short break, but more news and updates on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. The wait is over as Ranveer Singh returns to the big screen with Dhurandhar 2. The franchise's latest installment is already shattering records and drawing massive crowds to cinemas nationwide. Shilpa Ranipeta joins us now with all of those details. Shilpa?
Now, why is this so important for PVR Inox? Now, Dhurandhar 1 itself was a huge hit. It contributed 29% to the Q3 revenue of PVR Inox. It brought in about 844 crores in box office sales. Now, Dhurandhar 2 is expected to clock anywhere between 1100 to 1300 crores in its lifetime run. And that would make it the highest Hindi original grossing film. And if you put together the franchisee, which is Dhurandhar 1 and 2, brokerages are expecting that it could clock about 2,000 crores in box office collections, and that makes it bigger than the Bahubali and the Pushpa franchisee as well. A major boost for a Bollywood original, something that we've not seen so far. And this effect may also spill over into Q1 of FY27 and push up occupancies for PVR Inox and for the movie exhibitor industry that is still struggling to come back to pre-COVID levels.
Shilpa, thank you for that update. Call it Dhurandhar, call it Bahubali. The bears are claiming all of these adjectives right now. The Nifty is now down 600 points and 23,200 convincingly gone. At the lows of the day, the Sensex is down 1,900 points. No let-off in the broader markets as well. Take a leave on this edition of Business Lunch from Arundhati and me. Thank you for watching. Midcap Radar starts off the final 2 hours of the trading session.
Good afternoon. Welcome to Midcap Radar. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Vivek Iyer. There's no respite from the fall that we've been seeing. In fact, Nifty is up the days though as we speak, below the 23,200 mark. It's almost a 600-point cut on the benchmark, and the mid caps, the Bank Nifty, they are the ones which are outperforming by a slight margin though. But yes, it's an underperformance nevertheless. Hey, Vivek.
Good afternoon, and not too many places to hide as far as today's concerned. Yesterday did see pockets of green as far as IT was concerned, but today most of the gains are seen even in those sectors have given up most of the gains. But a lot lined up on the show, important conversation as well. Let's start off with the top headlines. Stocks see a deep gash of red as the war in West Asia hurtles out of control. Financials, realty and IT are the biggest drags, while energy is the most resilient.
Major escalation against energy infrastructure from warring Israel and Iran pushed crude to $112 a barrel. Prices have surged a whopping 50% since the start of the conflict, approaching a fourth week. Oil marketing companies HPCL, BPCL and IOC, the stocks of these companies down and out.
Prudential explores an exit from life insurance JV with ICICI Pru. Sources tell CNBC TV18 Prudential Corp may offload its entire 21.93% stake via block deals or an OFS. Stock bleeds over 3%.
RBI clears Bain Capital's acquisition of joint control of Manappuram Finance and subsidiaries. Also clears indirect changes in control and management of key subsidiaries. Jefferies maintains a hold rating, says margins are nearing a bottom and re-rating depends on a visible turnaround.
Mild recovery in the tech pack gets sold into amid the broad-based weakness, a near 3% gash of red on the IT index.
Okay, all right, those are the top headlines that we are tracking. The mid-caps, they're underperforming for sure. The index is down 2.6% as we speak. Bank Nifty is giving it company as well. Across the board, most of the, or actually all the sectoral indices are in the red today. Nifty Realty being one of the biggest laggards in trade. We did see some recovery in Nifty Bank, but that has been sold into, and that's the case across the board. The small cap index too should be on your radar. But there are, a couple of these chemical names which are buzzing in trade. We'll discuss them. But for now, let's talk about our segment, mid-cap movers. We have Gaurav to take us through the mid-caps that are moving around in trade. Gaurav.
Well, yes, if you look at the mid-cap index, that index itself is down 2%. And even if you look at the markets, there are plenty of stocks which are in red. But if you look at the upside, we have got a couple of stocks where we are seeing more than 5% gains. We've got companies like Butterfly, Gandhimati, Adani Total Glass. All of these stocks are up in trade. And let's also not forget about companies like JP Power, Stokecraft. There also we are seeing good volumes and at the same time some gains which are being registered by the companies. Apart from that, if you look at the mid-cap index itself, only 4 stocks as I checked the last time were in green, and we've got companies like NTPC Green, Oil India, Bharti Hexacom still holding the fort when it comes to mid-cap index. Apart from that, on the losing side, we have got whole host of stocks. First, let's talk about some of the losers, key losers in the likes of NBCC, Petronet LNG, Swan Defence. Remember, the company was down 5% even yesterday, and today also it has reached its lower circuit. Apart from that, let's also not forget about Urban Company. Yesterday we saw there were some gains which were registered, but today company has given up almost all the gains. And let's also not forget about Bharat Forge. When it comes to top mid-cap losers, we've got companies like HPCL. Now, definitely there is some pressure in the energy segment, and that's the reason why we are seeing some pressure in HPCL for the last few days. Today also this pressure remains. Apart from that, Voltas Energy, Godrej Properties, Prestige Estate, all of these stocks are down in trade. When we look at the market, it is down, and then we have got a couple of stocks who have also hit its 52-week low level today. We've got companies like SBI Card, Patanjali Foods, who have been there consistently near its 52-week low level. But apart from that, we've got companies like Colgate, PCBL, Aegis Vopak, all of these stocks hit its 52-week low. Whether or not they will recover is a story for tomorrow, but for now, these stocks are under pressure.
Well, absolutely right, Gaurav. I'm sure you struggled quite a bit to find any specks of green, even as far as the broader end of the markets are concerned. Well, it's a good time to welcome Sudeep Shah of SBI Securities for a quick technical check on the market. Good afternoon, Sudeep. Thank you so much for joining us. It's been a while since we connected. Well, we did see 3 days of consecutive gains as far as the market was concerned, but quickly sold into. How are you looking at the markets at the current level?
Good afternoon, Vivek and Sonal. Vivek, see, what we feel is that the 3 days of up move and this directly the way markets have opened the gap down and almost at the lows of Tuesday, the sell-off is just intensifying every hour. And a lot of good quality stocks, whether large caps or mid caps, are also now feeling the heat and extended sell-off is being witnessed there. So the trend is absolutely on the downside right now. And one should not be too say adventurous in terms of trading bets on the long side. So for me, the resistance now, how we see it is at 23,400, 23,450 has to be crossed, and the indices need to close above this zone of 23,450 for the markets to form some kind of a temporary bottom, or we need to have some kind of a respite. So 23,450 holds significant importance, and on the downside now 22,900, 23,000 zones can be retested. So the first level that we are eyeing on the downside is 22,900, 22,950. And in case that is taken out, 22,730.
You think that will happen today itself?
Sorry?
Do you think that is the level we could see today? Because we've been seeing incremental selling come by. Still 2 hours for the trade to end. Do you think 23,000 breaking that level is a possibility, considering that there's no respite that we have seen?
So not expecting that level to be breached today, 23,000. We might take some support closer to 23,030, 23,080 levels. If you see the option writing data, also 23,200 put writers are still holding fort, and 23,100 put writers are also adding positions. So that means that on the downside, after this 580, 550, 580 point fall, there could be some support closer to 23,050, 23,080. That is for the day. And we just need to monitor how the geopolitical things progress today also, and how the war and the crude prices react. So that would be the key here. So that is the reason I'm saying that from a positional perspective, we may be retesting 22,900, 22,700, but may not be the case from today's perspective.
Okay, Sudeep, going to ask you to be a little adventurous. Any buy or sell call for our viewers today?
Yeah, there are a couple of names that are there on our radar from the mid-cap space, and they're all quality names. The first one that is there on our radar is Data Patterns. Now, this stock has been outperforming the mid-cap indices as well as the broader markets, and the stock is closer to its all-time high, around 3280, 3285. The stock has taken support closer to 3100, 3150 in recent falls in the last 7-8 sessions, has not broken that zone. And even today also, the stock is holding strong, just 0.5% down in such kind of a carnage. So we feel from a positional perspective, a good quality stock at a decent price, and this can be added at current levels and on dips closer to 3240, 3250. Stop losses would be around 3200. The targets on the upside, the first target would be 3400, followed by 3450. The second stock that is there on our radar is GE Vernova TND. Now here also, this stock also has given good breakout on the upside, and we feel that the stop losses here could be 3700, 3680, just 3680 to be precise, and this could be bought at current levels and on dips to 3740. The targets on the upside would be 3900 and 3980.
Okay, take that point, Sudeep. Thank you so much for joining us with your thoughts today on the index levels and individual names as well. We'll do one thing, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action and discuss some sectoral moves as well. Stay tuned for that. Welcome back. You're still tuned into Mid-Cap Radar. The big story has to be the disruption that we've seen in the Middle East with some of these gas facilities being hit and the rise in oil prices that we saw as well. What's the impact on Indian equities and Indian stocks? Probal Sen, energy analyst at ICICI Securities, is joining us now. Probal, good afternoon. Thank you so much for joining in. We are talking about higher prices, but do you think that is a bigger worry, or the availability of energy has become a bigger worry now?
I think today's update by Qatar Energy very clearly lays out that there's been extensive damage to the Ras Laffan complex, and that brings into focus the fact that even if the strait were to, let's say, reopen tomorrow, those LNG supplies that have gone away, which is about 20% of the global liquefaction capacity, those can't come to the market anytime soon. Now, we don't know what the extent of the damage is, but I think previous commentary by them suggested that by the time they restart operations at the complex, it would take 6 weeks for the complex to reach full capacity. So now that the restart itself is in question in terms of when the facilities will be properly come into production, it's anybody's guess in terms of when those gas volumes would start to flow normally. Add to that the fact that refining capacity is also starting to get hit and get impacted. Almost 1.7 to 1.9 million barrels a day of capacity or complexes have been hit. We don't know how soon they will all restart. I think Saudi Arabia did say that they have restarted the refinery that was hit, but part of that still remains under maintenance. So there's just a whole lot of supply disruptions in addition to just the flows getting impacted on the strait now. And I think that is probably a bigger worry.
Okay, Probal, get that point completely. So even after, assuming that the war ends early, even after that, you're expecting extended period of disruption, especially as far as gas supplies are concerned. So now, what is the kind of range that you're working with, especially as far as gas prices are concerned, and what kind of a hit will it take? Will the coverage of stocks under your universe take on account of the higher prices?
Frankly, at this point of time, we still believe or would continue to like to believe that the disruptions will not extend beyond the first quarter of next year. That may be a fool's optimism in the current environment, but that's sort of the base case that we are looking at. Even a disruption that persists for the next couple of months, which is to say, let's say, the end of May or thereabouts, that itself would actually have fairly material prospects or downside prospects rather on the earnings of the OMCs in particular. With upstream, I think it's a little bit of a situation where in the current environment, obviously their standalone earnings look extremely healthy, but I do believe that if oil prices were to persist at this level, the government will step in at some point of time and basically try and limit the damage which is going to be faced by the refiners who have to purchase crude at these levels. So even there, the upside could be capped to a certain extent. When that happens, we don't know. In the Russia-Ukraine conflict, the taxes and the duties started getting imposed, if I remember, from July onwards, while the conflict had been started from February or March or thereabouts. So there's probably a few months of super normal earnings that are still in store for upstream. As far as gas companies is concerned, see, the issue really is at the moment, supplies to the domestic and CNG segment are going to continue. And if you look at our domestic supply scenario or our domestic production scenario, I would believe that domestic and transportation segment supply would be the last to get hit, if supplies cannot get resolved at all. So to that extent, I think IGL and MGL probably relatively see a little bit of a less of a hit. Companies which have more of industrial and commercial volumes like Gujarat Gas and of course the overall situation with respect to, let's say, GAIL, those I think are more vulnerable right now because that's a straight supply cut and a straight hit in terms of volumes that they're staring at this point of time.
Probal, we've been talking about crude oil prices, and while we talk about the basket, India basket, which is at $146 per barrel, that is not what these OMCs are really getting the crude oil at, right? Can you explain how do we look at these two numbers? Brent at 112, we have Dubai and Oman at around 135, 140, and that's why the Indian basket looks higher, but we're also getting Russian oil. So how can one read these numbers?
So from what we understand, Russian crude is available at about 99 to 105. At least it was till recently. Today, crude has once again jumped very, very sharply. So, we don't know what the price is going to be tomorrow. But Russian crude is still available at basically a small premium to Brent. That is our understanding. As far as the first question in terms of the difference between paper crude and the physical crude, you're right that Dubai and Oman benchmarks have actually jumped. But the fact is that I'm not aware that Dubai and Oman crudes are actually flowing to India at this point of time in any meaningful quantity. So while that price appears alarming at 130, and that basically accounts for the increased freight costs, the kind of uncertain insurance costs, and the difficulty of evacuation of that crude at this point of time. So frankly, we don't have any clarity right now on whether crude is actually being purchased at that price by any OMC or even Reliance for that matter. At this point of time.
Probal, I know this is a time when we are not able to have these conversations with a lot of these oil marketing companies. It's the government who's really having those communications. But have you been able to speak to anybody? What kind of conversations are you having with any of these refiners for that matter?
No, I think, frankly, the official line is what it is. They continue to maintain that around 20-25 days or even up to 30 days, cover is there, and therefore refinery operations continue at normal levels. And that's something that is true for Reliance as well, from what we understand. So as of now, again, it really depends on the duration of this disruption. If, let's say, in the next couple of weeks, we continue to see maybe easing of the strait in some ways. I was looking at some data earlier that against about 100 odd vessels that used to transit the strait pre-conflict, the total number of cargoes, including oil and container cargoes that have sort of traversed the strait in the last 18 days, is just about 95. So, I mean, this is not a sort of shortfall that you can mitigate against. And I'm not sure anybody would be willing to come on the record and put a definitive number on where, what the situation is. As of now, what we can see is that till March, operations will continue to be normal. And then I guess it will depend on where the conflict is. And we can only get some clarity maybe after that.
Absolutely. We're all waiting for clarity, Probal. But thank you once again for joining us and helping us make sense of the kind of impact that the disruptions overnight will have as far as the India crude as well as gas basket is concerned. Well, we'll now slip into a short break. On the other hand, an exclusive news development from CNBC TV 18 and stock-specific action. Welcome back to Mid-Cap Radar. Well, this is CNBC TV 18 exclusive. IRDAI has asked insurance to have significantly lower commission on insurance products listed on Bima Sugam. Yes, joins in with exclusive details.
Well, you know, this very important meeting between the insurance regulator, which had the chairman himself, IRDAI chairman, as well as member non-life present in the meeting, along with all insurance CEOs, happened on two most important things. One, on the way forward for Bima Sugam, which is going to be an online insurance platform for sale, marketing, that is servicing and claims of insurance policies. And the second topic of discussion was PIR, which is, Public Insurance Registry. What we've been given to understand is that IRDAI in this meeting asked insurance companies to have significantly lower commissions on insurance products, which will be listed on Bima Sugam. As a reply to that comment, what we've been given to understand from our sources is that insurance companies replied saying that Bima Sugam will be a zero commission model, which means there won't be any commission whatsoever on the sale of insurance policies, and the only thing that will be attached to the cost of insurance product, that is will be attached to the premium for the insurance product, will be the platform fees, which will be significantly lower than what insurance companies pay anywhere today. Motor insurance policies, according to our sources, are likely to be listed on Bima Sugam in the next quarter itself. That will be the Q1 of FY27. In Q2, health as well as term life insurance policies will be available on Bima Sugam for transactions, which means for sale, which means by first half of FY27, motor, term life as well as health insurance policies will be available on Bima Sugam for sale. Another important aspect, as I mentioned, was PIR, the Public Insurance Registry. This will be a consent-driven infrastructure covering the entire policy cycle of every individual. The claims that he's taken, the amount of sum insured that he has across insurance companies, any disputes against that individual, every data, and it will be plugged to Bima Sugam as its data bank for better underwriting. This is what the important meeting discussed, and the outcome will follow in the coming months.
Well, thank you so much, Yash, for joining in and giving us important developments as far as the entire insurance space is concerned. All eyes now as far as commission is concerned on the Bima Sugam platform. But with that, it's all the time we have on this edition of Mid-Cap Radar. MF Corner when we return.
Hello and welcome. You're tuned into MF Corner. I'm Sonal Bhutra. With me, as always, is Vinny Motiwala. We've been seeing wild moves in the market on the back of West Asia war. The question that comes to every viewer's and investor's mind is how can they weather the storm and what all steps can be taken to at least not see those major swings in the portfolio as well. To discuss this and more, we are now joined by Deepak Shenoy, CEO at Capital Mind Mutual Fund. Deepak, good afternoon. Thank you so much for joining in. I'm sure you are getting a lot of these queries, what to do, what not to do at this point in time. But tell us, how is the current situation different from what we've seen earlier? Uncertainty, of course, one of it. But are you seeing some more fear or panic when you speak to investors or when they approach you?
Not necessarily. I think investors have become very aware of these things, Sonal. I think there's been a lot of crises that have happened in the last 3 or 4 years. People are a little worried that it's been an elongated period of underperformance because we've had about maybe 3 or 4 years, 3 or 4 months, 18 months now of relative underperformance. The bigger differential this time is it's not the whole world that's crashing. It's specifically India that seems to be hurting a little more, whether it is because of foreign investors exiting, or it is because our perhaps the rupee declining. But whatever it is, it's causing the thing that India is underperforming the whole world. In 2022, India outperformed the world, even though we fell, 15-16%. We fell less than the rest of the world. This last 1 year or so, the rest of the world, whether it's Korea or the US, they have performed fairly well, whereas India has suffered. So I think that, fear has kind of come in. But these are normal cycles. I think in the long term, people are more aware that we're seeing more interest in investors adding more money. But I think this relative dissonance compared to the rest of the world is a little concerning, and we have to talk through it carefully, saying that we have to last through this time rather than believe that something will change overnight.
Absolutely, Deepak. Good afternoon. Point taken there. You said that investors are looking at long term also, but given a bit of an underperformance versus the globe, a bit of a concern comes in. You said investors also maybe are looking to add. So if an investor from the mutual fund side is looking to add, or in such a time, does it merit maybe looking more on the lump sum side, or more would be coming in from the SIP side?
So, Vinny, the problem really for most investors is they make money monthly. They get a salary monthly. It's no longer, where everybody has some lump sum stored away and they're waiting for the right time to invest. A lot of people have perhaps avoided investing, and therefore they may have some lump sums lying in debt and so on that allows you to kind of move money in. But by and large, I would say there's only two things. If you're earning money monthly, then you can invest monthly only, and therefore SIP is the only format. It's not like you have a lump sum that's made available overnight right now. If you still did have lump sums, then I would still suggest don't try to time the bottom. Almost every day something unfathomable is happening on the international scene. We don't even know the impact downstream of a lot of things. It could be positive, it could be negative. We may have oil shortages, and then we may have an oil surplus when something comes back, in a big way. So all of these things are unpredictable. So I would say don't try to predict the bottom. And even if you have a lump sum, spread it over a few months. 3 months to a year is my general feeling. Is like, even if you had a lump sum and you wanted to invest, just spread it around. It's not required for you to find the bottom. And honestly, most of the investors will simply not have the time to look at the market every day and say, oh, is this news the exact time I should be investing in? And then, nobody will get it right anyway. Some of them will, and they'll show off on Twitter. But other than that, it's unlikely that, the bottom can be found by just predicting it from not knowing it when it would happen. So it's more a hindsight thing. But I think the other problem is that people's asset allocations may have gotten dislocated. So if you had all your money in equity and then you have a large amount of money sitting there, you may be more worried now because you've seen the equity markets kind of hurt. And it's not so bad. It's minus 11% or so. Whereas last year, about the same time, we were minus 18%. So from the top. So it's not like we haven't seen such a time before. But we're at minus 11%. We are worried. And maybe our portfolios are down a little more because we have more mid caps or small caps individually, right? So you might have hurt a little more. This is the time when you might want to reallocate your portfolio to, instead of being fully equity, you want to part multi-asset or part debt or something that kind of balances out the volatility in your portfolio, so that as your portfolio gets bigger and bigger, the absolute numbers of those falls look larger and larger for you. So you might, instead of doing lump sum or SIP into equity again, you might look at saying, I want to build myself this slightly less volatile portfolio, going to multi-asset, go to balanced fund, one of those things that gives you the structure that reduces your volatility, so that if the market's down 30% tomorrow, I'm not saying it will be, but I'm saying if it does, there are capabilities, the market has demonstrated this before, then you shouldn't be down 30, you should be down maybe 20. And that's the eventual goal when your portfolio becomes larger and larger.
It's not possible to totally be away from what's happening in the markets, right? It can't be like the overall markets are down 30% and you have a green portfolio. So point is taken. You can't really time the markets. All you can do is ensure or work in a way or allocate in a way that your losses are limited and not equal to the market fall that we are seeing. Deepak, that's where your sane advice comes in. So we are looking at mid caps and small caps as well. We've seen big fall come in. We are seeing some of the valuations looking attractive as well. Do you think this could be a time to look at some of these pockets individually, some of the segments you think are undervalued now or fairly valued now, and this could be a time to look at it?
Yeah, I think there'll always be these times, Sonal. We'll have this, a specific problem of some things look attractive today, some things don't. There are some stocks that are going to be very expensive, some stocks that don't. Is the market overall so undervalued that I would say, close your eyes and pick your stocks? No. The answer is there are pockets of overvaluation, significant pockets of overvaluation. So therefore, it's not like a, blindly buy kind of a market, even though it has fallen a little bit. The second thing is, in the near term, you may see a lot more hits to earnings. So there is a potential for some other stocks to get undervalued based on news flow that comes in. Maybe they have to shut down a factory for not having enough gas. They may have to, all of these news will come in on individual stocks and perhaps cause them to be temporarily undervalued at different points in time. So my focus here would be to say, look at it from a perspective of, are you underweight mid caps and small caps? Have you been, if you're overweight them already, then you don't have to do anything. But if they have gone away from your portfolio, you've not had them, you could consider rebalancing them, or get into a flexi cap kind of a fund, or a different kind of a fund that would allocate to mid caps and small caps as well. And if you're underweight or underweight them. But is this a specific opportunity to buy across the cycle? No, I think it will be stock specific and fund specific as well, because there will be certain funds that will still suffer based on what positions they've taken, and there will be funds that will do really well. I think a long-term focus will still give you good returns on mid, large, and small. And typically, in the longer term, the mid and small caps have shown slightly higher performance with the higher risk, of course. This is the point of risk. And I think at a certain point, they may become underrepresented in your portfolio. So that's the only time you should add them. But don't try to be opportunistic, saying this is the perfect time to buy small caps. I would say, there are no negative points for saying that, because anybody can always say the good returns are in the future, even if the returns are bad right now, right? So, but to be fair, I think investors should be aware that the volatility of a small cap is much higher. We're talking of minus 27% on the small cap universe in general, whereas minus 11 or 12% on the Nifty. So it's more than 2x the fall that you're seeing, and the median falls are even higher. So I would say you got to be careful of just jumping into mid caps and small caps. Small caps have seen even higher damage than they have seen right now. So pick your battles. If you're picking stocks, pick the stocks carefully. If you're picking funds, pick the funds with the right strategy carefully. But only do it as if those particular market cap measures are underrepresented in your portfolio. If you're already too full of mid and small caps, it may actually be time to build a large cap balancing, and then maybe debt and commodities, like I earlier said.
Absolutely, point taken there. If you're already overweight, do not add more on that front as well for the mid and small cap. And we've seen worse in terms of fall here as well. Deepak, let's talk about some of these individual sectors, because we have a lot of queries that always come in on sector and thematic funds as well. Now, specifically, IT, which has been underperforming for a while. What if someone is, as a viewer, invested already in some of these IT funds? The performance clearly has been battered. What is the strategy now here? How should they move about if you're holding any of the IT funds?
Got it. So if you're doing an IT-specific sectoral fund, that's one thing. If you hold a portfolio of some of the larger flexi cap or even the mid cap funds, they actually have a lot of IT exposure just as part of their overall exposure, right? So there's two different ways to look at it. Let's look at the sector. Primarily the sector has hurt because they've said AI will replace everything. But to my knowledge, AI has only added jobs, not deleted them. Or rather, more importantly, it's added business, or it is adding business to a lot of these IT names, whether they're large or mid. We have seen a lot of announcements of AI-based or AI-led projects. They may employ fewer people per project. They may actually employ not as many people in the first place, but that doesn't matter to the economy of the IT companies itself. If they're able to maintain their margins or increase their margins because they need less people to do projects, then I think it's a good thing for the companies in the long run. This is a problem because in the short run, there will be uncertainty about even the customers deciding what exactly to do with their with their funds in terms of allocating it to what kind of projects. But as AI comes into certain levels of maturity, I think the amount of work that will be given to Indian companies is higher, not lesser. It means some of the Indian based programmers or coders, or you call them AI prompters, they might actually increase productivity to the levels of perhaps even US standards, simply because now they have AI assisted programming and coding, debugging, all of those available to them. So in the long run, I feel they will do well. In the short run, there will be uncertainty. Having said that, what do you do if you're overweight with IT again? Because IT will be a part of your flexi cap index, a lot of other funds as well, and then you have an IT sector index on top of that. Then your only thing is, can you close your eyes and not look at it for the next 5 years? That's when you stay invested. Otherwise, any sectoral fund makes no sense. If you are the kind of person who will get worried, the reason you got into a sectoral fund perhaps was you think that sector will do well. There are times every sector does badly, and IT is just going through its phase right now. I think going forward, if you have that 5-year outlook, then stay. If it makes you worry, then simply move into the broader based funds. That's the point. And investing is about reducing your worries, not increasing them. So anything that increases your worry, get out of. So sectoral funds require a certain mindset and a certain layer of getting in and getting out. And really, if it's not for you, then this is not something that you should be doing in the first place.
It is on the riskier side, and exactly what has been said on this show by you, by other experts as well, time and again, that look at sectoral funds only if you have that level of risk-taking capabilities and the knowledge of that particular sector as well. A lot more questions, Deepak, but we are out of time. So thank you so much for joining us with your insights on what can be done in volatile times like this. It is not as bad. We've seen bigger cuts in the market as well. So that's the advice coming in from Deepak. If you're overweight, do not buy more and look for pockets where you can make some allocation as well. Let's take a quick break. On the other side, we'll address individual mutual fund queries which have been sent by our viewers.
Welcome back to MF Corner on CNBC TV 18. Now let's get solving your mutual fund related queries. To do that, we have Prableen Bajpai, founder at FinFix Research and Analytics, to answer all those queries. Prableen, good afternoon. Thank you so much for joining us on the show. A lot of queries do come in at such uncertain times. Now, the first query for today is coming from Pooja, who's writing to us from Bangalore. She says that she is investing an amount of 2,000 rupees monthly SIP in Bandhan Nifty 50 index fund, says that she can invest another 3,000 monthly and is asking if she can invest the money in the same fund or maybe look somewhere else. And additionally, she's saying that she has 50,000 rupees of lump sum investment also which she can make. She's asking your advice on where she could look at it.
Hi, Vinny. So I think what Pooja can do is instead of the Nifty 50 index, go with the Nifty 50 equal weight index. Nifty 50 is the market cap based index of the Indian markets, which represents, of course, the top sectors in the economy and the top 50 companies. But it's a market cap based index. That means, for example, the top 3 companies in the index capture roughly about 25 to 30% of the weightage. An equal weight index will be more diversified. So instead of Nifty 50 index, I think, Pooja, you should go in for Nifty 50 equal weight index. And over a period of about 8 years, we've seen better outperformance by the equal weight index as compared to the parent index. And along with the equal weight index, Pooja, you can add, if you have a 7-year plus view, you can add a multi-cap fund, which would provide some allocation to the mid and small cap space as well, along with large caps. So I think with these two, you can move on. And for your lump sum, park 50% into these schemes right away and the remaining via STP over the next few weeks. So that can be your style, with 2K in the multi-cap fund and 3K in the equal weight index.
Take that point. Prableen, the other one is coming from Ganeshan, writing to us from Chennai. He says he has invested a lump sum amount in HDFC and Aditya Birla Sun Life low duration funds. Says the last 3-year CAGR from low duration funds is 7.8%. Wants to know if he should continue to hold or switch.
So I think if it's for a goal which is very close by, then Sonal, definitely it should be held in the debt funds only. And I think a 7.8% CAGR in the debt space is not bad. And if the goals are away, let's say if it's a long-term sort of an allocation, then of course, it can be moved into hybrids or towards the large cap. But with anything which is, let's say 1 or 2 years away, the goal, it should be kept in the debt space only. And within fixed income, without the kind of flexibility, I think debt funds actually provide, it'll be hard to find a fixed income product which would beat these returns and still allow the accessibility and the liquidity that the debt fund provides.
Okay, and I think we have an exclusive that's coming in on the screens for y'all as well. And we have my colleague Ritu, who's joining us right now. It's on HDFC Bank. Ritu, over to you. What are these newer details that you're picking up?
Okay, all right. We'll be connecting to Ritu in just a bit, but there are important flashes. It is talking about the leadership at HDFC Bank. Those are some exclusive flashes, and HDFC Bank has been in focus on the back of this resignation that has come in from Atanu Chakrabarti. But of course, as the company clarified, the bank clarified on its conference call that there has been, this is not an impact due to any wrongdoing at the bank level or the leadership level as well. In fact, we do have Ritu with us. Ritu, over to you.
Well, Sonal, following up from the fallout of what's been happening with the resignation of the chairman, Atanu Chakrabarti, we've been speaking to several sources within and outside of the bank, and we've been given to understand, given that this big exit that has happened and now that the bank will have to look for a new chairman, and Sashidhar Jagdishan, the MD and CEO whose term, the current term, is set to expire in October. Keeping all of this in mind, the board is very much in favor of Sashidhar Jagdishan continuing for at least some more time, another term, and the board has been persuading him to take on that role. We've also been given to understand that the Reserve Bank of India, who is very much in the loop on this matter, is also keen that Sashidhar Jagdishan continue, because remember, it is not just the chairman exiting. There have been a spate of, either people exiting or retiring from the bank in the last 12 months or so. Parag Rao more recently, Bhavesh Zaveri, ED, he's also set to retire in April. You had the chairman leaving, and now you have to bring on a new person on board. The CFO is set to retire later this year. So, there's a whole host of top leadership changes that have already happened in the last 12 months, and more are going to happen over the course of this year. So, at a critical time when this is happening, the board is not in favor of bringing on a new CEO, and therefore, they very much want Sashidhar Jagdishan to continue in his current role. And we've been given to understand that before, of course, his term is up, they will be sending this recommendation to the Reserve Bank of India for its approval.
Okay, Ritu, thank you so much for filling us in with the latest details that are coming in here for HDFC Bank as well. Thanks so much for that, Ritu. And, actually, we're absolutely out of time on this edition of MF Corner as well.
I would like to thank
Prableen as well. So, Prableen, thank you so much for joining us. A bit of a truncated version today, but thank you so much for solving those queries for our viewers. So, thank you so much, Prableen, as well. But with that, viewers, we are absolutely out of time. So, it's a goodbye from Sonal, myself, as well as the team who put this show together. Last hour of trade is still left, and you have closing bell up next for that.
Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
look at Taiwan index, that's down 1.3%. Hang Seng, that's trading with cuts of 1.5% as well.
This morning, it was confirmed that a ballistic missile hit Qatar's Ras Laffan industrial city.
I really want to emphasize is that nobody knows. You know, the economics effect could be bigger, they could be smaller.
Oil prices are, of course, at $111 a barrel. Bulk of the move happened last night.
Management felt Atanu Chakravarti, as a non-executive chairman, was functioning in a very, and I quote, executive style.
For the first time, we're actually hearing some moderation from President Trump.
It was received by the bank yesterday evening, and they met the RBI, the net RBI later on in the evening.
32-33% of world energy supply is crude oil, and 20% of that is stuck.
LNG supply from the Middle East is likely to remain constrained over the next few months due to the damage that we've seen to infrastructure.
500 points straight off the bat, 2.2% taken out of the Nifty. The Nifty banged down by 1,500 points.
The company, that is Prudential Corporation, is looking to exit life insurance, ICICI Prudential Life Insurance.
Almost a 600-point cut on the benchmark, and the mid-caps, the Bank Nifty, they are the ones which are outperforming by a slight margin though. But yes, it's an underperformance nevertheless.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, and joining me today is Manglam. Manglam, it's been a very, very weak trading session. Any kind of bounce has got sold into. The Nifty currently at the low point of the day. And to be fair, HDFC Bank actually has recovered from the low point of the day. But yet the breadth of the market is actually very, very dismal. And the bigger fear is all through the trading session, Brent crude prices, the traded value has only moved up. And that's going to be a big, big pain point. And I'll tell you what, tomorrow the money markets will reopen and the rupee is likely to make a fresh low unless some big de-escalation takes place today. So a bit of an issue. I was getting a little bit positive in the last few days because the FI net sell number from 10,000 crores had come all the way down to around 2,500 crores. And today there'll be some domestic participants that actually would be on leave. So the FI sell number, actually the selling is getting a little bit more intense because the buying could be a little bit lower given that the banks are shut.
Take that point, Nigel. So far in the day, we've had almost 95,000 crore of cash market volumes. The last 7-8 days, the average has been around 90,000 to 1 lakh crore. So all the belief that maybe there would be lower volumes today goes out of the window. Domestics aren't participating, so big FII sell number likely. And I was looking at some of the data. Looks like 7,000-8,000 crore worth delivery selling would be on HDFC Bank alone. But be that as it may, it's been a perfect storm of sorts. Not only has HDFC Bank issue put a wrench in the way the markets have fallen, crude through the course of today's trading session, we started the day with crude being at around 111, moving towards 112, and now as we speak is at $116 per barrel and more. The Nifty at every lower level has been seeing some sell-off, but more importantly, the support that would earlier come from, say, something like Reliance or an IT index, that hasn't come either. So we have the IT index, which is at the low point of trade, and Reliance, that's the one that should come up for you as well. Briefly went into the green, supported the cause of the frontline index, but now has moved to the low point of trade, and the market breadth leaves a lot for the bulls to wish. But the question then again is, how should you position yourself in the last hour of trade? Mitesh Thakkar from Bonanza Portfolio joins us now for closing strategies. Mitesh, it looks like the last 3-day bounce that was there only gave bears more ammunition to short with a lot more gusto. Took a lot of the bulls out of the market today.
Yeah, that's right, and good afternoon. So I think, I always maintained that the move which was happening for the last 3 days, which is basically from Monday till Wednesday, was always a pullback. And we had two targets, 23,800, 820, and then 24,200. But we kind of failed at the first level itself. I think the bigger picture is still on the negative side. If you look at the weekly charts, the monthly charts, they are still turning, indicators are turning downside, which means that there will be more stronger supply and there will be bounce backs like we had a couple of days back. But I think those will be sold into. Until we get a strong reversal on at least daily indicators, I think, till then, I think the markets will possibly, with some volatility, be heading down. So with that, I think the Nifty is back to those levels of 23,100. The Bank Nifty is back to, that support of 53,600. So again, if somebody had some short positions, if you want to take some profits, good levels. But in case we start closing below today's low for the Bank Nifty, then I think I'll, add on to the short side exposure. On the stock side, I have two sell calls. Blue Star, that's the AC company, that's the sell with the stop at 1760 half for targets of 1715, and Adani Enterprises is a sell with a stop at 1952 for targets of 1905.
Got it. All right. So it appears, at least as of now, Mitesh is maintaining a bit of a negative bias on the markets. Manglam, you want to come in?
Yeah, on Blue Star and Voltas, the last few days were good for them because the street believed that there was a heat wave coming in. Last year, there was a lot of inventory that was stuck in the system, because of which it was not a great year for any of these AC makers or cooler makers. That was a trade. If you look at, slightly this month's chart or the last 12 sort of days chart or something, you would see that these stocks were doing okay because of the heat wave. And now they have come in for a fair bit of selling from, 1600. Voltas is down to sub 1365 thereabouts. And Blue Star as well. Mitesh has put a sell call on that, 1750 for that stock as well. Let's see where that goes.
Got it. All right. Thanks, Manglam, for that. Well, let's focus on OMCs. That's the pain pocket in the market yet again. OMCs, whether you look at HPCL, BPCL, IOC, they are trading with deep cuts. Sonal joins us to tell us what's happening to these stocks. Sonal?
West Asia war, that's what's happening to these stocks, Nigel. If you look at the year-to-date chart as well, big cuts across the board. You look at HPCL, it's down around 34%, IOCL a little less at 14%, BPCL at 25%. Now, do remember, between these three companies, HPCL has the highest exposure to the marketing segment. Basically, there are more volumes for diesel and petrol, and that is not the case for IOC. It has the least. And that's why maybe the differential returns is what you're seeing currently. Of course, the first thing being crude oil prices, which are surging. Now, the last number I saw was $116 a barrel. And that is something which will, of course, hit their margins across the board. Singapore gross refining margins, which hit levels of as high as $25 per barrel, swiftly came into the negative territory because the market has been so volatile. If we talk about the other factors, no fuel price hike. India is the only country, I think, in the world which has not taken a price hike in petrol or diesel. That is something which will impact their marketing margins as well. If you look at some of the numbers, for every 1 rupee litre decrease in marketing margins, for these three companies, IOC will see a cut of 21%, BPCL will see 20%, and as I said, HPCL will see it the most at 24%. We don't have the exact figures right now, but yes, these companies are seeing normalized or lower than normalized margins on the marketing front, which they had enjoyed at premium because crude prices were at normalized levels last couple of months. HSBC cut the target price last week for IOC to 150, HPCL to 360, BPCL also a sharp cut. Kotak yesterday did the same thing. There's a sharp cut across target prices because they believe we'll not be able to take fuel price hike, and that is something which will continue to impact their marketing margins. The sharpest cut was on HPCL as well, other than IOC and BPCL. There was an interesting note from ICICI Securities today. Now that we are also talking about supplies being disrupted, it's no more about prices only. We are also not sure about some of the gas supplies which would come by quickly. If dispute starts to normalize in Q1 of FY27, FY28 can still show material upside. And they also talk about how balance sheets are better equipped right now to deal with such crises versus previous crises that we've seen earlier. So they are talking about if things reverse, maybe they can come back to normal. But for now, things are quite tricky for oil marketing companies, both from the refining and from the marketing front.
As tricky as can be, and as we speak, those stocks are at the day's low, and Brent crude prices have spiked up at the day's high. Devin Choksi, MD at DR Choksi Finserv Private Limited, joins us on the show. Hi, Devin. What do you make of this? The hope is that the war comes to an end and then these stocks could see a big rally. The problem is, for the time being, the earnings are going to be under pressure. And, in the good times, actually, these stocks didn't participate that much on the upside. And now they're clearly coming. There's a strong case for de-rating. Your view after this sharp fall that we've seen on all the three OMCs?
Yeah, Nigel, good afternoon. Well, I believe that I think no better view can be given at this point of time because the situation remains, I think, quite fluid at this point of time. So I think the oil level short of India basket, at least at this point of time, is comparatively lower to the current oil market price, I think, that we are having. And that could give some amount of buffer, if not anything else, at least for the time being in a given situation. However, I think one thing is obvious and clear. On one side, if the OMCs are not allowed to increase their prices, and if they have to absorb even the marketing margin, quite possible that I think they will probably be incurring a significant amount of dent in their profits in coming period. Because every $5 increase in the crude oil prices, I think you end up losing around 2.5 rupees per liter, kind of a cost, I think, on the petrol or the diesel in this case. And that could possibly mean that I think their future operations, I think, could come into problem, even if I think the current operations are working on the prior period, the crude oil basket, which is relatively at lower cost. So I think this is a real unprepared situation, if I may have to use this word, in a price where I think you do not know what is happening the next day. So taking a view on the subject is difficult, but yes, I think calculations guide us that I think it is not going to be healthy.
To that point, thanks a lot, Devin, for joining in and speaking about the oil marketing companies. Meanwhile, what we'll do is we'll just go to the top story of the day, come back to you for your view on HDFC Bank as well. Following part-time chairman Atanu Chakrabarty's exit, interim chairman K.K. Mistry says that the chairman's exit is not linked to the bank's conduct or regulatory concerns. That's CNBC TV 18 news break confirmed. Let's hear out K.K. Mistry. Thereafter, we'll get some analysis on the stock as well before we go back to Devin.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent in line with regulatory requirements. None of us as board members are aware of what are the specific issues which Mr. Chakrabarty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years.
As we move forward, we will sort of re-examine our organization structure, and with the consent and the advice of the board, we will announce it at the appropriate time. Not at this juncture, without the approval of the board, which I will take it up to them at the right time, post the financial year closure.
All right. Well, keeping it with the focus on the banking sector, especially the private banks, let's bring in Gaurav to understand how the stock performance as well as valuations are now shaping up post this recent fall. Gaurav, take it away.
Yes, if you look at HDFC Bank, today we saw a sharp fall. In fact, even in the opening session, we saw bank's stock price was fallen almost by 10%, and it reached its all-time low of 770 rupees. Now, there was a reason today. The reason being that HDFC Bank's part-time chairman and independent director, Mr. Atanu Chakrabarty, he resigned, and it was not a normal and regular resignation. What actually shook the market is the reason what he cited. He said that certain happenings and practices within the bank that he has observed are not in with his views that he has seen in the market. Now, what happened is that after that we saw stock is still down 4%. But even if we exclude that, let's also understand how it is impacting the market. If you look at Nifty, HDFC is one of the biggest constituents. In fact, it holds around 11.8% weightage. And today, whatever fall we have seen in Nifty, HDFC has contributed almost 100 basis point of fall in Nifty 50 in today itself. Apart from that, what it means for the stock. Now, if you look at the valuations, let's also look at valuations of all the banks, because in the last few days, we are seeing all the banks actually falling in rate, and let's just not blame HDFC. If you look at ICICI Bank, Axis Bank, Kotak Mahindra Bank, all of these stocks valuation in terms of price to book is lower than its 5-year average. But in fact, if you look at HDFC Bank, now it trades at 2 times price to book. If we compare it with the COVID lows, we have seen the valuations going as low as 2.15. So even if we compare it with the COVID lows, the valuations are still lower than what we have seen there. Apart from that, let's also not forget that the 5-year average price to book for HDFC Bank is 2.7 times. So that is also something which needs to be considered. When we look at the performance history, now in this year, in 2026 itself, we have seen markets falling, and there were multiple reasons. Let's also not forget about last year where we saw RBI actually cutting its rate, and that is also something which impacted all the banks, and that's the reason there was an underperformance. In fact, in this year itself, if you look at Nifty Bank Index, that has gone down almost by 10%, while HDFC Bank within that index has gone down almost by 18%. But even if we exclude this underperformance because of whatever reasons like war and the interest rates, if you look at 5 years performance, Nifty, that has increased almost by 57%, and HDFC Bank, being one of the biggest contributors to Nifty, that has increased just by 8%. So all in all, even in the 5-year time frame, we have seen HDFC Bank actually underperforming not just Nifty, but most of the banks. Just to put it in the context, if you look at SBI, that has grown more than 100%. ICICI Bank has grown almost more than 50% in the last 5 years. So all in all, definitely there are some arguments that in terms of valuation and in terms of fundamentals, HDFC Bank still holds strong. But even if you look at the performance, it has been an underperformer. If you look at brokerages now, they are actually not cutting their target price. In fact, most of the brokerages still have their buy rating. And even if you look at the consensus target price, it still shows more than 25% of the upside. But let's not forget that the confidence is falling somewhere, because in the morning itself, we saw Macquarie actually removing HDFC Bank from its marquee buy idea. So that is also something which needs to be considered. So all in all, yes, today's fall was attributed to certain events that happened in the bank, but what happens next is something that we should definitely watch out for in HDFC Bank.
Take that point, Gaurav, entirely well explained. The underperformance of HDFC Bank over the last 5 years, not just today or this year so far. So, Devin, that brings us to a two-part question. One, after this underperformance, after this fall, Gaurav spoke about the valuations. No questions about the pedigree of HDFC Bank. Do you think it is a buy at these levels because of its such a long underperformance? Typically, we've seen stocks on the frontline index which underperform for a very long period of time, and thereafter in 1 or 2 years make up for all the last few years of underperformance. So do you think today is the worst of that, and maybe at current levels it is attractive? That's point number one. And the second point is the larger point on the PSU banks versus private sector banks sort of debate, where the profit pool is shifting towards public sector banks, and as a result of which there is a case for valuation reset.
Yeah, Mangalam, I think both points are very pertinent and important. I think let me address the first one. I believe that any bank, to come up in a course of time from where the legacy has been, I think they will probably have to demonstrate the will to adapt to the newer norms of working. Probably, I think the technology adoption in some of the large banks, has been relatively slow compared to some of their peers in the NBFC space like Bajaj Finance, who have been adopting technology extremely meticulously and been in a position to get the better result out of this particular adoption of technology in form of higher amount of lending book, lower amount of non-performing assets, and better amount of spreads. I think that is what the summarization is. And that could possibly be the reason for which the underperformance of banks like HDFC, which has possibly remained laggard in implementing the technology-related stake at their end. Large bank, of course, well accepted. Trust factor, which is a very strong point, in case of HDFC Bank, which remains very high. They deserve to be, undergo the change on that front. And as we heard the management commentary today morning, probably organization restructuring is something which is likely to be on cards. And if that does so happen in next 3-6 months' time, possibly the future years output could possibly improve. So I'm not giving up. I feel that this kind of organizations, they do pass through some amount of challenges in the current context as well. But at the same time, they hold the potential, which is significantly higher, given the kind of growth rate in which they are operating and given the kind of trust factor that they have built in India economy.
Got it. Okay, all right. Thanks, Deven, for that. Let's focus on the NBFC space. Bain Capital has got the RBI nod to acquire the joint control in Manappuram and its subsidiaries. Let's take a look at the others that are waiting for approval, the likes of Shriram, RBL Bank. Going back to Gaurav, busy day for him. Tell us, Gaurav, the read-through of this one, as well as the pending deals.
Well, yes, if you look at Bain Capital and the deal between Manappuram Finance and Bain Capital, it was announced in March of 2025, and after a year, company has said that they have received all the required approvals from RBI, and they will be going ahead with the deal. Now, the last leg of these approvals was because of the subsidiaries. They said that Ashirwad Microfinance and Manappuram Home Finance, both the subsidiaries have also received approval from RBI for indirect change in control and management. Now, what it means is that they said that the deal can be done and completed in this year itself. That means by 31st March of 2026, this deal, an infusion of more than 4,300 crores from Bain Capital in the Manappuram Finance will be completed. Remember, it is only 10 to 11 days away from today, so it is something which is positive. Apart from that, let's also not forget that they have also said that they will be completing the open offer in accordance with the timeline that was prescribed under SEBI. Now, let's also not forget that, yes, last year was actually a year of FDI inflow in the financials. We saw many deals happening, but there are still some NBFCs and in fact a bank which is still awaiting for all the approvals and funds to come in. If you take a look at Manappuram Finance, it took 12 months for the company. But apart from that, let's also not forget about Sanman Capital. Last year we saw IHC announced that they are going to invest more than 8,000 crores in the company, and they were also going to get around 41% stake. Now, the open offer that they were rolling out was at a price of 139 rupees. Let's also not forget about Shriram Finance. If you look at the deal, MUFG was going to acquire around 20% stake, and they also said that it will be one of the largest FDI investment at a cost of around more than 39,000 crores of investment in the company. Remember, this deal actually implied at a price of 841 rupees. Now, why I'm emphasizing on this deal is that if you look at Shriram Finance, specifically the stock price, it has fallen almost by 6% today. And let's not forget that the valuation that they were trading at before the deal, currently, if we compare, it is still at the same valuation even after the deal has been announced. Now, the funds are yet to come. It is really a key thing to watch out for because it can also increase and open some gates for growth. Apart from that, let's also not forget about some banking deals. Now, RBL Bank, they are still awaiting for all the approvals. Remember, Emirates NBD was going to invest around 26,000 crores in the bank, and the deal was announced in October 2025. And they were also going to get more than 60% stake of the bank. And even in this deal, we saw open offer coming up at around 280 rupees. Now, if you look at all the prices, let's also not forget that because of the fall that we have seen, all the stocks from their 52-week high levels, they have actually corrected. And they are also near its open offer price that we have seen in the deal. So let's also not forget that. And let's also see if these offers and if these deals come through in this year, and if they come through, how the stock performs and how they give returns to investors in coming days.
Take that point, Gaurav. Thanks a lot for that. As we speak, Shriram Finance is the top Nifty loser. In fact, the Nifty itself has extended its cuts now down by about 700 points. And a lot of the, index heavies, non-HDFC bank related stocks or non-IT related stocks, we have all the auto stocks. Maruti has seen a fresh bout of selling at the low point of trade. A couple of these two-wheelers, Bajaj and Hero MotoCorp, both of them at the low point of trade. We're also seeing increased weakness in L&T. The stock is now negative for the week. The last three trading sessions, as risk left the market, we saw maybe, a bit of return on L&T, but now it's back below that 34.30 mark, which is basically where it started the week when we saw the low on Monday when it comes to panic. What we'll do is take a short break. We, track all the stocks which are moving around. On the other side, we'll also get in Dinshaw Irani to weigh in on his opinion on how the markets are poised right now. Well, the market is extending its cut once again. The Nifty is very close to breaking that 23,000 mark as well. Now holding on to 23,000 by just about 30 odd points. It is more of the same and a little more, which is dragging the frontline index lower. So we spoke about, HDFC Bank, and the auto stocks. Alongside that, we've seen a decline in Interglobe Aviation, a further sell-off. Bajaj Finance has come up for a fair bit of selling. Fresh selling is what we've seen alongside, a couple of these other index heavies. Coal India, which was holding in the green for most part of today's trading session, has come in for some selling as well, Nigel.
Even Bajaj Auto as well as Bharti Airtel, both of them have moved to the low point of the day. Bharti Airtel is in the top 10 list, at least in weightage terms. So that moves down as well. That does weigh on. Just take a look at that. Some part of this, a smaller element of this, will be on account of the Sensex expiry as well. So just keep that in mind. But for the time being, not a very good looking screen at all. Let's see whether or not we can at least protect the recent low that we saw. But the Realty Index, that's another sector that has been under pressure in today's session. The sector is now down close to 30% from its all-time highs. Sonal joins us to break down on what's hurting the stocks. Sonal?
Well, a couple of reasons. Let me first take you through the numbers. As you pointed out, it's a 32% fall from its 52-week high. It is down 3% today and has extended those gains as well. That has been the case since the start of the year, but it has now become worse for the realty space. A lot of these stocks are at 52-week lows. On a year-to-date basis, Brigade Enterprises is down 26%. You have Lodha, which is down 22%. Godrej Properties down 22%. DLF, Prestige Estates, Oberoi Realty, Colte Patel, all of them down anywhere between 13.5% to 25% in the year so far. That's around 2.5 months so far. Now, if we talk about what are the possible reasons, so we talk about energy as one of the big reasons why other sectors are impacted. Real estate is also seeing an impact of West Asia crisis. I've been talking to people on the ground, and the indication is that around 10 to 15% of investments in the real estate space in the country come in from NRIs, and a lot of them have stopped such investments or at least slowed them down because of what's happening in West Asia, and that is one of the reasons why we are seeing fear of demand going down as well. The second one is gas supply cuts. We've spoken to Morbi Association. A lot of these companies in the tiles and ceramic space have spoken of production cuts because of limited gas supplies, and this, of course, ceramics and tiles are big raw material needed in home building as well, and that is something which is slowing down because of which builders are unable to meet their deadlines, and that has had impact on completion of some of their projects as well. The third reason being how we've seen input price increase, right? So there is a Knight Frank report which spoke about how steel prices have jumped 20% to 72,000 per ton, roughly adding around 50 rupees per square feet to high-rise construction costs. That is impacting ultra-luxury segment. Strait of Hormuz blockade has also forced to reroute, which is adding around 10 to 20 days, and it is adding around 1.5 lakh rupees for these construction materials to come by to the final destination. So all this is adding to raw material costs. Plus, there are delays because some of these raw materials are not available also. And these are a couple of reasons why we could see this pressure coming in on the realty space overall.
Brilliant. Thanks a lot for that, Sonal. Well, let's welcome Dinshaw Irani, CEO Helios Mutual Fund, who joins us on the show. Hi, Dinshaw. What a day, right? Markets at the low point of the day, and the big boy HDFC Bank out of nowhere. You're getting this sort of news flow in an already wobbly market. Let's get that out of the way first. The valuation argument is something that people are putting on board. The stock is available at around 1.5 times price to book its core book, that is, on the standalone basis. And then you add 120 to 140 rupees for its subsidiaries. Which camp are you in? Do you think that valuations are now too hard to ignore? Or do you think the bank went through that transition phase of the merger, had a lot of patience out there? Some of that merger positives have not yet been seen, and they're struggling to garner deposits in spite of having so many branches. Would you be tilting towards a positive bias, or do you think it's an avoid for now?
So, Nigel, thank you for having me on the show. First of all, I want to start off with something which I heard on your channel in the morning. Neelkant had come to your channel and he said that the markets need to correct for the war to stop. I think the investors have taken a wrong cue. He wasn't referring to our markets, he was referring to the US markets. So that's one thing I want to clarify before I get into anything else. It's a joke. But anyway, so on the HDFC front, the fact is that you heard Mr. Keki Misty in the morning. You heard him clarify that there's nothing wrong with the bank or the corporate governance or the ethics within the bank as such. And obviously, I mean, I would rather take him at the face value and the history of the bank, which has been very squeaky clean, if you will. So I think it's being very unjustly beaten down. I'm sure the markets were in a much easier phase. You would have seen the recovery happening, which it did. In the morning, it did recover a bit, but came off again with a fall in the market as such. So I don't think there's any problems here. The valuations are very appealing. Forget about the sum of parts. Even on the price to book basis, they're very appealing. So I think we're in the camp where we would be adding, but given the weakness in the market, we're still awaiting our turn. We did put in a bid in the morning, but we didn't get it at the price that we were looking for. And anyway, we'll wait it out and see how it goes.
All right, you might just get that price, Dinshaw. You know, the stock is perilously close to that 800 mark, a mark that it has been holding for most part of today's trading session. And the Nifty, as we speak, is below the Monday low. That is the headline of, this moment. The Nifty is below the low of Monday. From Monday low, the Nifty saw a big jump of over 820 points in the subsequent 2.5 trading sessions. Took one full session right now for the Nifty to give up all of that. It's down 825 points in a day, down 3.5%. The Sensex down 2,700 points, led lower by the Nifty Bank as well, which is lower by about 2,000 points. So across the board, there is selling, and it is only getting uglier as we move towards day's close. Nigel, below the Monday low, there was a mark which was extremely important for one to track.
The Nifty hits the lowest level we have seen since the 11th of April, 2025. You know, that's the mark that we're looking at. I'll tell you what, we have an HDFC Bank con call that's on. Let's cut across.
Ladies and gentlemen, we lost the line for the participant. Next question is from the line of Siddhi Naik from Bloomberg. Please go ahead.
Hi, sir. Thank you for the opportunity. I had two questions. I'll start off with the first. Was there any attempt by the board to kind of ask Mr. Chakraborty to reconsider the language in the letter, because that has seemed to be, kind of irking investors as well as the stock market as well, the shares basically. And has the board kind of thought about the reputational damage it could cause the bank, not just domestically but also globally? Since you mentioned that Mr. Chakraborty did not provide specific instances of lapses, etc. That's my first question.
All right, so let me try and answer that, and then my colleagues can pitch in, because I was not physically present in the meeting. Mr. Chakraborty was asked by the board members as to what were his specific complaints or what were his specific concerns, and he said that there's no particular specific concern that he had. So that's number one. Number two, as far as the reputation of the bank is concerned, we've been trying to, we did a call this morning. We've spoken to a number of people, and I'm sure we'll be able to arrest whatever little risk that reputation may have taken. But please believe me, the governance standards in the bank are top class. Anyone wants to add anything?
Yeah, this is Ranganath here. I was physically present at the board meeting. I fully endorse what KK said. I think the board members repeatedly asked, requested for any specific instances, and I think there was no specific instance that was pointed out.
Thank you. Next question is from the line of Saloni Shukla from Economic Times. Please go ahead. Saloni ma'am, can I request you to unmute your line and proceed with your question, please?
Yeah, can you hear me now?
Yes, we can.
Yes, ma'am.
Yeah, hi. So good afternoon, sirs. Just wanted to, I have two questions. The first is basically, this particular word that was used in the morning analyst call, baffling. Anybody who covers the bank closely has heard murmurs about, the differences between the management and Mr. Chakraborty, especially after the NUFG deal. So, I would like to understand why does the current board and the management feel that they were baffled by, the resignation, and especially the tone and the timing of this letter when Mr. Jagdishan is up for reappointment in the next 7 months, particularly banks give, the recommendation 6 months before schedule, and this just hits right on time. So that is my first question. And second is, the governance issues. The bank is considered as the gold standard of Indian banking, the trust that the bank has created. But since morning, multiple analysts that we have spoken to are now raising questions and doubts about the governance issues and, the trust that the bank has built. So what more can the bank do now? Your ADRs were down 7% despite the call that you made. Then, the stock is down by 5%. What more can you do to build this trust? Because constantly there are some or the other, there is an anonymous Twitter handle which keeps on putting, information about your bank. So if you could address both these issues, please. Thank you so much.
Well, all I can say is that as a management team and as a board, we are united. The management will be speaking to all the major shareholders during the course of the next 1 or 2 days. So whatever fears are there in people's mind will get addressed. I don't believe there is any governance-related issue in the bank, and I think that is something which we've consistently talked about. Getting trust back of investors is a matter of time. I'm sure people will understand, and RBI itself has issued a clear clarification where they have expressed their satisfaction with the way the bank is being run. As regards Shashi's reappointment, this is 7 months away. Obviously, to my mind, Mr. Chakraborty's resignation has nothing to do with Shashi's reappointment. They are completely different matters. And NRC, the bank's NRC, will consider Shashi's reappointment in the very near future. Anybody would like to add anything? Please go ahead.
Keki?
Yeah, please go ahead.
Keki, can you hear?
Yeah, please go ahead. We can.
Okay, this is Renu Karnad. I had used the word baffling in the morning, and the reason was that at one end in the sentence in the body, Mr. Chakraborty had mentioned his comments on ethics, and we had asked him to please elaborate, to please tell us what it was, because if there was anything, then we need to correct it. And every time we asked him that, his response was nothing. But you have this written. So that is what was baffling. That in the letter there was this saying that he was not in congruence with what was happening. But when we would ask, give us some instances, please tell us, he said nothing. So that is the reason why we were baffled that at one stage you're saying something, but you're not, wanting to give us, and you're saying nothing actually. You're not even saying that I won't elaborate. You said nothing. So that was the background.
Thank you, Renu.
Thank you very much. Next question is from the line of Ritu Singh from BC TV 18. Please go ahead.
Mr. Mistry, I just want to reiterate, we understand that the differences between Atanu Chakravarty and the senior management, it's not a recent issue. It had been building for some time. So as an HDFC insider who knows the institution so deeply, I wanted to understand, how does a chairman's growing discomfort go unnoticed for 2 years? And when again you say that when the board quizzed him about what exactly was his concern, talking about the values and ethics, he had nothing to say and the board was baffled. But the fact of the matter is his statement has done reputational damage to the bank. So, what next from the board? Are you going to seek a written explanation? And, what do you do if he refuses? That's the first question, and then I'll come to the second one.
Is something which has just happened yesterday. The board will, of course, be meeting in due course. The board will discuss how to take this forward. And regarding the relationship issue, that is more a personal relationship issue. So let's not get into that. And to my mind, as far as the reputational damage that we talked about is concerned, I'm sure people will understand once, especially with the RBI clarification, that there's really nothing serious and precisely wrong in any manner whatsoever in the bank.
Mr. Mistry, the second question was really around the continuity at the top. You have a chairman who's just resigned. So you have to look for a new chairman. You have Bhavesh Zaveri, who will be retiring in April. There's been a few exits and retirements in the last couple of months. There are more lined up for 2026. So at such a time, can the board really afford to have a change in the CEO? And when you say the NRC will look at Sashi Jagdishan's reappointment at an appropriate matter, has this issue not been discussed at the board level so far? And how quickly, should we expect the board to submit Sashi Jagdishan's name to continue as CEO for another term, 3 years or, whatever that may be?
Ritu, the board will certainly be meeting in the next, or the NRC will certainly be meeting in the next 1 month or so, and put in the recommendation, which would be approved by the board and informed to RBI. They are fully cognizant of the time limit, and we'll take care of that.
Thank you very much. Ritu, I'll request to come back for a follow-up question. Next question is from Nano Savannah Sheikh from Mint. Please go ahead.
Hi, sir. Good afternoon. Sir, I wanted to ask this term that was used, the baffling term. I understand that you've addressed it, but I also wanted to ask, does that indicate a failure of internal communication at the highest level? And also, why should investors trust the no-issue stance when there is zero disclosure on what triggered such a strong language? I'll come to my second question, sir.
Well, really, we don't. That's probably the reason why the word baffling was used by one of the board members, that we really do not understand what led to this kind of a reaction from the chairman yesterday. And that's the reason why the word baffling was used. I don't think there were any. I mean, there are usual routine issues which keep getting happening in every large organization, which would have happened in the bank also. But there is nothing else from a governance standpoint. Please believe me that the HDFC Group stands for governance. The single most important priority that we have always attached to our businesses, to our companies, to the entire group is governance. And governance and ethics comes above everything else.
Right. Sir, did RBI seek any?
That is the management of HDFC Bank, Keki Mistry, joining in with a lot of other board members as well, fielding questions from the media. This morning there was an investors call as well. The sum and substance of it all is that the board is posing a united front in this wake right now. But there is no difference in terms of commentary that has come in from the management side versus this morning and the afternoon as well. And, maybe that's the reason why, along with increased weakness in the market, the stock has continued to seek lower levels, currently broken that 800 rupee mark as well. And the Nifty, however, has seen some bit of recovery, and that recovery can be attributed to some of the auto stocks, maybe at best, maybe some sort of recovery of lows in Reliance as well. All these stocks are still sitting with big cuts. Remember, the Nifty is holding above the 23,000 mark. Dinshaw, you've spoken on HDFC Bank. We've spoken about that at length as well. My question to you was on all of these new age companies, because you guys have been backers of them. Eternal, say something like a Swiggy or Urban Company, a lot of them have seen big cuts, some even halved from the top. Quality of growth, the kind of runway, the opportunity is never a question. It was always about valuations. At lower levels, are you seeking value here and topping up? Or do you believe that there are further more attractive levels for you to top up on these counters? Dinshaw? Okay, I think we've lost that connection with Dinshaw. We'll try and repatch that as well. But right now, Eternal is among the top losers on the Nifty after having seen a big gain in the last few trading sessions. Still, managing to hold on to this week's gains by about 6% But what we'll do is take a short break with the news that the market is continuously selling off, though holding on to that 23,000 mark. As always, we'll get you a check on what dealing rooms are saying, and a very important one at that. Flows will be crucial to track, and we'll get you the tomorrow trade as well with our technical expert.
Welcome back. You're tuned into Closing Bell. The markets are under pressure, but I think ONGC could be a stock to watch, at least in the near future, because the stock hasn't seen any big bazooka move. Though we have crude oil prices that have spiked, and with no de-escalation, in sight, I think that's going to be one of the stocks to track. It's up only 1.5% as we speak. That said, hopping across to Nimesh to tell us what is he picking up in D-Street Chatter. Nimesh, well, the stocks are getting smashed today. We're at the lows of the day.
Oh, absolutely. It's a brutal sell-off, and technically we've just wiped out all the gains that we've seen in the last couple of days as far as Nifty or some individual names are concerned. While there is a geopolitical risk, the crude is at 119 rupees at a new low. Those, of course, are the big concerns, macro concerns, and because of which there is a bit of panic. But there are some technical factors as well, because of which the markets are sharply down. The first being a big drag in the financial names. HDFC Bank is a big culprit there. But even outside of HDFC Bank, there is selling pressure across the financial names. A lot of the NBFC names are down 4-5% each. So clearly it looks like there is a bit of capitulation, at least in the financial names, by institutional investors today. From a flow perspective, there is selling pressure from FIs in today's market. We've seen in the last 2 days the intensity has been lower. But even today, it looks like there is going to be a sharp sell-off. Of course, part of it will be because of HDFC Bank as well. But there is also the technical factor that some of the large domestic institutions, especially the insurance names and EPFOs, they are not in the market today. So that there is a lack of buying as well from the domestic side. Some of the domestic mutual funds are active, but it is the insurance companies are not active today. So you're seeing a lot of impact as well from the selling from the larger institutions in the large cap names today. Technically, now we are very close to that another big support of 22,800. If that gets taken out, you will see further capitulation in days to come. So watch out for that. Two couple of things to watch out from in the very near term. Of course, the PCR is at 0.85, close to 0.6 is when we see a bit of a bottom. And if VIX crosses 25, you'll see a bit of recovery there as well. So these are the two technical factors to watch out for. But I guess, the big impact today is because of lack of buying as well from some of the domestic mutual funds or domestic insurance companies who normally support in such days.
I think that point, Nimesh, no support coming in from the domestic funds as well this time around today. So that makes tomorrow a more important day to track as well. Individual stocks, what are you gathering in this market?
Well, so the first stock is HDFC Bank. That's been the big talking point in the dealing rooms as well. From a flow perspective, while the stock is recovered from the extremely oversold intraday lows, I understand at least some of the large HNIs and some domestic mutual funds did buy into HDFC Bank today, but there is selling from the larger FIs into HDFC Bank. So expect high delivery volumes, and probably that will reflect in the FI data as well in terms of large sell-off, and part of it will be because of HDFC Bank as well. So that's the first name. The second name is Go Digit. In a very weak market, that's at the margin in the green or flat in today's market. But I understand at least one large FI desk is looking for a large offer block as well in Go Digit at current levels. And the last name is MGL. Again, marginally flat in today's market. But I understand at higher levels, there is supply coming in from large institutions to sell into MGL. So not reacting today, but at higher levels, there are definitely sell flows in MGL as well from the larger FIs.
Got it. All right. Thanks for that, Nimesh. Let's hop across to Mitesh. Mitesh, what are your calls? I think, you are saying to hold on to your short positions, right? Carry it for tomorrow, both on the Nifty and the Nifty Bank.
No, that's right. On the indices, as I said, we have put spreads, and that typically don't give you a lot of hit when the market kind of gives you a bounce back. So assuming that and staying with the idea that the bigger trend is on the downside, I think on the index, put options or put spreads should be held on to. On the stock side, while it's very risky to take a shot at 70 points down kind of an index, but the direction is negative, so we'll keep going with that. Dabur is a STBT with a stop at 435 for targets of 422. And the other one is Chola Finance. I think that's a stock which has had some kind of a very negative day. So STBT here with a stop at 1465 for targets of 1440.
All right, take that point. Thanks a lot, Mitesh, for joining in. We'll speak to you tomorrow as well. For now, we are seeing some sell-off in a couple of other broader market names as well. Glenmark Pharma is at the low point of trade. Container Corp, ever since news flashed yesterday that there were, perhaps some sort of news piece reports coming in where Shipping Corp would perhaps be merged with Container Corp. From those levels, the stock has seen a sharp sell-off currently at the low point of trade. Hindustan Aeronautics is down 4%. war-like situations do well for a couple of these defense stocks. Can't say the same for a couple of these names right now. Solar Industries too at the low point of trade, and alongside that we are seeing continuous selling in mid-cap IT names as well. First Source is one of them, which is at the low point of trade. But another one which is lower, though off lows right now significantly, is PB Fintech. The IRDAI has asked insurance companies to significantly lower commissions on insurance products listed on Bima Sugam. What are the implications of this? Yash joins in with more. Yash.
Well, just on March 17th, a very important meeting took place between the regulator, IRDAI, which had the chairman and member non-life present in that meeting with all the insurance CEOs. And the discussion primarily were on two things. One was Bima Sugam and the second one was PIR, which is Public Insurance Registry. As far as Bima Sugam is concerned, at the start of the presentation itself, the chairman made it very clear, according to our sources to the industry, that the commission structure for Bima Sugam should be significantly lower than what the insurance companies are paying elsewhere. As a reply to that, what we've been given to understand from our sources, that the industry also through its presentation informed the chairman that Bima Sugam will follow a zero commission model, and the only cost which will be attached to any insurance policy and the premium under that insurance policy would be the platform fees, which together would be much lower as compared to the commissions which the industry is paying elsewhere. What we've been given to understand is that the industry has assured the regulator that in the next quarter, that is the first quarter of FY27, motor insurance policies will be listed and available on Bima Sugam for the sale. And then in the second quarter, term life and health insurance products will be available, which means in the first half itself, three important insurance policies, motor, health and term life, will be available on Bima Sugam. PIR, Public Insurance Registry, was also discussed, which will have all the information of every insured person and will be a plug to Bima Sugam.
All right, Yash, thanks a lot for that. So that's about this story from the insurance space. Meanwhile, Sudeep Bandyopadhyay, the market expert, joins us as well. Sudeep, any stock that you believe is worth buying after this big correction that we've seen today? Anything that has come into value zone, anything which is attractive, anything where capital can be protected?
Well, I think, very aggressive stand, but I think Larsen Toubro L&T is definitely merits buying. Unless the assumption is that this war is going to continue indefinitely, it's a matter of time before this war stops and things will start coming back on track for L&T. They have a significant exposure in West Asia, and the concern which the market has expressed because of that by bringing down the share price is to an extent genuine. But this is all very short term. And you're getting L&T below 3,500, where if you look at the brokerage recommendations, most of them were above 4,000. So under these circumstances, I think from a little aggressive investor point of view, having a long-term outlook, L&T is a great buy at current levels.
All right, Sudeep, hold on. We're going to take a short break, come back, we'll wind down the markets, we'll try to squeeze in a couple of questions as well. Stay tuned. Well, as we took that break, there's been a big recovery from the lows. Just take a look at the Nifty Bank, actually. That's seen a good recovery. Stocks like ICICI Bank, they've seen a recovery. I think some of these heavyweight stocks, they have helped in pullback closer around 100 points from the day's lows. Just pull up a few stocks, Reliance Industries, ICICI Bank, as well as Bharti Airtel. All three of them have seen a good recovery, which has led to a bit of a fight back. Even SBI, I think we should pull up. So SBI and ICICI Bank, both of them are trying to do some bit of heavy lifting, and that's why we've seen a recovery. Yes, Sudeep, this market is looking a little bit jittery, or very jittery if you'd like to call it that, but it's giving you an opportunity to get into some mid-cap names, and that too at the price of your choice. You want to name a couple of them?
Well, definitely. I think, if you're a long-term investor, this kind of environment gives you an opportunity for picking up stocks for long-term. And we have seen this getting repeated time and again over the last 30, 40 years. So I strongly believe that this is an excellent opportunity, provided you have liquidity, to start buying slowly. I mean, I don't know whether we have seen the worst yet or it's going to come, but it's a matter of time before things settle down. Whether it's going to be 7 days or 15 days, we'll have to wait and watch. As far as specific stocks are concerned, some of the auto component stocks which we like for quite some time, one is Sambandhana Motherson, the other is Sona BLW. Both can be looked at current level. Amongst the chemical, agrochemical, specialty chemical pack, UPL has been our favorite for some time, and that can be definitely looked at current levels. Some of the fertilizer stocks, there is too much of turbulence, too much of uncertainty. But if you look at slightly ahead of this, I think things are looking up for all these sectors which I'm talking about.
Right, things are looking up whenever things settle down or there is some sign of de-escalation. Thanks a lot, Sudeep, for joining in. As we start winding down, there is notable recovery from the lows, almost 130, 140 points from today's low. And today's low will make another panic important level to track as we move forward. But the market still continues to be fairly wobbly. The Nifty down nearly 700 points. The Bank Nifty down 1,700 points. Could have been a lot uglier, but but for the last 100-point recovery that we saw in the last few minutes. We're going home with big cuts on the frontline indices, a lot more in the portfolio side, Nigel.
Well, that's right. A lot of stocks are doing a thing of their own in today's trading session. So let's name a few of them for you. Gujarat Alkalis, that's one of the big gainers in today's trading session. Massive move is what we saw on that particular name. I think we should get that one up for you on the screen. Big move in today's trade. Butterfly Gandhi as well, that stock was up close to around 10%. So there were a few winners in today's trading session, and otherwise weak looking market. I think even Vare Energies, if I'm not mistaken, I think that one was doing a little bit better. No, I'm not getting a refresh rate on that particular name. But net Manglam, a weak trading session. At least the number of stocks advancing got to around 450 stocks. Otherwise, the screen is looking extremely pale, just around 30 minutes or thereabouts. It could be an element of Sensex weekly expiry as well that played out. And today, the bigger element, though, was that domestic participation could be relatively lower. And add to it, you had HDFC Bank that dragged the index down by more than 100 points. We'll wrap up on this edition of Closing Bell. You stay with us. The team of Markets Forward comes up next.
West Asia Royals markets, Nifty and Sensex see its biggest single-day fall in nearly a year. The Nifty ends below 23,000. All stocks end in the red, except ONGC. All major indices see cuts of nearly 3.5%.
Oil and gas prices spike after escalation in attacks on key Gulf energy infrastructure. Brent hits the $116 per barrel mark. Gas prices in Europe surge more than 20%. India crude basket touches the $145 per barrel mark.
And shares of HDFC Bank tumble after the sudden resignation of part-time chairman Atanu Chakravarti. He cites incongruence with personal values and ethics. RBI says no material concerns on conduct or governance at HDFC Bank. Former HDFC CEO Keki Mistry steps in as the bank's interim chairman for 3 months.
Good evening. You're watching us here on Markets Forward. This is your go-to show where we aim to get you all the key data points to get up for the next trading day while prepping up or repeating what took place in trade today as well. I'm Mangala Malu, with me Ritu Singh. It's been an ugly day of trade with the Nifty down nearly 800 points. The last 3 days of gains erased completely, and it was a day of a perfect storm, right? It was weakness in West Asia, oil prices rising, as a result of which the market selling off, and add to that we had our own domestic concerns with regards to the HDFC Bank stock, which buoyed the market lower and put pressure on both the Nifty as well as the Nifty Bank. Across the board, there was a sharp sell-off. All that and more over the next 20 minutes. Ritu.
Yes, Manglam, we've got you covered for the next 20 minutes with all the big news and the key developments on Dalal Street, the top corporate voices and events to track ahead. Now, let's kick off with the day's, some of the key developments. Here's a lineup of what we'll have in store for you today. We start with the top movers and shakers of the day with Vivek Iyer, and over the next 30 minutes, we'll also decode the sharp fall on Dalal Street with the spotlight on the West Asia war, rising crude oil prices Manglam was talking about, and also, of course, tell you why HDFC Bank fell 4% in trade. And last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. With that, on to our first segment of the day. Vivek Iyer joins us now from the big wall with the top movers and shakers.
Well, thank you so much for that. Very weak trading session. You did see the market breadth go ahead and become very, very weak, especially in the last hour of the trade. Few specks of green that you're seeing, even that went and hit the negative territory. But still, we managed to find a few stocks that ended the day with mild gains. Some of the stocks included, of course, the upstream names. Remember, they'll make windfall gains. And if this particular trend continues, names like ONGC, Oil India, Clear Beneficiaries, Coal India, Power Grid, traded with gains through the trading session, but gave them up, especially in the last hour of the session. Safari Industries, one name from the broader end of markets that managed to hold on to a certain amount of gains during the course of the session. So that particular stock up almost 4%. Acme Solar, select renewable energy stocks continue to outperform the broader end of the markets. Weakness across, but these names continue to do quite well. But the list of laggards, of course, very, very strong. Can't look beyond the BFSI pack today. The HDFC Bank news spooking the entire space, whole host of NBSE stocks to give up gains, regulatory concerns, so many things that are happening. And on the back of that, investors sold off these stocks in a hurry. Shriram Finance down over 7%, top laggard. HDFC Bank 5% low. Bajaj Fin, IDFC Access, all of these names down anywhere between 4 to 8%. The consumer durables, the cables and wireless pack, all of these names too. Remember, there have been demand concerns, input costs spiking up, commodity prices going up. So markets are worried both on the demand as well as margin front. All of these names, look at PG Electroplast down 6%, Havells, Volta, all of these names down anywhere between 2 to 7%. The next set of stocks, in fact, remember, the IT pack in the last couple of trading sessions was actually just beginning to outperform. But today they gave up gains as well, especially the mid-cap IT space, names like Coforge, Infosys, OFSS, all of these stocks down anywhere between 3 to 5%. And of course, OMC is the biggest underperform, continue to see significant selling pressure. Remember, prices at the pump aren't going higher, so they continue to make significant marketing margin cuts, and HPCL, BPCL, ISCL, all of them down anywhere between 3 to 8%. And lastly, today both of the exchanges after a while did see selling pressure emerge, both BSE as well as MCX, giving up some of the premium or some of the gains that they made in the backdrop of the upcoming NSE IPO at elevated valuations.
Take that point, Vivek. Thanks a lot for that. So those are a bunch of stocks which were on our radar. The war in West Asia continues to roil the markets around the world, sending oil prices soaring to a near $116 per barrel. Prices rose after fresh attacks on multiple energy facilities as they raised fears of disruption to global oil and gas supplies. Gas prices in Europe too surged over 20%, while India's crude basket breached the $145 per barrel mark. Iran bombed energy assets in Qatar, Saudi Arabia, UAE and Kuwait. This after Israel's attack on Iran's largest gas field, which is also the world's largest known reserve of natural gas. Axis Capital's Neelkant Mishra warns that if this lasts over 4 weeks, this war that is, there could be a risk of significant global recession, while Matrix Capital's Richard Regolia says that oil prices could only rise further. Remember, they've risen 50% already from the start of this crisis.
Remember that 7% of world energy supply is blocked. If this lasts more than 4 weeks, 4 more weeks, I think the risk of a significant global recession is quite meaningful. So that's the call, right? So how long can the regime persist? In many of these battles, thousands of aircraft are flying. There are so many missiles being shot at. There could be some error with the map. There could be some AI-generated error, and mistakes can be made. So I think those risks are high.
The strait itself is really the key. It being closed is the number one factor. Any attack on infrastructure also has a dramatic effect, and we're seeing it on price. What we're starting to see is a bifurcated market in the world. We're talking about LNG, which is obviously very important given the bombing of the field that happened yesterday. And I think that field, while it supplies a lot of LNG to Iran, it's one of the major fields that Qatar uses for its LNG exports, of which it's the largest exporter of LNG in the world, approaching 20 to 25%. Also affecting this is the amount of LNG cargoes or ships that are there. They're very sophisticated ships that are needed to move liquefied natural gas. And so that's very important.
Okay, let's stick with that story, and we have Sonal Bhutra joining in with everything that has transpired across global energy markets amid this war in West Asia. Sonal, take it away.
Well, the global energy market is reacting to a series of developments across key gas infrastructure in the Gulf. The South Pars North Dome gas field, the world's largest natural gas field, has come under attack. The field holds an estimated 48 trillion cubic meters of gas, which is accounting roughly 25% of global proven reserves. It forms the backbone of gas production for both Iran and Qatar and is central to global LNG supply. At the same time, Ras Laffan Industrial City, which is Qatar's main LNG export hub, that has been targeted too. Ras Laffan handles approximately 77 to 80 million tons per annum of LNG exports, that is close to 20% of global LNG trade. With supplies primarily moving to Asia and Europe, any disruption here has direct implications for global gas availability. In the UAE as well, gas operations have also been affected. The Habshan gas processing plant has halted operations. This is a key processing hub in the UAE's gas network, handling billions of cubic feet of gas per day. Now, the disruption points to a broader risk to energy infrastructure across the Gulf region. Markets have responded to these developments. Oil prices, they have risen from $105 to $110 per barrel. LNG markets are also pricing in tighter supply conditions now. We'll also see possibility of cargo rerouting from their routes. Taken together, these events are impacting a significant portion of the global energy system. Around 25% of global gas reserves are linked to the affected field. Nearly 20% of LNG trade is exposed to this, and close to 20% of global oil flows through this broader region. The key takeaway is on supply timelines. So even if the Strait of Hormuz remains operational, LNG supply from the Middle East is likely to remain constrained over the next few months due to the infrastructure disruption and precautionary shutdowns. And that is very important.
Indeed, that is very important. A big cut is what we've seen in the markets on because of that, individual stocks as well. We'll discuss all of that with our guest today. Sudeep Bandyopadhyay from IndiTrade Capital joins in. Ruchit Jain from Motilal Oswal Financial Services as well. Ruchit, let's start with you. What are the charts saying? I mean, 3 days of recovery from oversold zones, and in one fine trading session, one candle, that entire gain has been wiped out. The Nifty is just barely holding on to that 23,000 mark. Market breadth leaves you a lot, desirable if you're a bull 2,700 stocks which ended lower, and the India VIX, fear is back in the system, 22.75.
Yeah, hi, very good afternoon. Well, last 3 days market did see recovery, but there was no reversal signs in the data. Primarily, if you look at this entire correction of last 1.5 months, markets have seen the sharp correction because of the rising geopolitical tensions. FIS continues selling. Even in the long short ratio has been very much bearish. Rising crude oil prices, and last 3 days of recovery, neither we saw any geopolitical tensions getting pulled off, neither FIS FIS turning buyers, and another crude oil prices coming down. So market up move was more because of a technical bounce where the momentum readings were oversold, and after forming a lower top around at 23,800, Nifty seems to have continued its downtrend today. So that low top, low bottom formation still continues, and until the price up moves are supported by the change in the data, such pullback moves would get sold into. So trend still remains bearish. Rather than looking at levels, what levels would this correction end? I would look at the data at what levels would the data change, and until the data changes, it's better to stay with that.
Sudeep, what is your sense? How long does this correction last after the kind of volatility we've seen? For the first 3 trading sessions of the week, we actually had a good run up, and today, the kind of losses that we're seeing. How long do you think this, this continues, the correction?
Ritu, I think all depends on what's happening in West Asia and as far as this conflict is concerned. If this conflict further escalates, I think the risk to the market is real. And we have seen that, the moment the oil fields and the gas fields, gas facilities have started being attacked by both the parties, things have really gone out of control. This will also have an impact as far as US markets are concerned. And at some stage, I think both the parties will need to sit on the negotiating table to bring an end to this, for lack of a better word, madness. I think it's a matter of another 1 or 2 weeks maximum before things cool down. Of course, it's all in the realm of speculation. But till the time there is de-escalation, it's very, very difficult to predict the market, and it is better to assume that things will remain extremely volatile with a clear downward bias.
All right, Sudeep, do stay on. We have another important story to address, and that is HDFC Bank. That stock fell more than 4% after part-time chairman Atanu Chakravarti, he stepped down from his role. Now, the manner in which he stepped down is what really spooked the market, saying that there were differences when it came to the values and ethics that he had with what he had observed in the bank for the last 2 years. But almost immediately, you had the bank come out to clarify that there was nothing material to report. In fact, Atanu Chakravarti himself didn't have much to say beyond his letter on any specific issue that he had found. You also had the Reserve Bank of India, in a very, very rare instance, come out with a comment on an individual bank. Of course, they gave their consent to Kiki Mistry to go on as an interim part-time chairman for 3 months while a more permanent chairman is found. RBI also highlighted that there is no material concern in the conduct or the governance of HDFC Bank, despite what was being said and, done. Our sources indicate the differences were very personal between Atanu Chakravarti and the management, primarily stemming from the fact that Atanu Chakravarti's style of functioning as a non-executive chairman was seen very executive style-like, with a lot of interference in day-to-day operations, and that perhaps did not sit well with the current management and has led to his exit. Separately, with the chairman exiting, you also have the ED Bhavesh Zaveri, who's set to retire in April. We had a spate of other senior level exits in the last 12 months. The CFO is set to retire later this year. So given all of this, upheaval, so to speak, in the top leadership, we've been given to understand the board is very much in favor of Shashidhar Jagdishan to continue as MD and CEO when his current term ends in October. So they are likely to recommend his name for the CEO position from the NRC committee when the time comes. With that, let me go back to our guest for a quick comment on this. Sudeep, would you say, despite this clarification coming in from RBI, from the bank, various comments and statements supporting that there is no material governance concern at the bank, do you think this overhang will continue on the stock in the near term, given the manner in which you have someone the stature of Atanu Chakravarti exiting?
Absolutely, you're right, Ritu. I think this does leave a very bad taste. HDFC has been a gold standard as far as governance is concerned, and this exit definitely creates some confusion in the minds of investors as well as the general customers of the bank as well. Having said that, I think the clarifications given by the management repeatedly today, I think should reassure their sensitivities to a great extent. But undoubtedly, this does create a lot of confusion, and this overhang is definitely going to be there for some time.
Okay, do stay on. Let's hear out what Interim Chairman K.K. Mistry and CEO Sashidhar Jagdishan had to say about this whole saga.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent in line with regulatory requirements. None of us as board members are aware of what are the specific issues which Mr. Chakrabarty wrote in his letter. The board members asked him yesterday, and he didn't give any specific explanation. As regards Shashi's appointment, it is something that will be considered by the Remuneration Committee, by the Nomination and Remuneration Committee. There is still time to do that, and obviously at the appropriate time, the committee will meet and we will take it up in the board. Nothing changes as far as that is concerned. He's been running the bank successfully for the last many years, and we all hope that he will continue to work with the same devotion that he has over these years.
As we move forward, we will sort of re-examine our organization structure, and with the consent and the advice of the board, we will announce it at the appropriate time. Not at this juncture, without the approval of the board, which I will take it up to them at the right time, post the financial year closure.
All right, we've discussed the markets. We've discussed, the two movers of the markets, both oil as well as HDFC Bank. What we'll do is take a short break, come back, continue our conversation with the guests, along with the key market events that you need to track for tomorrow. Stay tuned. Welcome back. Among the top losers today, we also had a couple of these financials, which were the likes of Shriram Finance as well as Bajaj Finance, which dragged the Nifty lower. And then we had new age companies too, Eternal, Swiggy, Urban Company, all of them who had just over the last few trading sessions begun to find their feet and do well, sold off once again. Sudeep is still with us, so is Ruchit. Sudeep, any of these new age companies that you would back available at what, 40-50% discount to their all-time highs?
100%. Eternal, definitely. We have been liking Eternal for quite some time. I think, leave aside what's happening in the last few days in the market, last few weeks rather in the market. Overall, I think Blinkit's performance has been improving very clearly. In spite of the intense competition in that segment, Blinkit is expected to show growth even in this current quarter, which is ongoing. And of course, the food delivery business has stabilized. District, which is the competitor to Book My Show, has started stabilizing its performance. So overall, we definitely like they're undisputedly the market leader. And these are some businesses where winner takes all is what applies. So at current level, definitely Eternal is recommended from a long-term perspective. We also do like one other company, which is Delivery. Unfortunately, it was not performing well, and performance quarter on quarter was not great, but things have started improving there. And we believe that itself has potential at current levels.
Rachid, Sudeep, thank you so much for joining us on this day where, the market saw a big cut. We'll obviously keep coming back to you through the course of the next few days to get your insights on the market, where we are headed and where we stop, what are the investable ideas. And before we wrap, let's get you some key market events to watch out for as well. Gaurav standing by for all the key events that are in focus for tomorrow's trading session. Gaurav.
Well, yes, if you look at the events, we've already seen a negative reaction in the market. The Nifty declined almost more than 2.5%. And one of the key events to watch is the West Asia war and updates. Now, today we saw multiple attacks were reported from Iran in the Gulf region, Kuwait, Saudi Arabia. They reported damage in refineries as well. And let's also not forget that the European gas, now that prices, they jumped almost as high as 35% after the world's top LNG plant was hit by Iran. So there are multiple attacks which were being reported. And that is something which is causing concerns in the market, and that is what we saw in the market as well. Nifty was down almost by 2.5%. So that is a key thing to watch out for if there is any update. Second is that the commodity prices, specifically in terms of oil and LNG. Now, natural gas, Brent oil prices, today we saw Brent oil again going to that 119 mark, which was at the highest level a few days ago. And at the same time, natural gas prices, they also increased almost by 4 to 5%. So that is also something that we should be watching out for, because it will have some impact on the market, not only on the market, specifically on the OMCs, paint companies and other companies as well. From the events point of view, there are other certain things which are happening. So first, let's talk about US market. Now, S&P, Dow Jones, indices, there will be some quarterly rebalancing which will be happening. So let's watch out for that. And lastly, from the Indian market, first, even in this weak market, we are going to see a new IPO. Now, it is a Coal India backed company called Central Mine Planning and Design Institute. They will be launching their 1800 crores IPO. Remember, the entire issue is up for sale. And if you look at the price band, 163 to 172 is the price band, and the issue will open tomorrow. So let's see how the subscription data goes for IPO. And lastly, let's also not forget about Metropolis Healthcare, because company will be declaring bonus in the ratio of 3:1 tomorrow. So let's watch out on these stocks and also on the broader market, as if there is any impact of the war, which can be seen tomorrow as well.
Yes, we'll not lose sight of that. Gaurav, thanks very much for bringing us a wrap of that. On that note, we'll close this edition of Markets Forward from Manglam and me. It's a goodbye. We'll be back with more news and updates after this short break, so stay with us.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Gulf War plunges into a perilous new phase on the back of escalating attacks on energy infrastructure. Iran bombs energy assets in Qatar, Saudi, UAE and Kuwait. This after Israel attacked Iran's largest gas field, which is also the world's largest known reserve of natural gas. President Trump distances the U.S. from Israel's attack on Iran's gas field, says the U.S. knew nothing about this particular attack, adds Israel will not attack energy assets in Iran anymore. Also threatens to massively blow up the gas field in Iran if it attacks Qatar again. Oil and gas prices spike after an escalation in attacks on key Gulf energy infrastructure. Brent hits the $116 mark. Gas prices in Europe surge more than 20%. India's crude basket breaches the $145 mark. Rising crude oil prices jolt the Wall Street. Sensex and the Nifty post the biggest single-day decline in nearly 2 years. No place to hide as all major indices declined by over 3%. Shares of HDFC Bank tumble after the sudden resignation of part-time chairman Atanu Chakrabarti. He cites incongruence with personal values and ethics for his resignation. The RBI says no material concerns on the conduct or governance at the bank. Former HDFC CEO Keki Mistry steps in as the bank's interim chairman for 3 months with the RBI's consent. Sources say the HDFC Bank board will recommend extending CEO Jagdishan's tenure to the RBI. The U.S. Fed holds interest rates steady despite pressure from President Trump. Chairman Jerome Powell says he has no intention of leaving the Fed until the Justice Department investigation of him is well and truly over. Powell also plans to stay longer if his successor Kevin Walsh is not officially confirmed by the month of May. India's obesity and diabetes drug market is on the cusp of a major shake-up. Semaglutide, the molecule behind Ozempic and Wegovy, will go off patent this Saturday, paving the way for low-cost generic drugs to enter the market. Well, let's go straight to the top story this evening. Escalating attacks on energy infrastructure in the Gulf region has plunged the war in West Asia into a perilous new phase. Now, missiles struck Qatar's core natural gas processing site, and that caused extensive damage. Explosions also shook Saudi Arabia as a drone fell on the oil giant Saudi Aramco's refinery. Saudi also intercepted a ballistic missile launched towards Yanbu, the port city where the refinery is located. Saudi Arabia said it reserves the right to attack Iran if it is deemed necessary. Now, 2 oil refineries in Kuwait were also targeted by drones, resulting in fires at both sites. The strikes also forced the UAE to shut its gas facilities, though the missiles were intercepted. A ship near the Strait of Hormuz was set ablaze by an unknown projectile. More than 20 vessels have been attacked in the region in the last 3 weeks. Now, all of this escalation follows Israel's attack on Iran's largest gas field, which is also the world's largest known reserve of natural gas. Now, President Trump seemed to distance himself and said that the U.S. knew nothing about this particular attack. He added that Israel will not attack energy assets in Iran anymore. But Trump also threatened, and I quote, massively blow up the gas field in Iran if it attacks Qatar again, end of quote. Meanwhile, Iran is hit out at the U.S., warning that the economy will have to face quote-unquote, an Israel-first tax. Iran's foreign minister cited reports of the Pentagon seeking $200 billion to fight the war as the tip of the iceberg. The onslaught on key gas and oil processing sites has pushed Brent crude above $115. Gas prices in Europe surging more than 20%, while in India, the crude basket has breached the $145 mark. Sonal is here with more on the energy infrastructure that was hit and the impact that this is going to have on the energy market. Sonal.
Well, the global energy market is reacting to a series of developments across key gas infrastructure in the Gulf. The South Pars North Dome gas field, the world's largest natural gas field, has come under attack. The field holds an estimated 48 trillion cubic meters of gas, which is accounting roughly 25% of global proven reserves. It forms the backbone of gas production for both Iran and Qatar and is central to global LNG supply. At the same time, Ras Laffan Industrial City, which is Qatar's main LNG export hub, that has been targeted too. Ras Laffan handles approximately 77 to 80 million tons per annum of LNG exports. That is close to 20% of global LNG trade. With supplies primarily moving to Asia and Europe, any disruption here has direct implications for global gas availability. In the UAE as well, gas operations have also been affected. The Habshan gas processing plant has halted operations. This is a key processing hub in the UAE's gas network, handling billions of cubic feet of gas per day. Now, the disruption points to a broader risk to energy infrastructure across the Gulf region. Markets have responded to these developments. Oil prices, they have risen from $105 to $110 per barrel. LNG markets are also pricing in tighter supply conditions now. We'll also see possibility of cargo rerouting from their routes. Taken together, these events are impacting a significant portion of the global energy system. Around 25% of global gas reserves are linked to the affected field. Nearly 20% of LNG trade is exposed to this, and close to 20% of global oil flows through this broader region. The key takeaway is on supply timelines. So even if the Strait of Hormuz remains operational, LNG supply from the Middle East is likely to remain constrained over the next few months due to the infrastructure disruption and precautionary shutdowns. And that is very important.
Yes, it certainly is. Sonal, many thanks for joining us. But it's not just energy infrastructure. Drone and missile strikes continue across the region as the war has entered its 20th day. The Iranian president confirming that the country's intelligence chief, Ismail Khatib, was killed in an Israeli airstrike. He called it a cowardly assassination. Now, this marks the third death of high-ranking Iranian official in just the last 48 hours. In retaliation, Tehran ramped up its missile attacks on Tel Aviv. The Israeli military said Iran's cluster warheads are difficult to intercept as they disperse into several smaller explosives mid-air. However, the army maintained it has intercepted all the projectiles. Meanwhile, Tel Aviv has also stepped up the pressure on southern Lebanon. The military conducted air raids across Lebanese towns and the capital city of Beirut. Israel claimed that 20 fighters belonging to the militant group Hezbollah have been killed. Lebanon says nearly 1,000 people have been killed in the country due to Israel's attacks. Meanwhile, the foreign ministers of Gulf countries, along with other Muslim nations, issued a joint statement calling Iran to immediately stop its attacks and not obstruct the Strait of Hormuz. The joint statement also condemned Israel's attacks on Lebanon and Iran's energy assets. In the U.S., former National Counterterrorism Director Joe Kent, who resigned recently in protest over the war, is speaking out. In an interview, Kent said that there was no intelligence that Iran was going to launch a big sneak attack similar to 9/11. Kent also said Israel had pulled the U.S. into the conflict and was influencing American policy in the Middle East. The U.S. Director of National Intelligence, Tulsi Gabbard, faced questions from lawmakers during a deposition. When asked if Iran posed any imminent threat, Gabbard sidestepped the question, saying it was not her responsibility to determine what is an imminent threat and what is not. However, Gabbard did admit that Iran was not rebuilding its nuclear capabilities after the U.S. strikes on its facilities last year.
Was it the assessment of the intelligence community that there was a, quote, imminent nuclear threat posed by the Iranian regime, yes or no?
Senator, the only person who can determine what is and is not an imminent threat is the president.
False.
And
this is the
worldwide
worldwide threats hearing where you present to Congress national intelligence, timely, objective, and independent of political considerations. You've stated today that the intelligence community's assessment is that Iran's nuclear enrichment program was obliterated and that, quote, there had been no efforts since then to try to rebuild their enrichment capability. Was it the intelligence community's assessment that nevertheless, despite this obliteration, there was a, quote, imminent nuclear threat posed by the Iranian regime? Yes or no?
It is not the intelligence community's responsibility to determine what is and is not an imminent threat.
Okay.
That is up to the president
here's the problem.
based on a volume of information
that
he receives.
It is precisely your responsibility.
While Tulsi Gabbard there sidestepping the questions. Back home, market snapped its three-day winning streak, witnessing the biggest single-day fall that we've seen in 2 years. All major indices were down over 3%. The Nifty around the 23,000 marker and closing about 775 points lower, cut of over 3%. The Sensex also dropped another 3%. The Nifty Oil and Gas Index down 2%. And the Nifty Bank down about 3% plus today. All stocks closed in the red, barring ONGC. That was the lone stock in positive territory today. Mangalam is standing by to take us through the market fall that we've seen and what the cues are in terms of where we're headed next. Mangalam.
Well, it was an ugly day of trade. If you were a bull, it was an ocean of red in the markets today. We were bracing for a perfect storm at the open itself, where crude surged past 112, increasingly moved higher to about $116 per barrel. The HDFC Bank management changed. The deputy managing director of the board, actually chairman of the board, resigning, not doing too well for that index heavyweight as well. Add to all of this, we had the domestic money market, which was closed. Alongside that, we had the Sensex weekly options expiry. And at the same time, we did see no rate cut as expected coming in from the US Fed overnight as well. all of that meant that the 3-day gain that we saw on both the Nifty as well as the Sensex was totally wiped out in one trading session itself. The Nifty fell over 800 points at one point in time, ended closer to 800 points lower. The Sensex as well was lower, and there was no real place to hide. The Nifty Bank was buoyed lower by HDFC Bank and a lot of other private sector banks as well. No support coming in from the IT index or the auto pack, which saw accelerated sell-off towards the second half of trade in particular. What this meant is that fear spiked once again. India VIX, when we started this week, was over levels of 22, went below as the market staged a recovery, and today was back above that 22 level mark as well. All through the course of trade, your portfolios would have looked ugly because the advance decline ratio was 7 stocks declining for every stock which was advancing on the exchanges. So we had, the financials not doing too well. Shriram Finance, Bajaj Finance, all of them top Nifty losers. We had HDFC Bank, obviously the top contributor on the way down, but L&T as well is now down 20% ever since, the issue started with Iran and the world. We have the top losers because of, the rise in crude. Obviously, oil marketing companies continued their sell-off, and today was a sharp one on HPCL, BPCL, IOC as well. And this problem, you actually percolated down to lower, the second or third level of stocks as well. So real estate stocks, DLF, Godrej Properties, Lodha Developers, all of them were lower. Trades were unwound in Eternal, Swiggy, Urban Company as well. Few gainers, just few gainers, were the likes of ONGC, Oil India, Balrampur Chini, and a couple of these induction cooker makers. Now, the key triggers to track will be obviously domestic flows when money market opens tomorrow. Rupees at a record low, whether there is any recovery or is there any news or sign of de-escalation.
All right, many thanks for joining us, Manglab. The big story, though, that we are tracking this evening, in a surprising turn of events, HDFC Bank's part-time chairman, Atanu Chakrabarti, resigned from his role, citing ethical concerns. Now, he'd been serving as the bank's part-time chairman since May of 2021, and his current term was set to end in May of 2027, so he still had a year. Former HDFC CEO Keki Mistry has stepped in as the bank's interim chairman for a period of 3 months. This is with the RBI's consent. Now, what is interesting and important is that in his resignation letter, Chakrabarti has said, and I quote, "Certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal values and ethics," end of quote. However, in his first response to news agency ANI, Chakrabarti described his resignation, quote unquote, as a routine matter. Now, shares of HDFC Bank fell in trade on the back of this development, even as the RBI had to come out and do damage control. The RBI said, and I quote, "There are no material concerns on the conduct or governance at the bank." Ritu joins us now with more details. A cut of over 5% today on HDFC Bank. Ritu, a very unusual turn of events. Atanu Chakrabarti tendering his resignation, dropping a bombshell there, but then saying that there were no material issues at HDFC Bank, something that the RBI as well as the bank's board has come out very clearly and plainly and said. Where does this now leave HDFC Bank?
The manner of Atanu Chakrabarti's resignation pointing to, values and ethics, that has raised some serious concerns. But almost immediately, we saw both the bank and in a very, very rare move, even the regulator coming out to clarify matters. Most unlike of RBI to comment on an individual entity, and it has done so a handful of times in the past for ICICI Bank during the global financial crisis when there was a run on the bank, or for Yes Bank during the reconstruction period. And this time around, RBI seemed to calm stakeholders and importantly customers in a statement which said that HDFC Bank remains fundamentally sound with a professionally run board, and there were no material governance concerns that were on record. Now, that is exactly what we've been reporting since early this morning as well. Meanwhile, you have the bank appointing HDFC Group veteran Keki Mistry as interim non-executive chairman for 3 months with RBI's approval. But our sources have been indicating that the exit was not triggered by any regulatory issue. Neither the RBI nor the bank or its board pushed for his exit. It was very much an individual decision, but there were internal differences. We're told the friction had been building largely around Chakrabarti's style of functioning, which was seen by some as executive in what is meant to be a non-executive role. In fact, the resignation appears to have caught the board off guard, and no detailed explanation was shared by Atanu Chakrabarti beyond what was said in the letter, even when he was specifically asked about it in the board meeting. Now, during the con call, Kiki Mistry was very categorical that there was no specific governance lapse that was ever flagged to the board. And as to the concerns relating to values and ethics pointed out by Atanu Chakravarti, Kiki Mistry made a very strong statement, and I quote him, that at the age of 71, I would not have taken on this role if the bank's governance did not align with my values and integrity. We also heard from CEO Sashidhar Jagdishan, who called this an unfortunate event and said the bank will now relook at its organizational structure, and added that the best was yet to come. So yes, strong words from the outgoing chairman, but equally firm reassurance from both RBI and HDFC Bank.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent, in line with regulatory requirements.
As we move forward, we will sort of re-examine our organization structure, and with the consent and the advice of the board, we will announce it at the appropriate time. Not at this juncture, without the approval of the board, which I will take it up to them at the right time, post the financial year closure.
And staying with HDFC Bank, sources also tell us that the bank's board is likely to seek an extension for Shashidhar Jagdishan as the CEO after his current term ends, which ends in October. Ritu is still with us. Ritu, is it likely that the board will seek the reappointment of Shashidhar Jagdishan and recommend his name as CEO to the RBI?
Well, yes, for a bank the size of HDFC Bank, handling a 40 lakh crore rupee balance sheet, I mean, leadership and continuity, all of that is as critical as it gets. And that's exactly where the focus is now shifting after Atanu Chakravarti's exit as chairman, with sources telling us that the bank's board is now likely to seek an extension for CEO Sashidhar Jagdishan, whose current term is set to end in October. In fact, there's already been an effort to persuade him to continue. And it's not just the board. The RBI is also very keen on him staying on, with CEO-level continuity seen as crucial at a time when the bank is navigating multiple leadership changes. And why do we say that? Just look at the churn at the top. Atanu Chakravarti exiting as chairman, of course. Bhavesh Zaveri retiring as ED next month. Parag Rao recently retired in September. You also had the CHRO exiting. The CFO is going to retire later this year, among others. So clearly, as HDFC Bank goes through a transition at the top, ensuring stability in the corner office can well be the anchor that the institution needs. Now, during a media con call earlier today, when asked whether Jagdishan had to be persuaded to stay, he dismissed the suggestion. But you had interim chairman Kiki Mistry, who did indicate that the board will, consider Jagdishan's reappointment in the near future.
As regards Shashi's reappointment, this is 7 months away. Obviously, to my mind, Mr. Chakravarti's resignation has nothing to do with Shashi's reappointment. They are completely different matters. And NRC, the bank's NRC, will consider Shashi's reappointment in the very near future.
So Shashidhar Jagdishan likely to be reappointed as the CEO of HDFC Bank. Now, Prudential Corporation is looking to exit ICICI Prudential Life Insurance. Also say that Prudential might look at selling its entire stake in the company via a block deal or an offer for sale. The company's stake in ICICI Prudential Life is valued at 18,500 crores. Sources have also indicated that Prudential is exploring the acquisition of 85% stake held by Bharti Life Ventures in Bharti AXA Life Insurance. Bain Capital has received approval from the Reserve Bank of India for joint management control of Manappuram Finance and its subsidiaries. After the proposed acquisition of up to 41% stake, Manappuram Finance will come under the joint control of the US-based private investment firm. The insurance regulator is aiming to overhaul how insurance products are distributed on its upcoming digital marketplace, Bima Sugam. Sources tell CNBC TV 18 the regulator is seeking significantly lower commissions for policies sold via the platform. Insurers have agreed to zero commission policies with a nominal fee. This comes after a meeting held on the 17th of March with CEOs of insurance companies, IRDAI's top brass as well. We'll head into a short break, but up next, semaglutide, that's the molecule behind the weight loss drugs Ozempic and Wegovy, goes off patent in less than 2 days. How will this reshape India's diabetes and weight loss market? A special report when we return. India's obesity and diabetes drug market is on the verge of taking off. Semaglutide, the molecule behind Ozempic and Wegovy, will go off patent this Saturday, paving the way for low-cost generic drugs to enter the market. Ekta analyzes how this could reshape India's diabetes and weight loss market.
India's weight loss and diabetes drug market is on the cusp of a major shake-up. While the market is currently dominated by Mounjaro from Eli Lilly, which has generated close to 900 crores in terms of sales within a year of launch, semaglutide, which is the molecule behind Ozempic and Wegovy, is going off patent in India on the 21st of March, likely triggering a wave of lower-cost generics. Now, the real inflection point is this. Mounjaro's patent runs well into the mid-2030s, but semaglutide is going off patent now, making it the first widely accessible weight loss drug in India. That gives it around a 10-year runway as a more affordable alternative before the next wave of patented drugs enter. This is already triggering a rush to tap into India's 100 million diabetics, the large, thin, fat population, and with 25 out of 100 people being either overweight or obese in the country. But this accessibility will come with a sharp pricing reset. From current monthly costs of around 8,800 to 16,400 rupees, prices could fall 50 to 70%, with estimates of 400 to 500 rupees per weekly shot within a year. According to Nomura, 400 rupees a week could be the tipping point, unlocking an addressable diabetes market of nearly 2 lakh crore, comparable to India's entire pharma market size. The semaglutide opportunity itself could scale to 9 to 10,000 crores, including obesity and lifestyle use. Companies are already positioning themselves aggressively. For example, Zydus has partnered with Lupin with 5 brands planned between them. Eris has tied up with Natco, and even innovators are expanding access ahead of competition. Novo Nordisk, for example, has partnered with Emcure and Abbott, while Eli Lilly has tied up with Cipla to widen Mounjaro's reach. Lastly, a few points to watch. Analysts expect the top 3 to 4 players to capture the bulk of the opportunity, while premium patients may continue with innovator drugs. Markets could expand beyond Maharashtra and Delhi, but companies may face high volumes with tighter margins. What will be closely watched is quality, given the complexity of the drug and fear of side effects. And if newer therapies, then sentiment. For now, the key question remains, can semaglutide truly go mass market in India, and in doing so, reshape the Indian diabetes and weight loss market?
Ekta, many thanks for joining us. With that, it is time for us to wrap up this edition of Business 360. More news and details will continue right here on CNBC TV 18. Stay tuned.
and welcome to Newsmaker. I'm Ritu Singh. Rapid developments at India's largest private bank is our focus this evening. In a surprising turn of events, HDFC Bank's part-time chairman Atanu Chakravarti resigned from his role, citing ethical concerns. He had been serving as the bank's part-time chairman since May 2021, and his current term was set to end in May of 2027. Now, former HDFC CEO Keki Misri stepped in as the bank's interim chairman for 3 months with RBI's consent. Now, in his resignation letter, Atanu Chakravarti said, and I quote, "Certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal values and ethics," end of quote. However, in his first response to ANI, Chakravarti described his resignation as a routine matter. Now, shares of HDFC Bank fell in trade on the back of this development, even as the RBI said there are no material concerns on conduct or governance at the bank's end. So what sparked this sudden resignation? Top sources tell us that Chakravarti's exit was not linked to the bank's conduct or regulatory concerns. Neither the RBI nor the bank initiated or directed the exit, and it was very much an individual decision. In fact, we understand that the friction stemmed from Chakravarti functioning in an executive style in his non-executive role, and the sudden resignation also took the board by surprise. Here is the bank CEO and the new interim chairman, Keki Misri, addressing stakeholders and the media on all of these developments.
On behalf of the board and in full concert with the executive leadership, I wish to assure all stakeholders that there are no material matters at this point of time. Based on our discussions, there was no specific happenings and practices that were brought to our attention. There were no specific operational or other issues that have been highlighted. The board's oversight mechanism remains fully operational, and our collective commitment to protecting the interests of the institution, depositors, shareholders, and all stakeholders is completely and totally unwavering. This disclosure made is complete and transparent in line with regulatory requirements.
As we move forward, we will sort of re-examine our organization structure, and with the consent and the advice of the board, we will announce it at the appropriate time. Not at this juncture, without the approval of the board, which I will take it up to them at the right time, post the financial year closure.
All right, joining me now is Furqan Moharkan, who is also closely tracking the developments at HDFC Bank. Furqan, let's begin with what you've picked up. What triggered the resignation?
Hi. So what we have picked up till now is that, we have been given to understand by the sources that there has been a sort of power tussle at the top of the HDFC Bank. And we have also been told that Shashidhar, this Atanu Chakravarti was against the extension being given to Shashidhar Jagdishan. Now Atanu Chakravarti had two major contentions regarding Shashi's extension at the top. One, he was not very, he did not like the style of functioning of Shashi. Shashi is known as a soft-spoken and a very people's person, and who's not very aggressive, unlike, the stereotypical image of the banker. Also, the another bone of contention that was there has been this thing of handling of the merger. Now, this is also very subjective in nature, given the fact that, in a battle of NIM and stability at the bank, after the what has happened post-merger is that the credit deposit ratio has shot up to almost 109, 110%. Now, Shashi has to tread this fine line between the deposit growth and the credit growth. And, he has been focusing on increasing the credit growth increasing the deposit growth over the credit growth. And which has not gone well with Mr. Chakravarti. That's what we are being told as of now. In fact, we are also being told that in case of HDB Financial Services, if you remember, they were in talks with MUFG for a stake sale, and it was called off because of the friction at the board level between Mr. Chakravarti and Shashi.
Well, Furqan, do stay on. Was there any friction over, extending his tenure as CEO?
Yes, that's what we are being told, that there has been a fiction at regarding extension of his tenure at as the CEO. As you know, Shashi's tenure is current tenure is ending on October 26th this year, and it's his second tenure at the top of the bank.
Yeah. Well, thanks Furqan for joining in with those details. Let's take the discussion forward. We're now joined by founder and MD of InGovern, Sriram Subramaniam, and MD of Institutional Investor Advisory Services, Amit Tandon. We also have Abhizer Divanji, who's the founder of Neostrat Advisors, who joins us on the show. Gentlemen, thank you so much for your time here. Sriram, if I may start with you, since you track corporate governance professionally, when you have a sitting chairman of the largest private bank resigning, citing practices not in congruence with his values and ethics, and then gives the board no real explanation when asked, how do you read into that? Is it a governance failure, a personality conflict, or just something else altogether?
Good afternoon. I would like to think that it's more of a personality issue, as also a miscommunication, as also a between the bank and the members of the board, including the chairman. So the statement put out by HDFC Bank desires a lot to be said, because they have not assuaged the concerns of the investors, because the chairman's letter ended up being cryptic. The onus is also on Mr. Atanu Chakrabarti, who stopped at just 2 sentences. Either he should have detailed it much more, or he should have just waited till his terms end, or quit without saying those 2 sentences.
That's true. I mean, we all would have liked to see more details apart from that one cryptic line that is in Mr. Chakravarti's letter. But Abhizer, I also wanted you to come in on the RBI coming out with this statement. I mean, publicly trying to reassure people that everything is okay with HDFC Bank. In your experience, given that RBI has already selectively done this in the past when there was a global financial crisis and there was a run on ICICI Bank, or when Yes Bank was going through what it was, does the fact that RBI had to come out with a statement itself signal that they were concerned about the market perception?
I think RBI's biggest worry has to be systemic. And HDFC is one of the largest private sector banks that we have after SBI in the country. And obviously, there would be concern that the regulator would have. So the regulator actually moved very swiftly, I would say. Unprecedented, but so swiftly. One is, it of course came out with a kind of clean chit that there are no issues. And that also may have been the case because in the past, there have been procedural issues at HDFC. And of course, the transition or the merger of HDFC and HDFC Bank is moving at a slower pace completely because of the external environment. And because of all this, I think there was RBI was responsible enough to, one, have the board go and talk to RBI. And after which the RBI came up not only with an affirmative statement, but also with the appointment of an interim chairman within the same day, unprecedented. But I think it doesn't sound that RBI is worried, but RBI wants to reassure. And market needs reassurance, because from what has happened, we have clearly seen that the markets and even depositors as a result of that would have been, a little jittery.
No, absolutely. It did seem like it seemed to reassure the markets, the stakeholders. But Amit Tandon, when the board says it has no idea what Atanu Chakravarti is referring to, that he didn't elaborate when asked directly on these concerns, does it suggest to you the board itself may not have been fully in the loop on whatever Atanu Chakravarti may have observed and have been concerned with? And how are your own clients, these institutional investors that perhaps hold the HDFC stock, reading this resignation letter?
Good evening, Ritu, and thanks for inviting me to your show. I'd like to say that, it's the ambiguity on both sides. One is in the resignation letter that Atanu Chakravarti wrote to the bank, as well as the fact that is a problem, and the fact that, when the board kind of spoke about it, they said they themselves have no clarity in terms of what the underlying issues or causes are. And I think this is something which needs to be addressed. And I would say that the bank needs to while the RBI has been supportive, which is a good thing, and has, have been kind of reassuring the market at this stage. Investors do like to have some clarity. What they all hate is the fact that there is uncertainty on any aspect. And therefore, particularly if there's governance uncertainty, it kind of erodes trust. And even if you have good financial numbers, you'll kind of turn around and say, look, can we trust the numbers? So therefore, that uncertainty needs to be resolved at the earliest. And that is the clarity which the market will be looking for moving ahead.
Sriram, quickly, what will assuage the investors from here on? You have an RBI statement that is so rare coming out and say that you had the management clarify in the morning on the analyst call, then again on the media con call, transparently releasing that letter. But we still saw the stock under pressure. And of course, we keep in mind that the markets were down overall as well. But what do you think it'll take from here on, the steps from here on, for stakeholders, for investors to be assured that these issues have been put to rest?
Yeah, it is not that HDFC Bank does not have issues. There are obviously news items that he was not supportive of the MUFG deal with investment in HDB financials. There is the 81 bonds being missold in Middle East. That was an issue. So there are a number of issues. So the onus is on the board, in particular, the independent directors to step up to create a committee of independent directors also to investigate. It could well be a personality issue, it could well be a communication issue, or it could well be smaller underlying issues which have not yet manifest to the board or to investors. So all these needs to be investigated by the committee of independent directors. Only when that report is out in the public and is shared, only then will we all know the truth. At the end of the day, management talking that there is no issue is because they themselves could be complicit for all we know. So at the end of the day, it is an independent investigation or an independent report that needs to be put out. And that independent investigation needs to be headed by the committee of independent directors. And somebody needs to step up there.
Okay, interesting there. Abizar, would you concur, that you need an independent committee, an independent investigation to really soothe the market nerves that, bank, the stature of HDFC Bank coming out to clarify there's nothing material, the regulator coming out to say that there is no governance concerns, not enough. Do you really need an independent committee to look into this before, the markets put this matter behind?
So the way I would look at it, I'm not sure whether an independent committee is required just as of now. Possibly what may be required, and see, I'm on a bank board. Normally what happens is when you get these kind of letters, I would treat it like some kind of a complaint letter, some kind of a whistleblower letter. And if you treat it as that, what I would end up doing as a bank director would actually be to say, let's talk about what are the issues of the past. You look at all the board minutes, what are the issues that have been raised. It's confidential to management, yes, to board, sorry. So let the board look at those, analyze and then figure out, is there a revisit required? And if a revisit is required, then a mechanism is put in place to have that revisit done. I think not taking cognizance would be wrong, but first taking cognizance to figure out what to do and then taking appropriate action is what a normal board would do.
Okay. Amit, would you concur with what Abizar is saying or with what Sriram was saying earlier? And, the fact that the bank has had a series of regulatory interventions just in the recent past. First you had that IT infrastructure concern, the credit card ban, the Dubai branch issue more recently. If anything, does this letter from Mr. Atanu Chakravarti, even without going into specifics, suggest that some of these issues that were nagging, they may not be behind just yet?
I'll come to the question. There is a great deal of, what Sriram has said and what Abizar has said. We need to go down that path. And to my mind, the most credible way forward is to facilitate a structured dialogue between Mr. Chakravarti and an independent, whether you call it a board committee, independent agency, or whoever it is, to surface and examine what his concerns are, and then publish the conclusions, and then see and take it forward from there in terms of what needs to be done. Even if the process yields no findings of material misconduct, a transparent summary of what has happened matters. Unfortunately, we are now living in a time when if the if the committee says there's nothing which we found, that will not again have credibility. But nonetheless, that effort needs to be made to understand what the concerns are, and that can only happen if Mr. Chakravarti and whether it's a committee of the board or independent agency, or even if it is some people who worked with the central bank and other senior bankers in the past, who kind of look into what was it that his concerns were, because they need to bubble up and we need to be clear in terms of what is happening. I think in parallel, what you need to do is, Reserve Bank of India wants an independent chairman. So Keki Mistry has a term of 3 months. So the bank in parallel must quickly move to identify a permanent chairman with strong governance credentials, who commands the confidence of both the regulators and the market. And maybe if you don't have a committee, this individual can have a conversation and decide what the next steps need to be. But like Abizar said, to just let it rest and say that, look, all this is over, it's a one-day affair, that will not be the most prudent thing to do.
Well, clearly the matter has been far from put to rest. But gentlemen, do stay on. We have to slip into a short break, but we're back in just a moment to continue this conversation. Okay, we still have Sriram Subramaniam, Amit Tandon, and Abizar Divanji with us on the show. Abizar, Kiki Misri stepping in just for actually, gentlemen, do hold on. We have Mr. Sashidhar Jagdishan, who is the MD and CEO of HDFC Bank, joining in on the phone line. Mr. Jagdishan, thank you very much, for your time here. Let me just get right to it. You called it an unfortunate event on the con call earlier, but, Atanu Chakravarti actually served alongside you since 2021. He sat in the same boardroom meetings, reviewed the same numbers, and he's left citing practices not in congruence with his values. As the person who was running this bank day to day, did you not have any indication that this was coming?
No, we had no such indication. My surprise is akin to what the other board members also experienced yesterday when this came as a huge surprise to all of us. So, and actually, most of all the board members did ask him to specify if at all there are any concerns. He did say that he has none to share with. So we did sort of persuade if he could sort of remove some of the contentious lines. But I guess he felt that was his calling and it's something that is innocuous. So he wanted to keep that as it is. I know that these lines did sort of cause a little bit of a stir amongst the minds of the directors. And you can see how the entire investor community has also reacted to this. But I guess the foundation of the company continues to be intact. You've heard the new chairman, interim part-time chairman, Kiki, sort of coming out with itself, accepting the position, which itself is a great testimony of the strength and the resilience of the conduct of the institution. Surely in any institution there will be errors and omissions and issues which need to be addressed with a defined timeline. That is not something, so no one can say that there is zero issues, especially when you're running a very extremely large bank. But the icing on the same was the testimony from the regulator this morning as we were going through these various calls, where I saw a statement from the regulator which sort of backed the franchise to the hilt, basis their observations and their inspections over a long period of time.
Mr. Jagdishan, since we understand there was friction between Mr. Chakravarti's style of working and perhaps what was expected out of that non-executive position, just for the benefit of our viewers, if you could elaborate on how your working relationship, how would you describe your working relationship with Mr. Atanu Chakravarti, given that he spent all this time since 2021 working with you?
No, there was no friction. See, in a very good governance model, people have to, and we are a democracy and we are a democratic institution, so people will have to have views. Some of the views we may agree, some of the views we may not agree. That is, so if that cannot be construed as friction. It is good governance. So that's part one. Part two is, I think I have a style of engaging with people. I have been engaging with the chairman and the board members very frequently and regularly. Yes, there are points that I may not agree with all the decisions or the views, and that is something that I'm not apologetic about. But having said that, this is normal in any organization, in any good governing organization. So I've had, I must say, and I must acknowledge that I have a lot of respect for some of the thought processes and ideas that he got into the governance and oversight function. It's a lot of takeaways, and something that I think happy to say that the organization has institutionalized the same. So it's been extremely cordial. It's not what one makes out to be as a very what is the word you used? Sorry?
Friction, you're between your two working styles.
No, I don't think that can be termed as friction. But yes, views where I have a different thought process, I will agree. I did agree to disagree. Yeah.
Mr. Jagdishan, if you could also address some of these concerns that have been voiced over social media regarding the sale of, HDB Financial, which eventually, of course, had to go IPO, that there were disagreements with Atanu Chakravarti, especially in relation with Mr. Kehzad Bharucha as well, that, that was one of the big reasons for his disagreements with the working of the management and some of these ideas. On the HDB issue specifically, was there a concern that was raised by Mr. Chakravarti? Did he differ with the view of the bank on how to proceed on that matter?
See, I think it's very unfair to say that is that the reason of disagreement. This is one of the reasons for disagreement. We had a board-appointed committee which looked into the disinvestment or the partial disinvestment of HDB and their IPO as well. I think it is a very well conducted and Keki was the chairman of the committee. And I think, as I had mentioned, I think the principles of the institution has been very free and fair expression of views. So the committee obviously, had a certain set of recommendations which were put up to the board. So now, if the board obviously, the larger board may have had views on some of the decisions of the committee, but that's all right. I mean, that is not something that one would term as the reasons for disagreement, etc. These are things, sometimes we agree, sometimes we don't agree. And sometimes the board, the management puts up something and they agree, they may not agree. That's all right. But the process that is followed was actually very professional and extremely tight, and it's not something that one should even comment on the credibility of the process in that committee.
Mr. Jagdishan, so you yourself are acknowledging there were differences when it came to the way the bank went ahead with the HDB financial issue. To your mind, while you're calling some of these a healthy working relationship, that disagreements do happen. To your mind, what may have then sparked this move? I mean, if disagreements were healthy and they had been continuing for all of these years, why resign today or why resign on the 17th of March suddenly?
Ritu, I would be extremely happy if someone can tell us, because all the other board members, the remaining board members, also have expressed very similar kind of surprise as to why this has happened all of a sudden. Probably I'm not privy to any of these the thought processes. We did try and extract that from Mr. Chakrabarti yesterday, but I guess he said that the time has come, or that's this calling at that point in time, which is the reason why he stepped up.
So you would not attribute it to any one particular tipping point, or which really pushed him over the edge to resign. You would not be able to attribute it to any particular reason.
I'm not aware of any reason or any specific instance or any specific matter that has triggered this.
Okay.
At least I'm not aware.
Mr. Jagdishan, what does the bank now need to do to assuage various stakeholders that everything is okay? We, of course, saw that rare statement coming in from RBI in support of the bank. You yourself have clarified this matter several times. But do you think, as a next step, an independent investigation is something that is required to look into some of the concerns that may or may not have been pointed out by Atanu Chakravarti? What is the next step you will take to assuage stakeholders?
No, surely proactively, of course, talking to investors, talking to media, which is what we're doing today, is a very important part of the process. The number two, I would guess proactively, I think we would undertake some amount of, because most of the issues are very transparent, and it's sort of any issue that is flagged off by the first line of defense, or the second line of defense, or the third line of defense will all, or to any of the committees, is something that is addressed periodically and in a defined time frame. So having said that, we would like to re-examine in our own way as to what are the decisions that have been taken, what are the decisions which have not been agreed upon, etc., to try and see whether there are any things that we need to tighten or enrich. These are things that I'm sure between the management and the board, we will be planning to do that at some point in time.
And Mr. Jagdishan, given that your current tenure is set to end in October, while the board, or at least Mr. K.K. Mistry on the con call said the NRC will recommend your name, have you yourself discussed the matter? Are you willing to stay on as CEO for another full term?
See, there is a process. I respect that process. The NRC will sort of, try and follow that process and recommend to the board, and who will then recommend to the regulator for approvals. If you're asking me whether I would like to be a part of that process as a participant, as one of the candidates, absolutely.
Has the matter already been discussed with the Reserve Bank of India as well, and with the board, the fact that you would wish to continue?
No, Ritu, it's still some time away. The term is getting over only in October, and I guess probably, as the chairman was mentioning this morning, the process will commence shortly. The members of the board must know that I'm happy to be a candidate for the same. And the rest, I'll leave it to the process.
Okay, Mr. Jagdishan, just very briefly, when you say you're going to, of course, review some of these issues, to assuage investors, any specific issues you'd like to flag, you think that still need some addressal, whether that is the Dubai branch issue, I don't know, anything else you'd like to point out? What are these issues you will look into?
No. As I said, as of now, whatever has been surfaced, we have a remediation plan. Okay, there's nothing that has not been left unattended to my belief and knowledge. So that's number one. Number two, some have been concluded and closed, both on a substantial basis. Some are work in progress to ensure that the substantive closure happens. So it's a process that is there. Obviously, are there any things that we would like to reopen and relook? maybe so. That's all I'm saying. It's not related to any specific. In a bank of this size, of a 47 lakh crore balance sheet or a $500 billion balance sheet, I think there are several which are there, which we would like to sort of constantly go and relook and retest, and because the test of design is something that is extremely important. It's an ongoing process that we have to continuously do it.
Mr. Jagdishan, just since you're talking about an organizational level restructuring, what would that entail?
No, it's a part. Periodically I do these restructuring. I've done it when I took over in May 20. I think. When did I take over? I think in October 2020, then May 21, and then sometime in October 23. May 21 and October 23. I think two restructurings I have done. I think it's time for another one. It ensures that the leadership team is always enriched and enhanced, and it sort of brings in a lot of energy at the management level. And this is something that obviously I shall be discussing with some of the key members of my leadership team and also the members of the board before I can announce it.
Mr. Jagdishan, since we have you, the handling of the Leelavati issue, did that come up in any of your discussions, either with Mr. Atanu Chakravarti or the board? Do you think that is something that may have been a cause of concern as well, perhaps one of the reasons for what we're seeing today?
Not at all. I mean, frankly, as I said, it's a very unfortunate matter. My conscience is clear, and the company, I think, took all the board. I think led the fight. They're continuing to do so in terms of against some of these malintended allegations. So I think it's the matter is in the court. I don't think there is, and the good part is I don't have to think or worry about it myself because the legal team is, along with the under the directions of the board, is doing a great job. So why would that be a bit of an issue?
Well, Mr. Jagdishan, we've seen a few exits from HDFC Bank recently. Mr. Bhavesh Daveri is set to retire in April. We had Parag Rao leave. I think your CFO is also due for retirement later this year. So, a whole lot of vacuum being created at the top level. How quickly, do you have a succession plan in place for all of these positions? What kind of, internal or external candidates are you considering, given the number of changes that are happening at the top level, and if that is a matter that is being deliberated on the board level?
No, this is very intensely discussed at the board level and at the executive management level as well. We are seized of the potential retirements that are going to come about. We have seen it in the past as well. And like in the past, we've been mentioned, the strength of the institution is in the depth of its management levels. We have enough 3-4 levels below me, which are very solid with lots of vintage and experience and bring a fair amount of energy as well. So I'm not concerned at all because wherever required, we have a very strong bench strength in terms of young talent that will take up future positions that come up for as and when it comes up. At some point in time and in some functions, we would contemplate some amount of bringing in some external flavors as well. So I think the clarity and the journey and the thought process is very clear, and we are in conjunction with the board executing that thought process.
Mr. Jagdishan, just finally, you said the best for the bank is yet to come. An important statement coming at a time when you're in the middle of this critical merger fruits still to play out. There's worries on the CD ratio, more recently even on the credit quality. What would you say to the shareholders, the stakeholders today, to restore their faith in the bank after the kind of reaction we've seen in the markets today? And why, in summary, do you say that the best is yet to come?
Because I think India's economy continues to be probably one of the best amidst the kind of uncertainties and turmoils that are happening. People will have multiple views on what's happening in the AI world outside of in the Silicon part of the valley. But frankly, I think India will be best in terms of using the AI and harnessing the AI to its advantage from an efficiency perspective, including in the tech space. That's number 2. Number 3, the bank is now just coming out of the merger. It has its glide path is as what we had committed in terms of growth, and we will sort of end financial year, and then there is a FY27 in line with the kind of commitments that we have seen. The asset quality continues to be reasonably pristine. We have a technology which is going to be which we have silently nurtured over the last 5 years. We will be unleashing its potential, which will be very visible over the next couple of years in terms of what it can do from an all-round efficiency perspective. That will be a great positive change. So all in all, I think well positioned to capture the growth and be a part of this wonderful medium to long-term growth expectation that I have for the country and the bank. So I'm very optimistic. All these noises of what's happening on a day-to-day basis, a quarterly basis, frankly, is of no meaning at all, because in the medium to long term, India is going to be a developed economy. We are on a roll to meet those kind of goals, and I think we shall be able to grow at a population scale. With that kind of growth is going to be something that we are looking forward to.
Mr. Jagdishan, you're calling what transpired noise. I'm quoting you from what you just said, and yet we saw the kind of reaction we saw in the stock market, spooking investors. These allegations of governance issues coming out of the bank. Would you perhaps look back on this day and say this was a big disappointment for you in your career at HDFC so far, or how would you reflect on this matter that has come to light in the day that has gone by?
Yeah, we have over so many years. This is not the first time that the organization has encountered challenges. We have seen some, about 13, 14 years ago, something called Cobra Pose. We've seen various such events that have happened in the last 30 years. And every time there is an adversity, we've actually bounced back with a lot of energy and with a lot more rigor and sharpness. So like what happened during the tech downtime, I think we have used that opportunity rather than sulking to be one of the leaders in technology in banking, which all of you will sort of soon see at the right and appropriate time. So like this is an event that we have to convert this into an opportunity, and we are. And we will be, and you will see that soon happening.
All right, Mr. Jagdishan, we'll leave it at that. We appreciate your time, and thank you so much for candidly taking and answering all of those questions. And we hope the investors also have some notes to take away from this. Thank you very much, Mr. Jagdishan, for your time.
Ritu, thank you very much. Bye. Bye.
All right, on that note, we'll slip into a short break. Don't go anywhere. We're back in just a moment with more news and updates.
Hello and welcome to News Center with me, Ashmit Kumar. There are no signs of de-escalation. Far from it. There are all the signs point towards an escalation in the West Asia crisis. We've seen Israel hit out at the South Pars gas fields in Iran. Iran has chosen to retaliate in the form of launching strikes on Ras Laffan in Qatar and even targeting UAE's Habshan gas facility. The strikes have triggered a series of reactions. First, from US President Donald Trump, who threatened to blow up Iran's South Pars gas field if the attacks on Qatar continue. Meanwhile, Trump also said that he was not aware of the attack that Israel had launched and assured that Israel would not target South Pars again. He warned Tehran to stop the attacks on Qatar. Qatar, meanwhile, has said that the strikes on Ras Laffan hit several liquefied natural gas facilities and caused extensive damage. Saudi Arabia has said that any remaining trust in Iran now stands shattered. The escalation did not stop there. Iran is also accused of striking Kuwait's 2 refineries and Saudi Arabia's Samref refinery. Oman, which has been mediating between Iran and the United States, has also condemned the attacks on Gulf energy assets. French President Emmanuel Macron warned of reckless escalation. The market reaction has been swift. Crude oil and LNG prices have surged. Gas prices in Europe are up more than 20%, while Brent crude has climbed above the $110 a barrel mark. Energy experts warn that attacks on such critical facilities could have long-term consequences, disrupting global oil and gas supplies, and the economic impact may be felt even in the United States. And well, joining us now to help us unpack some of these situations that we're looking at in West Asia is with us former Indian ambassador to the United States, Meera Shankar, as well as Ali Ariyami, energy consultant and former oil and energy official with the government of Oman. Ambassador Shankar, let me come to you first again. Donald Trump issuing a quick post on social media where he clarifies that as far as the Israeli attack on Iran is concerned, number one, he had no information about it, and number two, clarifying that Israel should not attack any of these oil and gas assets in the future. Again, number one, how credible is this statement by the US President Donald Trump? And irrespective of how credible it is, what is the likely reading of this statement? Are these first signs of a crack between the US-Israel alliance?
Well, I think President Trump had earlier also said that Israel should not attack energy infrastructure when it attacked some facilities outside Tehran, which had caused the acid rain in Tehran. So it's not the first time that he has talked about avoiding attacks on energy infrastructure. Whether he knew about the South Pars attack or not, I think that's not so important as the fact that he's saying specifically that Israel will not attack, energy infrastructure in future, and that if Iran continues to attack energy infrastructure in neighboring countries, then the US will blow up the South Pars gas field. So, on the one hand, some kind of statement that he's restraining Israel, and on the other hand, a threat that he could do worse. So that's a very typical Trump negotiating, or the very typical Trump way of dealing with such situations. It's important because it does also show that whereas Israel is quite happy to have the war go on and keep destroying, infrastructure, facilities, assassinating individual leaders in Iran. And we've heard the Israeli defense minister say that he and the prime minister have agreed that the Iranian forces could take out individual leaders or officials as an opportunity arises without the necessity of getting specific approval. So, whereas for the US, I think a prolonged war is not something that would sit comfortably with the US public. So right now, approval ratings for the war, there are different figures. Republicans claim 80% of Republicans support the war. Other public polls show 60 to 70% of people oppose the war. We really don't know where the final truth lies because, there's a great deal of partisanship on these issues in the US. But what we can see is that there has not been any significant Republican revolt. Yes, his US chief of counterterrorism has resigned, basically saying that there was no imminent threat from Iran and the war was unnecessary, didn't suit any interest of the United States, and the US was led into it by Israel. Now, Tulsi Gabbard has also given her assessment that while Iranian capabilities have been considerably degraded, the regime remains intact. It's much weaker, but it remains intact. So right now, we really don't know where this is headed because Iran continues to block the Straits of Hormuz. The US has sent an expeditionary force of 2,000 Marines to the region. What their mission is going to be, we don't know. Some speculation that they may try to seize two islands at the mouth of the Strait of Hormuz, Abu Musa and the two tombs, or try to take Kharg Island. We really don't know what they are going to do. But it's a much more difficult situation. And the more it continues, the greater the danger of countries being sucked into an escalatory ladder, even if they wanted a contained conflict.
Right, Ambassador Shankar. Let me also get Ali Al-Riyami on this conversation. We're seeing in the last 24 hours, we've seen the world's largest gas field and the world's largest LNG export hub being hit in a matter of just a few hours from each other. Is it now open season in the Gulf when it comes to oil assets, which so far hadn't seen a brutal assault like we have seen over the last 24 hours? Is it now open season, and does that cause reason for panic in the markets? We've already seen Brent shoot all the way up to $114 a barrel.
Well, Brent went up to $118 today. So the escalation and also the retaliation from Iran, it's a big thing. And we were, during even the beginning of this war, we were really trying to explain to the market and also to the media that this is not going to be an easy war. There is no winning side over here, so everybody is losing. And in fact, that the Asian market and Asian countries, including India, they are now facing the consequences of this war, being in the oil or crude oil or in the petrochemicals and even in the LPG, the one that you use to cook your own food in India. So I think the escalation and retaliation from Iran is going just to be more and more. And the targeting of the GCC countries, including Qatar, it is something that against any international law. But I think that the threat from Iran was there even before the war. So they have already shown some indication that if we are going to be targeted by our oil infrastructure in Iran, then we will retaliate and also we will revenge. And the revenge, it is well seen now. And what can Iran do, let alone the problem that we have in the Straits of Hormuz, which is 20% of crude and also 25% of LNG passing through this path here in Strait of Hormuz. So any a continuation of this war, more than what we have already seen at the moment, this could be, reflection. It will reflect directly to the inflation and also to more financial and economical crisis, not only in the region and also in Asia, and maybe could go all the way to the world economy. So we hope we hope that, this war will come to the end as soon as possible.
Indeed. Ms. Al-Riyami, that is the hope. That is the hope that there is a swift end to this conflict. But again, not many are able to spot an off-ramp for either of the parties concerned. But speaking of these attacks on oil assets, I want to ask you another question. Has there a red line been in issuing responses, in formulating any form of military strategies and attacks on Tehran? Today, for the very first time, we hear Saudi say it in as many words that they reserve the right to take military action against Tehran. Again, inviting kinetic action from the Gulf states. Has there a red line been crossed by attacking of these oil assets?
I think if I can answer you, I think this was never our war. It has been imposed on us by the Israelis and Americans. It is now we are paying the huge consequences of this war, although that it was never been our war. But every country has the right to do something if they are being attacked. And what we don't say that Iran, they have the right to attack us, including Oman and other GCC countries. But well, we so far we have shown that we have managed to absorb these attacks, and we managed to have a clear vision of what is.
Mr. Al-Riyami, I just have to interject there. We have a moment of breaking news. We're going across to Pete Hegseth, who's issuing a public statement. Let's go across to Pete Hegseth.
From family after family, they said, finish this. Honor their sacrifice. Do not waver. Do not stop until the job is done. My response, along with that of the president, was simple. Of course, we will finish this. We will honor their sacrifice. Their sacrifice only steals our commitment. I wear this bracelet. Staff Sergeant Jorge Oliveira, he was one of my sergeants, or one of my specialists in Guantanamo Bay. He deployed later to Afghanistan, where he was killed on 19 October 2011. Killed 10 years after 9/11, 15 years ago. He was one of the 1%, the best of America. Not just a guardsman, but a law enforcement officer back home and a family man. I remember him every day, just like so many other men and women of our generation and previous generations who wear bracelets like this. Just as we will always remember those lost in this conflict. Their names are now etched into our mission and into the soul of a grateful nation. I stand here today speaking to you, the American people, not through filters, not through reporters, not through cable news spin. A dishonest and anti-Trump press will stop at nothing. We know this at this point. To downplay progress, amplify every cost, and call into question every step. Sadly, TDS is in their DNA. They want President Trump to fail. But you, the American people, know better. Yes, there are reporters in front of me, but they are not our audience today. It's you, the good, decent, patriotic American people. You, the hardworking, tax-paying, God-fearing American patriots. The media here, not all of it, but much of it, wants you to think, just 19 days into this conflict, that we're somehow spinning toward an endless abyss or a forever war or a quagmire. Nothing could be further from the truth. Hear it from me, one of hundreds of thousands who fought in Iraq and Afghanistan, who watched previous foolish politicians like Bush, Obama, and Biden squander American credibility. This is not those wars. President Trump knows better. Epic fury is different. It's laser focused. It's decisive. Our objectives, given directly from our America First president, remain exactly what they were on day one. These are not the media's objectives, not Iran's objectives, not new objectives. Our objectives, unchanged, on target, and on plan. Destroy missiles, launchers, and Iran's defense industrial base so they cannot rebuild. Destroy their navy, and Iran never gets a nuclear weapon. Our objectives from day one. To the patriotic members of the press, nobody can deliver perfection in wartime. This building knows that more than anyone. But report the reality. We're winning decisively and on our terms. Iran is a vast country, and just like Hamas and their tunnels, they've poured any aid, any economic development, humanitarian aid into tunnels and rockets. That's what they did with Hamas. Iran has funneled decades of state resources, not to their people, but into missiles and drones and proxies and buried facilities. But we are hunting them down methodically, ruthlessly, and overwhelmingly, like no other military in the world can do. And the results speak for themselves. To date, we've struck over 7,000 targets across Iran and its military infrastructure. That is not incremental. That is overwhelming force applied with precision. And again, today will be the largest strike package yet, just like yesterday was. As I've said from day one, our capabilities continue to build. Iran's continue to degrade. We're hunting and striking death and destruction from above. Iran's air defenses flattened. Iran's defense industrial base, the factories, the production lines that feed their missile and drone programs, being overwhelmingly destroyed. We've hit hundreds of their defense industrial bases directly. Their ability to manufacture new ballistic missiles has probably taken the hardest hit of all. Ballistic missile attacks against our forces, down 90% since the start of the conflict. Same with one-way attack UAVs. Think kamikaze drones, down 90%. Now, the Iranians will still shoot, we know that, but they would shoot a lot more if they could, but they can't. The last job anyone in the world wants right now? Senior leader for the IRGC or Besiege. Temp jobs, all of them. And to borrow a page from Admiral Ernest King in World War II, we've decided to share the ocean with Iran. We've given them the bottom half. We've damaged or sunk over 120 of their Navy ships, with battle damage assessments pending for many more. You see, oftentimes we have to wait a few days on battle damage assessment to get the real number. Their surface fleet is no longer a factor. Their submarines, they once had 11, are gone. Their military ports are crippled. Iran has terrorized the United States and our interests for 47 years. Their core industries, not steel or agriculture or tourism, their core industries are state-sponsored terrorism, proxy militias, underground networks, ballistic missiles, and a violent, messianic, Islamist ideology chasing some sort of apocalyptic endgame. A regime like that, refusing to abandon its nuclear ambitions, is not just a regional problem. It's a direct threat to America, to freedom, and to civilization. The world, the Middle East, our ungrateful allies in Europe, even segments of our own press should be saying one thing to President Trump. Thank you. Thank you for the courage to stop this terror state from holding the world hostage with missiles while building or attempting to build a nuclear bomb. Thank you for doing the work of the free world. Yesterday's ceremony reminded us why we fight. Not for nation building or democracy promotion, but to crush direct threats to America, Americans, and our interests. We fight to win, and we are winning on our terms, following our objectives. My 13-year-old son popped into my office last night while I was editing these remarks. He asked about the war and the families I met at Dover. And I looked at him and I said, they died for you, son, so that your generation doesn't have to deal with a nuclear Iran. It's the truth, and they did. So to the families who said, finish this, we will. And I say the same to every American who wants peace through strength. May Almighty God continue to bless our troops in this fight. And again, to the American people, please pray for them every day, on bended knee, with your family, in your schools, in your churches, in the name of Jesus Christ. To the troops, keep going, and Godspeed. Over to you, Mr. Chairman.
Thank you, Mr. Secretary. Ladies and gentlemen, good morning, and thank you all for being here. I also had the honor yesterday, as the Secretary said, of traveling up to Dover with the President to welcome home our 6 fallen. It was an honor and a privilege for me to be there and to say thank you to their families. And I want to mention their names.
Well, that was Pete Hegseth giving us a status check of where things stand. Importantly, he began his statement by saying that to feel that the U.S. is spinning towards an endless abyss is nothing further from the truth, that Donald Trump is laser focused and that they are on target. That's what Pete Hegseth is saying. Let's take that across to our panelists. Ambassador Shankar, let me come to you. Pete Hegseth believes that they are on target, that they are continuing, that this is not an endless war like was seen in the under the previous presidents. However, I can't help but ask that if Trump's comments are to be taken on face value, that Israel, that Netanyahu acted in attacking the South Pars oil fields in Iran, acted without his consent, acted without his information, does that put the options before Donald Trump? Does that compress them even further? The limited options that he had are now even gone with Israel undertaking these attacks?
Well, I think the US would be able to restrain Israel on attacking energy infrastructure if it wants, because it actually provides Israel with financial aid and with defense assistance and defense components and so on. So if the US puts its mind to it, they could put a halt to Israeli attacks on Iranian energy infrastructure, and hopefully in return, the Iranians will halt their attacks on energy infrastructure in the neighboring countries. Because earlier they said they were attacking US bases and facilities in neighboring countries. But now this is going on to extend to attacks which will cause grave economic damage to these countries if they continue, and also to the wider world, including India. Because if production gets impacted, not only will there be the logistic challenges which countries are facing because of the blockage of the Strait of Hormuz, but prices are going to climb even further if the quantity of oil gets further reduced, or gas for that matter. So I do hope that this will allow both sides to at least say that we will restrain attacks on energy infrastructure. Now, Pete Hegseth's speech, which says that they are on target, that they have destroyed, Iran's ballistic missiles, launch capabilities, and facilities which were producing ballistic missiles, that they have destroyed their defense industrial base to a considerable extent, sunk much of their navy, and so on. This should actually create the conditions for the US to say, we have achieved our objectives, and so we pull out. And that, I think, would be the best. But obviously, they would need to have the Straits of Hormuz open. And there, I think a country like Oman can play an important role in trying to be, the kind of mediator on this issue. Even if it goes nowhere, it's still worth making an effort. And Oman had done a commendable job in the nuclear discussions. It's just tragic that the attacks took place even as progress was being made there. So let's see, because, if you're saying you're well on target to achieving all the objectives that you set out. And then, you could at some stage declare that you have met them and pull out without going all the way. Because the more you get sucked in, the greater the possibility of an ladder you can't get off.
Right, so that's in fact the very same assessment that many diplomatic experts also give us, that while this may be a tactical victory, what Pete Hegseth says, which is that Air Force, their Navy is destroyed, but strategically, given that the Strait of Hormuz is still controlled by Iran, again, makes it look like an incomplete victory, if it can be called that at all. We're running out of time. Mr. Al-Riyami, let me come to you in terms of the impact that we're experiencing. You mentioned that Brent went all the way up to 118. What I want to ask is that the Qatar's Ras Laffan facility, that is central to LNG supply across Europe as well as Asia. What impact do you see in the days to come? We're already experiencing shortages in countries like India. Will it likely worsen over the next few days? Will the prices shoot even higher?
I think the prices they are already shooting very high in LNG market. But we have to remember that there is no LNG tanks moving out of Hormuz at the moment. So and also Qatar, they have already since second day of this war that they have declared force majeure. So everything is almost no production from Qatar. So this is just another attack or another reason to delay coming back the facilities and also starting producing and also exporting LNG again. But there is no LNG passing through the Strait of Hormuz either from Qatar or from any other countries. So the crisis is already there, and the shortage of LNG in the world is already there. And we have seen the impact of that in the prices, and the prices in Europe and Asia, they are up to the roof. And now what this attack will do is just delaying further. If the war gets over tomorrow, then the LNG's export from Qatar, it will be more longer. It will take more longer than anticipated because of this attack. And just remember that this attack, it didn't really impact the whole infrastructure in Ras Laffan. It is just a portion of that infrastructure is being heated, and then you can easily isolate that portion, and you can continue the operation on the other side that was not intact.
Right, Mr. Al-Riyami. Right, so no easy answers there as far as the situation we find ourselves in. I'd like to thank both of our panelists, Ambassador Shankar, Mr. Al-Riyami, for joining us with your insights. But don't go anywhere. We're slipping into a very short break. More news and updates will continue on the other side. and welcome to this very special conversation right here on CNBC TV 18. Now, we're here with Ms. Pooja Gupta. We're here to witness a stellar announcement that she's making in the journey of Luxor writing instruments. They're going beyond pens. They're looking at the creative abilities, at targeting a much larger market, at looking at manufacturing and then exporting as well. So to give us a sense and helping us unpack what this new journey, this new chapter looks like for Luxor is with us, Ms. Gupta once again. Ms. Gupta, thank you so much for joining us. It's a pleasure for you to take our time to speak to us. We were talking to you about this stellar announcement. This is a new chapter that you're opening. This is a new journey that you're looking to mount on. Tell us more about it as to what invited this partnership, what it entails, and where does it go from here?
So, Luxor, as you know, has been in the country as a pioneer of writing and stationery in India, completely focusing and with a mission to give self-expression to Indian consumers. We are the only company in India who's always had the firsts on our side. We started with bringing in coloring products to markers to needlepoint pens when Pilot came in, and then Parker, and then Waterman, and then Schneider, and now the big change for us is getting into the creative segment, the coloring segment, the world of imagination, Crayola. And Crayola is a 120-year-old legacy brand, iconic, one of the most respected brands from the US. And as cultural resonance tells us, in the US, it actually ranks number 3 after Amazon and Google in the US. So the power of this brand and the idea to bring this brand to India is the young population of India. So our population is the youngest in the world, which is probably the biggest reason for a brand to even look at coming into India at this point. The growth of the GDP, the ability of the consumer to spend on a premium brand, but it's also an accessible price point. So it is the way Luxor rewrote history of writing with Parker 30 years ago, we are now set to rewrite this stage with colors and with imagination of Crayola.
You've given us so many interesting things to unpack. We'll do that one by one. You referred to premiumization. You referred to the size of the market as well. We'll try to address those aspects. First, beginning with the size of the pie. How big is the pie that you're trying to cater to? Give us a few numbers in terms of the number of the population that you're looking to target, what that represents in terms of size.
So India has a population of 550 million people in the urban part. If you look at the growing part of the creativity segment and the art and coloring segment in this country, it's growing at about 15 to 20%. And by 2030, this is slated to be around $300 million, which is about 2,700 crores. Currently, it's at 1,200 crores. So the urban population of kids in India is about 8 million in affluent households. Okay, in the tier 1 cities. If you go to the tier 1, tier 2, and tier 3, it's even bigger. So if an average parent today in a tier 1 city is spending 55,000 annually, roughly, just on their child's development. What is that development? It is the creative side, because of the fact that there is so much screen focus. And this brand is not just a utility product. It is selling imagination as a product. So the excitement of bringing out the best creative juice in your brains, in the parents' mind, the educators, the kids, is Crayola for us. And Luxor, because of its distribution, its strength of access between Kashmir to Kanyakumari, from Jamnagar to Calcutta to East, we have done it all now. There had to be some excitement to bring into the new generation, and Crayola is the answer for us. We are excited about it because it was also something which was missing in our portfolio. To bring in a new side and a dimension to parents to build that bond with the kids, create that emotional stability, make them think differently, and drive critical thinkers for the future of this country.
The conflict that we're seeing in West Asia, is that coming in the way of shipments going out in terms of costing, in terms of logistics cost?
Temporarily, yes.
Okay.
Definitely, the shipments are delayed, and it's inordinary delays.
Okay.
But I hope that this war is not permanent, and it gets over sooner than later, and things will come back and roll back to normal. But yes, our customers are seeing that push, and we have a lot of pressure of ensuring the shipments go on the vessels soon.
Okay.
But then vessels going out, that's the challenge right now in terms of time lag.
But no increases in terms of cost of shipping, at least as of right now.
No, there are cost of freight which is going up, but I think the customers also understand because they see that gap in the margin between India and otherwise.
Well, this is an auspicious day as well. We'd like to again thank you for taking our time. We wish you, as well as Crayola, the very best on this new journey, new chapter of this growth. And we hope to connect again, say a few months from now, to see how this journey is panning out and to see what's next on the cards for you as well as for Laksa. Thank you once again. It's been a pleasure speaking to you once again.
Thank you. Thank you, Ashmit.
Hello and welcome to Newsmaker. I'm Ritu Singh. Rapid developments at India's largest private bank is our focus this evening. In a surprising turn of events, HDFC Bank's part-time chairman Atanu Chakravarti resigned from his role, citing ethical concerns. He had been serving as the bank's part-time chairman since May 2021, and his current term was set to end in May of 2027. Now, former HDFC CEO Kiki Misri stepped in as the bank's interim chairman for 3 months with RBI's consent. Now, in his resignation letter, Atanu Chakravarti said, and I quote, "Certain happenings and practices within the bank that I have observed over the last 2 years are not in congruence with my personal values and ethics," end of quote. However, in his first response to ANI, Chakravarti described his resignation as a routine matter. Now, shares of HDFC Bank fell in trade on the back of this development, even as the RBI said there are no material concerns on conduct or governance at the bank's end. So what sparked this sudden resignation? Top sources tell us that Chakravarti's exit was not linked to the bank's conduct or regulatory concerns. Neither the RBI nor the bank initiated or directed the exit, and it was very much an individual decision. In fact, we understand that the friction stemmed from Chakravarti functioning in an executive style in his non-executive role, and the sudden resignation also took the board by surprise. Mr. Sashidhar Jagdishan, who is the MD and CEO of HDFC Bank, joining in on the phone line. Mr. Jagdishan, thank you very much for your time here. Let me just get right to it. You called it an unfortunate event on the con call earlier, but Atanu Chakravarti actually served alongside you since 2021. He sat in the same boardroom meetings, reviewed the same numbers, and he's left citing practices not in congruence with his values. As the person who was running this bank day to day, did you not have any indication that this was coming?
No, we had no such indication. My surprise is akin to what the other board members also experienced yesterday when this came as a huge surprise to all of us. So, and actually, most of the board, all the board members, did ask him to specify if at all there are any concerns. He did say that he has none to share with. So we did sort of persuade if he could sort of remove some of the contentious lines. But I guess he felt that was his calling and it's something that is innocuous, so he wanted to keep that as it is. I know that these lines did sort of cause a little bit of a stir amongst the minds of the directors, and you can see how the entire investor community has also reacted to this. But I guess the foundation of the company continues to be intact. You've heard the new chairman, interim part-time chairman, Kiki, sort of coming out with itself, accepting the position, which itself is a great testimony of the strength and the resilience of the conduct of the institution. Surely in any institution there will be errors and omissions and issues which need to be addressed with a defined timeline. That is not something, so no one can say that there is zero issues, especially when you're running a very extremely large bank. But the icing on the same was the testimony from the regulator this morning as we were going through these various calls, where I saw a statement from the regulator which sort of backed the franchise to the hilt, basis their observations and their inspections over a long period of time.
Mr. Jagdishan, since we understand there was friction between Mr. Chakravarti's style of working and perhaps what was expected out of that non-executive position, just for the benefit of our viewers, if you could elaborate on how your working relationship, how would you describe your working relationship with Mr. Atanu Chakravarti, given that he spent all this time since 2021 working with you?
No, there was no friction. See, in a very good governance model, people have to, and we are a democracy and we are a democratic institution, so people will have to have views. Some of the views we may agree, some of the views we may not agree. That is, so if that cannot be construed as friction. It is good governance. So that's part one. Part two is, I think I have a style of engaging with people. I have been engaging with the chairman and the board members very frequently and regularly. Yes, there are points that I may not agree with all the decisions or the views, and that is something that I'm not apologetic about. But having said that, this is normal in any organization, in any good governing organization. So I've had, I must say, and I must acknowledge that I have a lot of respect for some of the thought processes and ideas that he got into the governance and oversight function. It's a lot of takeaways. and something that I think happy to say that the organization has institutionalized the same. So it's been extremely cordial. It's not what one makes out to be as a very what is the word you use? Sorry.
Friction, between your two working styles.
No, I don't think that can be termed as friction. But yes, views where I have a different thought process, I will agree. I did agree to disagree. Yeah.
Mr. Jagdishan, if you could also address some of these concerns that have been voiced over social media regarding the sale of, HDB Financial, which eventually, of course, had to go IPO, that there were disagreements with Atanu Chakravarti, especially in relation with Mr. Kehzad Bharucha as well, that, that was one of the big reasons for his disagreements with the working of the management and some of these ideas. On the HDB issue specifically, was there a concern that was raised by Mr. Chakravarti? Did he differ with the view of the bank on how to proceed on that matter?
See, I think it's very unfair to say that is that the reason of disagreement. This is one of the reasons for disagreement. We had a board-appointed committee which looked into the disinvestment or the partial disinvestment of HDB and their IPO as well. I think it was a very well conducted and Keki was the chairman of the committee. And I think, as I had mentioned, I think the principles of the institution has been very free and fair expression of views. So the committee obviously, had a certain set of recommendations which were put up to the board. So now, if the board obviously, the larger board may have had views on some of the decisions of the committee, but that's all right. I mean, that is not something that one would term as the reasons for disagreement, etc. These are things. Sometimes we agree, sometimes we don't agree. And sometimes the board, the management puts up something and they agree, they may not agree. That's all right. But the process that is followed was actually very professional and extremely tight, and it's not something that one should even comment on the credibility of the process in that committee.
Mr. Jagdishan, so you yourself are acknowledging there were differences when it came to the way the bank went ahead with the HDB financial issue. To your mind, while you're calling some of these a healthy working relationship, that disagreements do happen. To your mind, what may have then sparked this move? I mean, if disagreements were healthy and they had been continuing for all of these years, why resign today or why resign on the 17th of March suddenly?
Ritu, I would be extremely happy if someone can tell us, because all the other board members, the remaining board members, also have expressed very similar kind of surprise as to why this has happened all of a sudden. Probably I'm not privy to any of these the thought processes. We did try and extract that from Mr. Chakrabarti yesterday, but I guess he said that the time has come, or that's this calling at that point in time, which is the reason why he stepped up.
So you would not attribute it to any one particular tipping point, or which really pushed him over the edge to resign. You would not be able to attribute it to any particular reason.
I'm not aware of any reason or any specific instance or any specific matter that has triggered this.
Okay.
At least I'm not aware.
Mr. Jagdishan, what does the bank now need to do to assuage various stakeholders that everything is okay? We, of course, saw that rare statement coming in from RBI in support of the bank. You yourself have clarified this matter several times. But do you think as a next step, an independent investigation is something that is required to look into some of the concerns that may or may not have been pointed out by Atanu Chakravarti? What is the next step you will take to assuage stakeholders?
No, surely proactively, of course, talking to investors, talking to media, which is what we're doing today, is a very important part of the process. The number two, I would guess proactively, I think we would undertake some amount of, because most of the issues are very transparent, and it's sort of any issue that is flagged off by the first line of defense, or the second line of defense, or the third line of defense will all or to any of the committees is something that is addressed periodically and in a defined time frame. So having said that, we would like to re-examine in our own way as to what are the decisions that have been taken, what are the decisions which have not been agreed upon, etc., to try and see whether there are any things that we need to tighten or enrich. These are things that I'm sure between the management and the board, we will be planning to do that at some point in time.
Mr. Jagdishan, given that your current tenure is set to end in October, while the board, or at least Mr. K.K. Mistry on the con call said the NRC will recommend your name, have you yourself discussed the matter? Are you willing to stay on as CEO for another full term?
See, there is a process. I respect that process. The NRC will sort of, try and follow that process and recommend to the board, and who will then recommend to the regulator for approvals. If you're asking me whether I would like to be a part of that process as a participant, as one of the candidates, absolutely.
Has the matter already been discussed with the Reserve Bank of India as well, and with the board, the fact that you would wish to continue?
No, Ritu, it's still some time away. The term is getting over only in October, and I guess probably, as the chairman was mentioning this morning, the process will commence shortly. The members of the board must know that I'm happy to be a candidate for the same. And the rest, I'll leave it to the process.
Okay, Mr. Jagdishan, just very briefly, when you say you're going to, of course, review some of these issues, to assuage investors, any specific issues you'd like to flag, you think that still need some addressal, whether that is the Dubai branch issue, I don't know, anything else you'd like to point out? What are these issues you will look into?
No. As I said, as of now, whatever has been surfaced, we have a remediation plan. Okay, there's nothing that has not been left unattended to my belief and knowledge. So that's number one. Number two, some have been concluded and closed, both on a substantial basis. Some are work in progress to ensure that the substantive closure happens. So it's a process that is there. Obviously, are there any things that we would like to reopen and relook? maybe so. That's all I'm saying. It's not related to any specific. In a bank of this size of a 47 lakh crore balance sheet or $500 billion balance sheet, I think there are several which are there, which we would like to sort of constantly go and relook and retest. And because see, the test of design is something that is extremely important. It's an ongoing process that we have to continuously do it.
Mr. Jagdishan, just since you're talking about an organizational level restructuring, what would that entail?
No, it's a part. Periodically I do these restructuring. I've done it when I took over in May 20. I think. When did I take over? I think in October 2020, then May 21, and then sometime in October 23. Sorry, May 21 and October 23. I think 2 restructurings I have done. I think it's time for another one. It ensures that the leadership team is always enriched and enhanced, and it sort of brings in a lot of energy at the management level. And this is something that obviously I shall be discussing with some of the key members of my leadership team and also the members of the board before I can announce it.
Mr. Jagdishan, since we have you, the handling of the Leelavati issue, did that come up in any of your discussions either with Mr. Atanu Chakravarti or the board? Do you think that is something that may have been a cause of concern as well, perhaps one of the reasons for what we're seeing today?
Not at all. I mean, frankly, as I said, it's a very unfortunate matter. My conscience is clear, and the company, I think, took all the board. I think led the fight. They're continuing to do so in terms of against some of these malintended allegations. So I think it's the matter is in the court. I don't think there is, and the good part is I don't have to think or worry about it myself because the legal team is, along with the under the directions of the board, is doing a great job. So why would that be a bit of an issue?
Well, Mr. Jagdishan, we've seen a few exits from HDFC Bank recently. Mr. Bhavesh Daveri set to retire in April. We had Parag Rao leave. I think your CFO is also due for retirement later this year. So, a whole lot of vacuum being created at the top level. How quickly, do you have a succession plan in place for all of these positions? What kind of, internal or external candidates are you considering, given the number of changes that are happening at the top level? And if that is a matter that has been deliberated on the board level?
No, this is very intensely discussed at the board level and at the executive management level as well. We are seized of the potential retirements that are going to come about. We have seen it in the past as well. And like in the past, we've been mentioned, the strength of the institution is in the depth of its management levels. We have enough 3-4 levels below me, which are very solid with lots of vintage and experience and bring a fair amount of energy as well. So I'm not concerned at all because wherever required, we have a very strong bench strength in terms of young talent that will take up future positions that come up for as and when it comes up. At some point in time and in some functions, we would contemplate some amount of bringing in some external flavors as well. So I think the clarity and the journey and the thought process is very clear, and we are in conjunction with the board executing that thought process.
Mr. Jagdishan, just finally, you said the best for the bank is yet to come. An important statement coming at a time when you're in the middle of this critical, merger fruits still to play out. There's worries on the CD ratio, more recently even on the credit quality. What would you say to the shareholders, the stakeholders today, to restore their faith in the bank after the kind of reaction we've seen in the markets today? And why, in summary, do you say that the best is yet to come?
Because I think India's economy continues to be probably one of the best amidst the kind of uncertainties and turmoils that are happening. People will have multiple views on what's happening in the AI world outside of in the Silicon part of the valley. But frankly, I think India will be best in terms of using the AI and harnessing the AI to its advantage from an efficiency perspective, including in the tech space. That's number two. Number three, the bank is now just coming out of the merger. It has its glide path is as what we had committed in terms of growth, and we will sort of end financial year, and then there is a FY27 in line with the kind of commitments that we have seen. The asset quality continues to be reasonably pristine. We have a technology which we have silently nurtured over the last 5 years. We will be unleashing its potential, which will be very visible over the next couple of years in terms of what it can do from an all-round efficiency perspective. That will be a great positive change. So all in all, I think well-positioned to capture the growth and be a part of this wonderful medium to long-term growth expectation that I have for the country and the bank. So I'm very optimistic. All these noises of what's happening on a day-to-day basis or quarterly basis, frankly, is of no meaning at all, because in the medium to long term, India is going to be a developed economy. We are on a roll to meet those kind of goals, and I think we shall be able to grow at a population scale. With that kind of growth is going to be something that we are looking forward to.
Mr. Jagdishan, you're calling what transpired noise. I'm quoting you from what you just said, and yet we saw the kind of reaction we saw in the stock market, spooking investors. These allegations of governance issues coming out of the bank. Would you perhaps look back on this day and say this was a big disappointment for you in your career at HDFC so far, or how would you reflect on this matter that has come to light in the day that has gone by?
Yeah, we have over so many years. This is not the first time that the organization has encountered challenges. We have seen some, about 13, 14 years ago, something called Cobra Pose. We've seen various such events that have happened in the last 30 years. And every time there is an adversity, we've actually bounced back with a lot of energy and with a lot more rigor and sharpness. So like what happened during the tech downtime, I think we have used that opportunity rather than sulking to be one of the leaders in technology in banking, which all of you will sort of soon see at the right and appropriate time. So like this is an event that we have to convert this into an opportunity, and we are. And we will be, and you will see that soon happening.
All right, Mr. Jagdishan, we'll leave it at that. We appreciate your time, and thank you so much for candidly taking and answering all of those questions. And we hope the investors also have some notes to take away from this. Thank you very much, Mr. Jagdishan, for your time.
Ritu, thank you very much. Bye. Bye.
All right, on that note, we'll slip into a short break. Don't go anywhere. We're back in just a moment with more news and updates.
Taken for you to be able to marry distribution and manufacturing from a product point of view that works for the Indian customer?
Berkshire Hathaway was built like that, so I was like, fanboy, let me follow. And we were sort of this challenger to Policy Bazaar, probably the first challenger that came up. I still live in Bangalore, that I was a Swiggy loyalist.
Yeah.
And most people in Bangalore were, but most people in Gurgaon or Delhi were Zomato loyalists.
Yeah.
Like you build a habit.
Yeah.
We sell a PDF at the end of the day. We sell a document, a contract. There are only 8-10 suppliers. Some of the suppliers are bullies because they're all large companies, right? Getting the license was such a big deal that, it just became the goal. And we were probably not thinking how hard it's going to be to get customers aligned. It had been like 2-3 weeks and nobody had bought. I had started calling up my friends, tum to le lo yaar.
People still think of you as a digital marketplace, essentially. People don't recognize the fact that you are truly yourself an insurance company. When do you believe that shifted, that change happened?
Deep sort of philosophy with which we went with was that, hey, we want to own the customer. We don't want the agent or the bank to own the customer. I think for the first year, we didn't sell in Delhi. It's like, I think, it's too notorious a market. Our data is not working. It's too large.
Does it hamper your growth prospects?
Agent or whoever is talking to the customer is constantly deselling ACO. So not only the customer has to select me, he has to select me over a voice that's constantly telling him it's shit. Don't go there. Nobody will help you if there's a claim.
India's general insurance industry is estimated at over 2.5 lakh crore rupees in annual premiums, dominated for decades by agents, intermediaries, and commission-led distribution. But as digital penetration deepens, the battle is shifting from access to experience. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. Founded in 2016, ACO set to build out India's first direct-to-customer digital insurance company operating with zero commissions and no offline sales force. Almost a decade later, ACO today is a leader in this space and is hoping to build on the over 1 billion policies that it's already served across more than 78 million unique customers and built a claims ratio of 98% with a net promoter score of 70. In FY25, ACCO posted revenues of 2,837 crores, up 34% year-on-year, while narrowing its losses by 37%. From motor insurance, its flagship, to health-embedded protection and pure-term life insurance, the company has steadily expanded its portfolio while betting on technology-led underwriting, issuance and claims. In a tightly regulated, capital-intensive business built on trust and long-term discipline, can a digital native insurer reshape the industry's economics, and what does sustainable scale look like in insurance? Joining me now is Varun Dua, the founder of ACCO. Varun, great to have you join us on Young Turks Reloaded. I want to go back to 2016 when you had the thought of being able to do this and disrupt this space in the manner in which you attempted to do. This is a highly regulated business. It's a capital-intensive business. It's a business that has seen the incumbents, some very large incumbents, spend a significant amount of their money and bandwidth on building it out over the last 2 decades. It's also a low-penetration business. It's also not an easy business to make money. What gave you the audacity to think that this was a business you may want to take a shot at?
I think partly naivete. I think I would say that, I always say that it chose me rather than me choosing it. It's an interesting story. When I was graduating from college and you're supposed to do like final year thesis or some report.
Yeah.
That's your final score. This was back in 2003-04. And I was, like, for the lack of not being able to find a topic, it was all in the news that time, insurance, because the industry had just got privatized.
Yes.
I interacted with a bunch of industry experts at that point to try and build my report. And one of my industry guides who was helping me sort of build that report, because I was trying to do interviews of CXOs in insurance companies to find out how they're going to do it, ended up offering me a job. And that's how I got involved. I worked with the Tata Group, the Tata AIG, for the first 5-6 years of my business, and I was fascinated by the business. I said, this is crazy. You sell probability, you sell math. So the ambition sort of came from the fact that, there were models of, in the Western world, primarily, and no bigger, better than Berkshire Hathaway. It's an inspiration. I've grown up sort of watching the shareholder shareholder meeting. I used to love, have Warren Buffett and Charlie Munger speak. The simplicity, the clarity, and the entire fortune of Berkshire Hathaway was built on insurance, right? The concept of free float, like it was alien to me what free float is, and I think I just got fascinated with that thing, and given my journey, and then starting to see what Munger and all these guys speak about, and how beautifully they had built a resilient business over decades, and it had also, apart from insurance, become this huge investment entity because of the treasury that they had created. I was like, and it was customer friendly. It wasn't trying to sort of placate intermediaries all the time. So it just went like, I have to do this, right?
From 2016 to 2017, when you got the license, to 2018, when you were waiting for your first customers to come on board, what was that like? And was there a moment where, while you were waiting for the customers to sign up, that you thought, did I make the biggest mistake of my life?
Getting the license was such a big deal that, it just became the goal. And we were probably not thinking how hard it's going to be to get customers aligned. We knew it would be hard, but, our focus was just so much on, hey, we've got the license now, at least the journey can start. I think when we set it up and we got the website, app sort of rolling, and, it was like 2-3 weeks. People would come, we would do some content, some, Google, some marketing, some people would, just browse the website and drop off, and it had been like 2-3 weeks and nobody had bought. I had started calling up my friends, "Tum to le lo yaar."
Did they oblige?
Some of them did. Some of them did. And it kind of got going, but that was very scary, because there was this huge moment of self-doubt after the first 2-3 weeks. So it's like, ye khol to liya, like, maybe even if I was buying my insurance, I'd buy from a Tata or an ICICI. Why would I buy from ACCO? It suddenly is not making sense to me anymore. That I think the doubt creeps in as an entrepreneur, as a founder. Like, have you,
Bitten off more than you can chew.
Bitten off more than you can chew. Yeah, so there was a little bit of scare in the first 30, 40 days, but I think somehow, I still remember my first non-friend customer.
The help a friend in distress.
Yeah, none of them. I think I remember it was one gentleman from Hyderabad.
Huh.
And I called everybody. Do you know the guy? Do you know the guy? Did you tell him? They said, no, we don't know him. We don't know him. I was like, okay, great. Someone's bought it, right? Like, people had to call and ask us, are you an insurance company? He said, yes. It's like, product kiska hai? I said, nahi sir, hamara hi hai.
But that's still the problem, isn't it? That people still think of you as a digital marketplace, essentially. People don't recognize the fact that you are truly yourself an insurance company. When do you believe that shifted, that change happened?
About 3-4 years into the journey, that perception started to, sort of shift. People started to experience the claims. A lot of people started talking about ACO's claim service is good, it's decent. And that's when, sort of the perception, started to change. Also, to your point, that people still, I deeply dislike that characterization of digital. While I'm still trying to.
While you are, yes.
Yeah, so I'm trying to shed that label. I'm hoping folks in the media help me shed that label. I think the deep sort of philosophy with which we went with was that, hey, we want to own the customer. We don't want the agent or the bank to own the customer, which is very different. Now, which could mean that if people come to my office and buy directly, that's also fine. I don't want the middleman. So disintermediation is probably our true characterization versus digital. It just so happens to be that the easiest way you can disintermediate is on the internet.
Correct.
That's how I would, that's how I'd put it. But the whole thesis and the economics of the business really depends on whether the middleman exists or the middleman doesn't exist. Because it doesn't matter whether the middleman is digital or physical.
Correct.
The economics remain the same.
Yeah.
It's not like a policy bazaar or an insurance dekho, and you have lots of now digital distributors. It's not like they own the customer. They charge commissions, rightly so. And whether it's an agent on the ground who's selling in his neighborhood, he owns the customer and he's charging commissions. They're not very different. Just the medium has changed. Economics have not. And I think that's the characterization I'm trying to break, that the economics change when you own the customer, deeply.
So let's talk a little bit about that and what it's actually taken for you to change not just the economics, and I don't know whether you've managed to change the economics just yet, but what has it taken for you to be able to marry distribution and manufacturing from a product point of view that works for the Indian customer?
I think first thing that we did was narrow our focus. Most insurance companies that you see, it's the license is literally a license to sell many products. So you can do fire insurance, you can do sort of marine insurance, you can do lots of things, right? The license is a license to now go out and build revenue across multiple things. So if you look at most insurance companies, they operate in commercial risk, retail risk, aviation risk, terrorism pools. Like, there's lots of risks, right? Like to do. And they also sell travel insurance to you and me, or car insurance to you and me. And we said that's not our business. There could be hundreds of places where we could be selling insurance, but let's focus on the top 200 million people in India. We are a consumer platform. We want to look at it like these are and top 200 million people in India is actually 40-50 million families, that narrow. And it kind of corroborates because there are only 30 million cars in India, 30 to 40 million cars, right? So you're really talking to that audience. I said, that's my customer, nobody else. At least for the first phase of ACO, which could be 10 years or 15 years. I'm sure we can do more, but like that's the.
Do you feel ready to do more now?
No, I wouldn't say. I think we barely scratched the surface. I think the company is getting profitable now. All of that is happening, which gives us room to do more. But I think the economics, the moats in those categories are very different. So you have to build your capabilities to be able to get there. Inside of the top 200 million people, we further narrowed our focus that we will only do car insurance. We won't even do health. We won't do life. All of health, life, all the stuff that we do today is just as recent as
later.
2-3 years old.
Yeah.
And that was a conscious choice for two reasons. One, we thought that, we don't want to spread ourselves thin. We want to become the best auto insurer first. And auto, because at least you have to trust me, but you definitely don't have to trust me as much as life insurance or health insurance.
Yeah. It's interesting that you talk about narrowing your focus and staying sharp, because I think this is a very interesting aspect of a founder's journey, also learning the art of sacrifice. And there must have been many temptations, there must have been many distractions, there must have been many who perhaps told you at that point in time, try this, try another city, try and look at how quickly you can actually ramp up revenue. How did you sort of stay centered in the choices that you made and believing that the art of sacrifice was as important as sort of experimenting with many ideas?
It's very easy to build scale in this business. It's like super easy. All you need to do is go to a car dealer if you're selling auto insurance, go to a bank if you're selling health and life insurance. Whatever commission is being offered by whichever insurer, just offer them 300 bips more. You're done.
As easy as that.
That's simple. The world is fairly simple in this, just offer them a little more, put some sales guys in their branches, and put some sales guys in their deal at the car dealer.
And that's what's happening today.
Yeah, even today, that's all that happens. Like you pay a little more, and you placate them, you send your people down on the ground and have chai pani with them, do incentives, contests, take them to Bangkok, take them to London for these expeditions.
How much of this chai pani is driving this business at this point in time?
A lot of it, I believe.
So then there is legitimate cause for the regulator to crack down,
as
well as the government to crack down on the commission side.
I personally believe so. I think while the method of cracking down I may have different views.
Okay. Why do you have different views on the method of cracking down? What do you have an objection to?
I don't have an objection to. So I think what the government or the regulator is trying to do is absolutely in the right direction. I think in India, I'll give you a certain example. I started my career in insurance with Tata 20 years ago.
Yeah.
Auto insurance, the commissions were 15%. On an average, 15 to 18% is what an agent would get. Today, it can range anywhere on the lower end from 25, that's the lowest end, up to 40. Okay.
25 to 40%?
40% of what you pay as a consumer is going to the car dealer or the agent. Not 1 year. Every year you renew, also it goes. Even if you did not ever speak to the agent. I think what the regulator or what the government directionally are trying, I don't know what comes out finally, how they implement it, is definitely in the right direction, because in India, it's just gone to another level. All countries have had this cycle of excess commissions and, as the markets mature, have controlled it. But it's become ridiculous,
So you're saying that the fact that we're now an industry that has about 30 years behind us as far as the private insurance sector is concerned, so there is a degree of maturity, you're saying the problem has gotten worse, not better?
Yeah, I think so. And it's also to do with, it's still one of the last few remaining high growth insurance markets. Everything else is either growing but too small, like in Indonesia or Vietnam. They're growing, but in the size of it, it's like two cities in India, right? Like so this is the only last large underpenetrated market. So there's competition, so everybody is here for land grab at the moment. It's where India is probably in its journey. There's a lot of growth available. Today, Indian insurers in public markets are valued more by having worse economics than a US insurer.
given the environment that you're operating in and the competitive landscape that you just spoke to us about, as well as this commission and incentive-driven model that the world has gotten used to and adjusted to, does it hamper your growth prospects? And is that a trade-off that you're willing to make at this point in time?
I think it does partly. I wouldn't say that it doesn't impact our growth, because also we've taken almost an anti-establishment stand, right? Like, because if a customer is coming to an ACO website, he's also getting calls.
So you're seen as the good guys or the bad guys?
By the intermediary community, we are definitely seen as the bad guys, because we say zero commission. Our ads say that, right? Like,
have they tried to go after you?
Oh, absolutely.
In
absolutely.
what ways?
Regulatory complaints to saying, hey, this is, they're saying zero commission, they're saying distributors don't add any value, that's unfair. We haven't said that distributors don't add any value, but we've had complaints on, hey, why are you calling zero commission products? You're spending on marketing, so your customer doesn't understand commission and marketing are same. So lots of these technical issues. Distributors have refused to work with us on some areas where we wanted some distributors or brokers to work with us. On the health side, we wanted to do something specifically. I think now the markets and the intermediaries and like everyone's adjusted to us. I would say it's like a grudging coexistence in some sense. Now nobody's at loggerheads, but we've had those days where because the agent or whoever is talking to the customer is constantly deselling ACO. So not only the customer has to select me, he has to select me over a voice that's constantly telling him it's shit. Don't go there. Nobody will help you if there's a claim.
And they're still doing that.
Of course, they still do it. It's in their interest to do so. ये तो online company है, कल कुछ हो जाएगा तो office भी नहीं है इनका तो like आप कहाँ जाओगे? Like it's a very easy.
But, and that's it's not something easy to actually deal with. How have you dealt with that?
I really think that, it's taken time. I think reputation gets built over time, and the number of naysayers are decreasing over time. I'm not saying I think we still have naysayers, like online company hai, tum kahan ho, office nahi hai, and all of that. But I think those naysayers are decreasing, and primarily we have almost like 3.5 million vehicles insured with us right now. And all of them have been buying for years. The word of mouth has now crossed that inflection point where basic trust we are not solving for. I refuse to believe that my core market by 2030 is somebody who's born in the year 2000. I feel terribly old, but
yes, so do I.
So that customer is
doesn't have the baggage of the past.
Doesn't have the baggage, has started their life with a iPhone or and is working more on ChatGPT and Claude, and I refuse to believe that that customer is going to go and do some chai pani with some agent, and so behavior is going to shift, and the tailwind of shift is likely to be people who are going to do a lot more self-discovery. That self-discovery can happen from chatting with ChatGPT and finding out which the best insurance is, or watching some content on social media to educate themselves. The discovery methods are changing, and that leads well to a model like us.
So let's talk about the economics now, where we currently are and where you see yourself over the next few years. Just turned profitable, you've brought down your losses quite significantly. How comfortable do you feel about the state of play today, and what could this number potentially look like 5 years on?
So our model is built on the fairly simple premise, right? Like, we are a large advertiser. We are the largest advertiser in insurance. Maybe Policybazaar and us is 95% of all marketing that happens in insurance. All other insurance.
That's your commission.
In some sense. But that's fixed. It doesn't increase because India can absorb only so much, media spend. And what you need is a little bit of scale to be able to cover that. Once you start covering that and your renewal is all free, like I spoke about, it just kind of automatically, the wheels start turning in a way that you can essentially, from a 15% ROE kind of business that the traditional industry is building, you can easily build a 25 to 30% return on it, like a double. So on the split of revenue, for if the company is doing $100, 60, 70 is coming from renewal,
Yeah.
which is coming to at zero cost. So imagine a company which is doing 60, 70% of the revenue with no cost. That's when the engine flips. So more from a we have now at that inflection point where we are. So from this perspective, if we start growing, I think from break-even point, which we are hitting now on the general insurance business, life insurance is new for us. That's not profitable. I think we will continue to, we'll probably be one of the most profitable insurance companies India has seen because it just compounds from here on fairly quickly.
You know, and that's a pretty big claim to make, that you're going to be India's most profitable insurance company. By when? I mean, what are we talking about? You said you're at that inflection point.
I think in about 3 years from now, I think from the break-even point to we can deliver, maybe like a 20% plus or closer to 25% return on equity profile in about 3 years, which is double the return on capital the insurance industry is generating in about 3.5 years.
So would that be the appropriate time to look at an IPO, or are you already looking at an IPO today?
No, we're already looking at one. I don't have a specific timeline with all the wars and all stuff going on and markets tanking. I think it's also for us to look at, apart from where our numbers are going, what the mood in the market is. So near term, definitely we're not waiting 3 years, but maybe sometime this year we will file. We're thinking through it.
What things that you think you've been able to successfully do that have emerged as game changers to win customer love?
And I think fulfillment is very important to us. We do one thing that's starting to win us a lot of love. We've done it only in Bangalore. We're hopefully scaling it now.
Bangalore's clearly the
It's our home, right? It's our base. It's easy to monitor.
Yeah.
Our head office is there. So we started doing this. We have some drivers and one or two nice Mercedes cars positioned at the top bars in Bangalore on weekends.
Okay.
Fridays, Saturdays.
Right.
There's a bunch of just drivers. They're wearing an aqua uniform, and we have one or two cars, nice cars, like how an Emirates would pick you up, or just positioned at the bars. And if you're an aqua customer visiting a bar on the weekend, you can either use one of those drivers to drive you back home, or you can sit in one of our cars and go back home.
Okay.
Just go back home safe, because it's in my interest, to not let you bang your car when you're drunk.
Yeah.
And we call it Aqua Safe Drop, and it's receiving a lot of love. This is in our territory. It's good for the customer. Hey, have a drink, but we'll drop you home.
Yeah.
We'll drop you home safe. I've insured your car. You better not bang it, and you'll be safe, right?
Yeah.
But this is, or buying our own tow trucks, right? And they're painted green. They look lovely. They're they catch attention on the road. So I think we keep doing these things, and we'll continue to scale these things, because I do believe this is better marketing than maybe running an ad on IPL or something.
You're not really looking at doing this at scale.
No, we will. I think top 8-10 cities we will scale this. We're seeing how it runs in Bangalore.
Okay.
But so some of this is really fun to do, because it's good for the customer, it's good for the brand, in both ways.
Well, Varun, here's wishing you and ACCO the very best of luck. We hope that you continue to build on the momentum that you've generated so far, and may you have many more micro moments that you capitalize on. But thanks very much for dropping in and giving us a rundown of the journey so far, but more importantly, the road ahead for ACCO. Thanks very much for your time.
Thank you so much.
Well, with that, it is time for us to wrap up this edition of Young Turks Reloaded. As always, we like to hear from you. Do send us your feedback and your comments. We'll be back again next week with another startup founder. Till then, from all of us here, goodbye and many thanks for watching.
ladies and gentlemen, and welcome to the India Business Leader Awards. It's great to see all of you here, and it's wonderful to have a packed house on a Saturday evening in Mumbai. Ladies and gentlemen, 21 years ago when we started the India Business Leader Awards, and yes, I have been here for all 21 editions of these awards, a post-liberalization India. Thank you. I feel a bit old now, but with that out of the way. As I said, a post-liberalization India was starting to explore new possibilities, bite into new opportunities, adopt technology, and really open itself up to the world. And while the size and scale of the ambition and the scale of the enterprise has changed, what has remained constant for those that we have honored year after year for the last 21 years is the desire to create institutions with enduring values. Roosevelt said the credit belongs to the man who's actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, who errs, who comes short again and again, who knows the great enthusiasms, the great devotions, who spends himself in a worthy cause, who at best knows in the end the triumph of high achievement, and who at the worst, if he fails, at least fails while daring greatly. And that spirit of courage and commitment is what the India Business Leader Awards have celebrated for 21 years. And tonight, we add another chapter to this story. Welcome once again to the Standard Chartered Presents India Business Leader Awards. Thank you all for being here, and many, many congratulations to our winners. May you continue to excel, and may you continue to find success in all that you do. Ladies and gentlemen, have a wonderful evening. Thank you very much again.
We begin the awards with a category that reminds us what human potential truly looks like. The Special and Para Sports Leader of the Year recognizes excellence achieved through discipline and sustained performance at the highest level.
And the winner in this category for 2025 is Simran Sharma, Paralympic athlete. May I request Simran to please join us on stage for her outstanding international achievements and her inspiring contribution to Indian sport.
Relentless resilience and remarkable performances on the international stage, she has not only brought pride to India, but also redefined what perseverance truly looks like in sport. Moving on, entertainment has the power to move us, to make us think, to stay with us long after the credits roll. The Entertainment Leader of the Year recognizes someone who has created work that transcends the screen.
This year, the Entertainment Leader of the Year award goes to Rishabh Shetty, actor and director. Let's welcome him onto the stage with a huge round of applause.
With a story rooted in tradition and folklore, he created Kantara, a cinematic phenomenon that resonated far beyond its origins. While it shattered box office records, its true achievement lay in how deeply it connected with audiences across languages, regions, and generations, reminding us of the enduring power of authentic storytelling.
एक dialogue हो जाए. One before you go.
Dialogue तो कन्नड़ में होगा. Okay. नम्मन नोडलिक नीवु बंदिदीरी, निम्मन नोडलिक नावु बरबारदा. Thank you.
Shetty, thank you so much. Ladies and gentlemen, a big round of applause for our Entertainment Leader of the Year.
Moving on, our next award is about promise and potential. While India's energy transition is one of the most consequential stories of our decade, this award recognizes a company that is writing a significant chapter in it. The Most Promising Company of the Year award goes to Torrent Power.
And we invite Jigish Mehta, whole-time director of Torrent Power, to please come and join us on stage. Congratulations to you, Mr. Mehta.
Now, the Torrent Group has built a strong presence across the power value chain, from generation and transmission to distribution, while accelerating its push into renewable energy and supporting India's journey towards a cleaner, more resilient energy future.
Ladies and gentlemen, the Most Promising Company of the Year, many, many thanks for joining us here this evening.
We'll move on, ladies and gentlemen. The Breakout Brand of the Year is one of our most exciting categories. It celebrates a brand that has captured the market's imagination, disrupted established norms, and achieved phenomenal growth in a very short span of time.
And this year, the Breakout Brand of the Year award goes to Rare Rabbit. Please welcome the founder and CEO Manish Poddar to receive this honor. In just 10 years, Rare Rabbit has built an entire fashion ecosystem under the House of Rare, men's, women's, kids and footwear, with over 1,200 points of sale and 200 premium standalone stores across the country. A homegrown label that has achieved what very few Indian fashion brands have managed at this scale.
When I manifested 10 years ago to start a brand of fashion in India, I did not even emphasize that I will stand someday here. I would like to take this opportunity to tell Sir that manifestation has been so kind to me that my father on his dying bed spoke about you. And he said, "Kaam karo, bado ek din aayega ki Birla ji se award loge." And I cannot tell you what are the odds that I'm standing in front of his family with him by my side and my father above and my wife, the CEO of my life, who is watching me. And you cannot even imagine why and how. It is unbelievable.
Well, up next, the Lifetime Achievement Award is perhaps our most significant recognition of the night. It honors a career of excellence, a lifetime of impact, and a legacy that is going to inspire generations to come. The Lifetime Achievement Award 2025 goes to Dr. Anand Deshpande, the founder, chairman, and managing director of Persistent Systems. Sir, thank you for joining us here on stage. A huge round of applause for him, ladies and gentlemen.
Well, here's the man who saw the future of technology when most of India was just waking up to it. He built Persistent Systems into a global technology powerhouse, enabling digital transformation for businesses worldwide. His vision, leadership, and commitment to innovation have made him one of India's most respected technology entrepreneurs. Once again, ladies and gentlemen, a huge round of applause. Mr. Deshpande, congratulations once again, and thank you so much for joining us here. Let me take this moment, since this is a conversation about leadership, it's a conversation about excellence, it's a conversation about design in action, in motion. We've got with us the global CEO of Ferrari, who's here with us at the CNBC TV 18 India Business Leader Award. So let me come across to you, sir. What is your leadership mantra?
What is a leadership mantra? It's very simple. Learn from everyone, everywhere, because so far I never met a person so ignorant I couldn't learn anything. In these 3 years, there is one thing that I learned a lot, that is a good representation of the purpose of our company. And you say, "Hoga kaise nahi." I think this is...
That does deserve a big round of applause. Hoga kaise nahi.
It's very nice, because we say in English, we say we audaciously redefine the limit of possible. But Hoga kaise nahi, I discovered yesterday, I think is much shorter, is better, more effective. So this is what I learned in this trip here.
Hoga kaise nahi. Thank you very, very much, ladies and gentlemen, the global CEO of Ferrari.
Ladies and gentlemen, we come to one of the most prestigious recognitions for the evening. The Hall of Fame is reserved for those rare individuals whose contributions have fundamentally shaped the industries and touched millions and millions of lives.
The IBLA Hall of Fame posthumously honors Piyush Pandey.
Bhaiya, I love you.
Prestige has become more than a brand. It became a promise that Indian manufacturing can compete with the very best in the world. The IBLA Hall of Fame posthumously honors Mr. T.T. Jagannathan tonight.
Moving on, we now take a moment to remember and honor a remarkable leader who left us too soon. Anupamti Nupuri was Senior Partner Emeritus at McKinsey & Company, a position that barely captures the impact he had on countless organizations.
We honor his legacy tonight as he lives on in the work that he championed and the people that he inspired.
Ladies and
gentlemen, in memoriam Tinu Puri, who really set up McKinsey in India.
We now honor the memory of another remarkable leader, Sanjay Kapoor, Chairman Emeritus of Sona Comstar.
Under his stewardship, Sona Comstar became a powerhouse in automotive components, setting new standards in innovation and in quality. Sanjay's entrepreneurial vision and commitment to excellence have left a lasting legacy in India's manufacturing sector.
Well, ladies and gentlemen, it is our proud privilege to honor at the India Business Leader Awards for the second time the outstanding contribution to the cause of sport, not just in India but globally, Jay Shah. Thank you very, very much, sir, for joining us here this evening.
Ladies and gentlemen, a huge round of applause for Mr. Jay Shah.
Mr. Shah, please, the podium is all yours, sir.
Thank you, CNBC 18, for this honor and respect. And I would like to dedicate this award to all the athletes, especially women athletes who are working hard on the field. सबसे पहले सूर्या, गौती भाई और सारे टीम इंडिया के प्लेयर, मैं आप सबको बहुत बहुत बधाई देना चाहता हूँ। जब मैं बीसीसीआई में था, तब मैंने 2028 के ओलंपिक तक प्लानिंग की थी, लेकिन सूर्या मैं भी चला गया, मैं आईसीसी में आया, मेरी जगह बीसीसीआई में और लोग आए। आप सबको मिलके 2030 की भी तैयारी करनी है, 2032 की भी तैयारी करनी है, 2036 कहाँ आने वाला आपको मालूम है, उसकी भी तैयारी करनी है। फिर से पीयूष जी, आपका बहुत बहुत धन्यवाद। CNBC न्यूज़ 18, आपका भी बहुत बहुत धन्यवाद। जय हिंद, जय भारत, वंदे मातरम।
Thank you very much, Mr. Shah, for joining us here. Ladies and gentlemen, a big round of applause. He set the agenda all the way to the 2036 Olympics. Thank you very much, sir, for joining us here this evening. The Excellence in Sport Award recognizes the person and the team that creates those conditions. This year, the Excellence in Sports Award goes to Gautam Gambhir, the head coach of the Indian cricket team. Please join me in welcoming him on stage. Ladies and gentlemen, a big round of applause for Gautam Gambhir.
The Sports Leader of the Year award goes to Surya Kumar Yadav, captain of the Indian T20 cricket team. 360 degrees with the bat, ladies and gentlemen. Please welcome Surya Kumar Yadav with a huge round of applause. Unflappable with the armband, and 6 days ago, a World Cup winning captain in front of his home crowd. There is nobody quite like him in the world of cricket right now. Sky 360 degrees of the field, but let's get a full picture of it too. Over to you, Shireen.
What is the captaincy mantra? What is your leadership style as a captain? You know, you're a 360-degree player, but what is it that you believe is your true mantra for success and strength?
I feel irrespective of what happens on the ground or on that field, when you come out of the field, you're just another man, or you're just another woman when you're playing that game. So you can't carry, irrespective if you're doing well, not doing well, to your home, to your friends, to your family, just leave it on the ground. All those small things, I think that really matter to me. And that dressing room, I think it's very important to hear everyone out. The freedom of speech, that is very important, that dressing room. We listened to everyone, what they wanted, but yeah, at the end of the day, the goal was same.
Mr. Shah has laid out the agenda all the way to 2036 on what needs to be done by the team. What's next? What are you working towards?
I think after this, definitely 2028 LA Olympics is definitely on the cards because that cricket is entering in that event for the first time. It is going to be very special. Yes, we relax for a bit for some time, but then we start our journey to achieve something special in 2028.
Olympic gold?
Definitely Olympic gold is on the cards, yes.
And Olympic gold. Sky, thank you very, very much for joining us here this evening. Ladies and gentlemen, a big round of applause for the Indian skipper. Ladies and gentlemen, tonight is also special as we mark a moment of change at CNBC TV 18. After 26 years, we say goodbye to the CNBC Peacock. It has been much more than just a logo. It's been a daily reminder of what we stand for: accuracy, insight, and actionable information. Well, that is the new logo, and that is what you need to look for when you look for CNBC TV 18 on your television screens, and of course find us online as well.
Our next category, the Young Turk Startup of the Year, celebrates audacious ambition backed by flawless execution. This award recognizes a company that has helped define one of the fastest growing sectors in India's digital economy, quick commerce.
And the Young Turk Startup of the Year award goes to Zepto. And we invite the co-founder and CEO, Adit Palicha, to please come on stage to accept the award. Now, in just a few years' time, Zepto has built a dense network of neighborhood fulfillment centers, reimagining how urban consumers access everyday essentials, turning near-instant delivery from an experiment into a very scalable business.
What has it taken to build Zepto, and what is the grand vision? What's the grand plan from here on?
Look, I think, although from the outside our business might look, very interesting, 10-minute delivery, consumer internet, the reality is that we're actually in a paisa by paisa business. It's all about, deep cost execution, driving operating leverage within the same inputs of our supply chain, getting more and more margin leverage. So it's a, basis point by basis point execution business. So it's just about, keeping your heads down, day-to-day running the business, and driving the needle, a little bit here and there. I think for us, we feel like if we can get to, enough scale and drive our cost structure to a low enough point over the next, couple of years, I think we have a real shot at building a, exciting, dynamic, generational company in India. And hopefully, what keeps us motivated as a team is that, why can't we build an internet and e-commerce company as good as the global best? There are, world-class companies out there that have created, amazing stories in capital markets that have driven growth in, their respective countries for decades. Companies like Amazon or Mercado Libre or Coupang, across the world. So if we can do that, if we can be a great story of Indian excellence in internet, then, we'd be happy to be a small part of our growth story. So that's the thinking.
Well, Adit, at this age, the scale is truly remarkable. Many, many congratulations to the entire Zepto team.
A real young Turk there. Well, some leaders don't just build companies, they build Brand India. The Outstanding Contribution to Brand India Award recognizes someone whose work has elevated India's standing in the global business community. The Outstanding Contribution to Brand India Award goes to Vivek Chand Sehgal, the chairman of Madison Group.
Ladies and gentlemen, a big round of applause for Mr. Vivek Chand Sehgal, a company that was started in 1976, quite literally by him and his mother, and today is operating across 50 different countries or 40 different countries with a plethora of acquisitions that they've done. And taking forward what we just heard there from the Commerce Minister, Mr. Piyush Goyal, Mr. Sehgal is a true embodiment of what the Commerce Minister was talking about, of Indian companies looking to global markets. How did you get it all done, sir?
It's a long story, 50-year-old story. But I think the cornerstone of Mother-Son is BY. Buy yourself, beat yourself. You don't have to compete with anybody. Just keep listening to the customer and do the right thing, and you're there.
Many congratulations, Mr. Vivek Chand Sehgal, on your outstanding achievement and for putting India firmly on the global automotive map. Moving on, the Outstanding Company of the Year recognizes an organization that exemplifies excellence across every dimension. This year's winner carries a legacy of over 7 decades, but remains as relevant and dynamic as ever.
The Outstanding Company of the Year award goes to Mahindra & Mahindra. Please welcome Dr. Anish Shah, Group CEO and Managing Director of Mahindra & Mahindra, on stage to come and receive this honor. From tractors to SUVs, farm equipment to aerospace, they've demonstrated that diversification backed by excellence creates some enduring value.
Ladies and gentlemen, a big round of applause for Team Mahindra.
And now, our highest business leadership recognition for the evening, the Entrepreneur of the Decade honors someone who has shaped an entire era of Indian enterprise.
Ladies and gentlemen, the Entrepreneur of the Decade is Kumar Mangalam Birla, Chairman, Aditya Birla Group, one of India's most respected and diversified conglomerates. Please join me in welcoming him with a huge round of applause.
Mr. Birla's leadership has been defined by strategic vision, ethical governance, and deep commitment to nation building.
The Entrepreneur of the Decade, ladies and gentlemen, Kumar Mangalam Birla. Mr. Birla, the numbers tell the story. The decade that you've steered the group through. Why don't you share that with us?
So before that, Shirin, I'd like to just thank the people who have really, because of who I stand here today. Firstly, I don't know how many of you know, but Piyush is a CA, and he's a silver medalist. I too am a CA, but I just kind of made it. So admiration for him goes back a very long time, and it's great to receive this award from a dynamic minister and someone who's a dear friend. I want to thank CNBC. I was racking my mind. I think I got your Best Leader of the Year award about 10 years ago. CNBC clearly believes in long-term investing. Entrepreneur of the Decade, I must say, is a bit of a misnomer for us at the Aditya Birla Group. We believe in a more distributed model of leadership where leaders across the length and breadth of the company take fairly large entrepreneurial bets fairly regularly. And therefore, with a heart full of gratitude, very happy to take this on behalf of a very large group of very committed and very talented entrepreneurs. The last 10 years, I think that it's been they say that, a week is a long time in politics. And it would be fair to say now that a day is a long time in politics. But I always feel that a decade is a remarkably short time in business. Having said that, in the last 1 decade, we have grown rapidly. We have grown on the back of the Indian economic boom. We have also scaled up our businesses to global leadership positions.
Congratulations, ladies and gentlemen, the Entrepreneur of the Decade, Kumar Mangalam Birla. A big round of applause. On that note, may I request all the other winners to join Mr. Birla and Mr. Goyal on stage. We're going to get all the winners back, sir, for a quick photo opportunity. May I request all the winners to please come back up on stage for a quick photo opportunity.
May we have another round of applause?
Huge round of applause, ladies and gentlemen. One last time, all our winners on stage. Good evening, ladies and gentlemen, and welcome to the India Business Leader Awards. It's great to see all of you here, and it's wonderful to have a packed house on a Saturday evening in Mumbai. Ladies and gentlemen, 21 years ago when we started the India Business Leader Awards, and yes, I have been here for all 21 editions of these awards, a post-liberalization India. Thank you. I feel a bit old now, but with that out of the way. As I said, a post-liberalization India was starting to explore new possibilities, bite into new opportunities, adopt technology, and really open itself up to the world. And while the size and scale of the ambition and the scale of the enterprise has changed, what has remained constant for those that we have honored year after year for the last 21 years is the desire to create institutions with enduring values. Roosevelt said the credit belongs to the man who's actually in the arena, whose face is marred by dust and sweat and blood,
who strives valiantly, who errs, who comes short again and again, who knows the great enthusiasms, the great devotions, who spends himself in a worthy cause, who at best knows in the end the triumph of high achievement, and who at the worst, if he fails, at least fails while daring greatly. And that spirit of courage and commitment is what the India Business Leader Awards have celebrated for 21 years. And tonight, we add another chapter to this story. Welcome once again to the Standard Chartered Presents India Business Leader Awards. Thank you all for being here, and many, many congratulations to our winners. May you continue to excel, and may you continue to find success in all that you do. Ladies and gentlemen, have a wonderful evening. Thank you very much again.
We begin the awards with a category that reminds us what human potential truly looks like. The Special and Para Sports Leader of the Year recognizes excellence achieved through discipline and sustained performance at the highest level.
And the winner in this category for 2025 is Simran Sharma, Paralympic athlete. May I request Simran to please join us on stage for her outstanding international achievements and her inspiring contribution to Indian sport.
Relentless resilience and remarkable performances on the international stage, she has not only brought pride to India, but also redefined what perseverance truly looks like in sport. Moving on, entertainment has the power to move us, to make us think, to stay with us long after the credits roll. The Entertainment Leader of the Year recognizes someone who has created work that transcends the screen.
This year, the Entertainment Leader of the Year award goes to Rishabh Shetty, actor and director. Let's welcome him onto the stage with a huge round of applause.
With a story rooted in tradition and folklore, he created Kantara, a cinematic phenomenon that resonated far beyond its origins. While it shattered box office records, its true achievement lay in how deeply it connected with audiences across languages, regions, and generations, reminding us of the enduring power of authentic storytelling.
एक dialogue हो जाए. One before you go.
Dialogue तो कन्नड़ में होगा. Okay. नम्मन नोडलिक नीवु बंदिदीरी, निम्मन नोडलिक नावु बरबारदा. Thank you.
Shetty, thank you so much. Ladies and gentlemen, a big round of applause for our Entertainment Leader of the Year.
Moving on, our next award is about promise and potential. While India's energy transition is one of the most consequential stories of our decade, this award recognizes a company that is writing a significant chapter in it. The Most Promising Company of the Year award goes to Torrent Power.
And we invite Jigish Mehta, whole-time director of Torrent Power, to please come and join us on stage. Congratulations to you, Mr. Mehta.
Now, the Torrent Group has built a strong presence across the power value chain, from generation and transmission to distribution, while accelerating its push into renewable energy and supporting India's journey towards a cleaner, more resilient energy future.
Ladies and gentlemen, the Most Promising Company of the Year, many, many thanks for joining us here this evening.
We'll move on, ladies and gentlemen. The Breakout Brand of the Year is one of our most exciting categories. It celebrates a brand that has captured the market's imagination, disrupted established norms, and achieved phenomenal growth in a very short span of time.
And this year, the Breakout Brand of the Year award goes to Rare